and is there going to be really a balance between innovation and the regulators working aligned and not risking the safety, let's say? So I'm very happy today because I have a varied panel of experts. We have from practical experience in Sandbox, Andreas Kourouklaris. We have from a lawyer working years now advising fintech firms and crypto firms closely tied to the Cyprus Sandbox approach. Marios Lazaru, he's an expert in risk-based supporting supervision frameworks. And Barry Perkins, he's an innovation strategist with international fintech experience and compliance. So I'm so happy to have you here. Maybe I'll give you 1 minute to say briefly one or two things about you, and then we'll dive into the conversation.
Excellent. Thank you, Xenia.
Thank you.
Pleasure to be here. I am Andreas Kourouklaris. I've been working the past decade with, as an operator with fintechs, mainly Middle East, Africa, and Central Asia. And now for the past 3 years almost, I jumped into consulting, mainly strategizing on market expansion in these markets for digital assets, fintechs, regtech companies, mainly focus on governance risk compliance, regulatory matters, and of course, as I said, market expansion. I'm very happy to be here. I believe the topic is very interesting. I'm excited to jump into it.
Great. Simon, a few words about you? Very short.
Thank you very much, first of all, for the introduction. A few words about me. My background is fintech law, and it all started with fintech back in 2017. So I entered the crypto market in 2015, 2016, and I had a couple of friends who had an idea to do a crowdfunding project. I tried to reach lawyers in the global scale, and we couldn't find someone who could assist us. So I saw a great opportunity in the market, and I believe that Cyprus in the future will become a fintech island. So I invested heavily in the fintech industry, and as the director of the firm, I took the approach to lead the firm in the financial technology industry. We also helped the government. I was working also with the ex-president of parliament, also with the Ministry of Finance, in order to make Cyprus a crypto-friendly jurisdiction. We were trying to introduce a legal framework in Cyprus, and also in collaboration this legislation with CySEC. And my background involves also anything that is part of technology, including electronic money institution. And we are proud as a firm that recently, 13th of August, one of our clients got a license as an EMI in Cyprus.
That's great, and looking forward to the conversation about the Sandbox 2.2 and the stance of CySEC to jump in from the Innovation Hub straight into the full comprehensive sandbox. And this is something that we're going to discuss, and I think you're very optimistic about the CySEC approach. And I think the rest, I'm looking forward to the comments of the rest. And Marios, I think, has some news about the progress about the CySEC Innovation Hub. About the sandbox. Maria, introduce briefly yourself, and then we'll talk. You'll give us your insights about the risk perspective, I understand. And then Barry will talk about the innovation. So a few words, and then I'll jump into the questions.
Good morning to all, and welcome to the event. My name is Marios Lazaru. I am the head of advisory at KPMG in Cyprus. The last 25 years, I'm working mainly in the FS sector. Many of them are claiming that are technology companies rather than FS, I have to say. And also with our supervisory authorities, I led the development of 3 frameworks for the supervision of financial services, 2 in Cyprus and 1 in Bahamas. And also I'm working with clients on regulation. On the risk base, I will just say one example. Exactly 20 years ago, I was working with a bank for the implementation of Basel II, CRR1. And one of our recommendations 20 years ago was to set up a risk management function. The CFO at the time told me, persuade me, so we discussed it, and he told me, you didn't persuade me. Now that bank has more than 300 people in their risk management function. And this shows how the era is evolving in this space. Thank you.
Thank you, Marius. And Barry, you are coming from your innovation strategies. So tell us very quickly, a few things about you, and then we'll jump into the conversation, which is very interesting. I'm looking forward for your insights. Just a few words about you, and then we'll jump into the questions.
Okay, thank you. Hopefully you can hear me okay. It's a little hard to hear each other. Thank you for having me here. My background, I've been in technology for over 40 years, and I have worked all over the world and had teams all over the world. In the technologies that I have worked with, it's always been a balance of what can we do with innovation, because I've always been on the very front end, the unknown, building something that doesn't exist, and how do you balance that with regulatory structures? And I've been involved in the crypto blockchain space since 2016, give or take, and in AI for over 15 years. So I'm very used to living on the front end of these. So this discussion, it's fascinating for me. I was invited over here by the president of Cyprus and his team, and I've spent the week working with Invest Cyprus because they've asked me to move several businesses over here. And one of the factors that would absolutely bring me here is the promise of the sandbox and developing a trusted, safe environment for digital currencies, because that is the way of the future.
Thank you so much. So just to give you the insights of the conversation today, we're going to talk about the speed challenge, what slows regulatory innovation, balancing speed and safety, what Sandbox 2.0 really means, and the next steps, especially for crypto, AI, and for Cyprus in Europe. So I'm starting my first question, and Andreas, from your experience, you worked a lot with Sandbox, right? So tell us your views. How do you see their real value so far? And how should they evolve going forward? So maybe you can give us also historically from Sandbox 1.0 to 2.0. What does it really mean? And do they really have a value? And is really this 2.0 a change?
I think that's a great question. I think it's important to speak a bit about Sandbox 1.0. Which essentially started by FCA in UK back in 2016. And the main purpose was to create a regulatory ecosystem, mainly for fintechs, mainly focusing on payments back then, to operate.
Yeah.
Then very closely followed by MAS in Singapore, and then ADGM in Abu Dhabi, Central Bank of Bahrain, SAMA in Saudi, many regulators in Africa and Central Asia. I had the chance to work with approximately 12 sandboxes around the world, mainly Middle East, Africa, and Central Asia. And I believe the objective of the Sandbox 1.0 was successful. Essentially, it was created for fintechs to launch, because back then there was no PSP regulations, e-money regulations, it wasn't so developed, and there was no other way. Yes. Otherwise, you have fintechs that they've been operating and growing unregulated, which is a massive issue, as we know. But that's why FCA came in and brought that solution. So to start with, I believe Sandbox 1.0 objective was successful, but that came with challenges and problems.
Yeah.
Per my experience, and I can speak when I was with the fintech, we had a very aggressive strategy of launching in different markets at the same time. Literally, it was on our strategy to focus on regulatory jurisdictions that had a sandbox. Because we've been a payment fintech, there was no regulations that we could fall under. We wanted to be regulated, and literally this defined our market expansion. So through that, we got the chance to launch. So it was part of our strategy to literally launch in the markets as well while testing our innovations. But very soon, after launching and growing within a sandbox, we found the problems. I will share a few experiences. One of them was product related in Sime in Kenya. So we launched there what I believe still a very innovative product. It was micro debentures with the Capital Markets Authority of Kenya, targeting union members in Kenya, millions of people. It was a fantastic solution, built on blockchain, smart contracts, and so on. We've tested it. We've launched it. They gave us quite a significant limit on users. So we had actual traction with the consumers. But then when the time came to graduate, we graduated successfully, but there was literally no regulation to fall under. So we didn't have enough resources back then to help the regulator draft the regulation. The regulator didn't have enough resources to actually draft it on their own, and essentially we had to shut down. So that's one example. Another example is with my dear friends, Central Bank of Bahrain, where we've been one of the first fintechs entering the sandbox there. We've done a fantastic job there. We've been competing with the big guys, massive market fit for our payment solution. But graduating successfully from the sandbox, it was 2020, I believe, we had to apply for a PSP license, which took us 3 years to obtain. So you can imagine, we invested for 2 years, getting people on the ground, getting the business up and running, adjust the product to fit the market.
Even when you were in the sandbox, you passed through the passport,
yes,
and then you had to go.
Graduated successfully.
Yeah.
Then they say, okay, guys, you have to stop now. Apply for a license, which took 3 years because
so that's why we see the evolution of 2.0.
Exactly. And I'm going to go quickly to the evolution of 2.0.
Exactly.
Okay? A fantastic example is also with my dear friends in AIFC in Kazakhstan, Astana International Financial Center. The first version of the sandbox was the same like the rest, right? You had to enter, graduate, then you had to find the right license to apply for. The regulator there was, I would say, very innovative and very proactive. I've had several sessions with them as a fintech to sort out this problem, because we had the experience from other sandboxes. And they now adjusted their sandbox from a graduation phase to a migration phase. So it's way more difficult now to enter the reg lab, it's called the reg lab there, of AIFC. But once you enter the sandbox, you don't graduate.
I think there are a lot of criteria also in Dubai, you're talking, right?
Exactly.
And there are also fees.
It's like a
full-fledged
license,
well.
you have to apply.
And also SciSec has very strict, we'll also...
But just
Simon
to close it, the regulator is on top of the fintechs, they are regtechs or whatever, digital assets and so on, companies. They allow them to test and innovate, and at the same time, they adjust the limits. Transaction limits, user limits, and add further requirements and migrate from a sandbox license to a full license without having to graduate and reapply.
And also
which is fantastic.
I want to comment here, seeing also what SciSec announced is when you're in sandbox 2.0, it's like you're under the regulation, let's say, and the regulators learn from you, but also the fintechs, they're allowed to trade real time. The regulators can test real time, so it's a learning curve for both of them.
Exactly.
And that's why the graduation is towards the license.
Graduation
right?
is 1.0.
Yes.
We need migrations now, correct? Yeah. So you need the regulator to be innovative enough and allocate resources to help.
No, I'm talking about the graduation from the sandbox. Once they're in the sandbox.
Graduation is an old terminology for me. It should be migration from a sandbox to a license. Yes. And that's where the regulator should focus to support literally the consumers. Because what's the objective of a regulator is to protect the consumer rights and create a healthy competition, correct? So they have to allow the companies to do that.
Correct. And I think it was necessary, the 2.0, and also it comes necessary with the AI Act as well, which is a bit more mandatory to work in this regime. And now I'm moving to Simon from your experience, and also we've seen Cyprus made a really bold move, going straight from the Innovation Hub to a full sandbox, the Sandbox 2.0. And my question is, was that decision to avoid delays and showing and be more speedful? Let's say it was, more advanced, SciSec, in this going directly to the 2.0 sandbox?
If you asked me these questions, Xenia, a couple of years ago, and it may sound a bold statement, but I will say that regulation and technology, they don't go together. And this is what I will say back then. And why I will say that is because technology is always in front. Regulation is trying to keep up with technology.
Exactly. There's always this frustration, and the one is at the front, the other one is much behind.
Exactly.
Yes.
2017, we had nothing to support us. 2018, we introduced Innovation Hub. But Innovation Hub back then, it was mainly its role advisory.
Exactly. They are going, saying their ideas, and that's all. It was, it didn't actually go anywhere.
Nothing else,
Exactly.
No regulation, no framework. We've been asking questions. The questions will come back a couple of days later, then ask another questions, come back. We've been having meetings, telephone calls, but never an ending case. So,
and also what Andreas said, that if you were it was like 1.0 that you were talking, but then if you had to get a license, you had to wait another 3 years, because it was actually talking nowhere in a regulated environment, or testing, or leading the regulators, guiding them towards regulation.
The funny part, kinda ironic, is that the law was in favor of those people who went and launched a project without obtaining any license, without asking anyone, because there was no framework. So the people who've been ethically trying to be regulated or supervised by any authority, in the end, they lost the opportunity to have a company that it was successful in the business, because they've been waiting for some kind of approval. Now, this is not the case anymore. With Sandbox 2.0, innovation no longer exists. Now we have a real case scenario whereas we can have the company being tested. And regardless if we have a framework or not, if the project is straightforward and it's understandable from the point of view of the regulator, then in a couple of weeks they can go live.
And I have a follow-up question for you about Cyprus. From your, how does it compare with other EU jurisdictions? And if you could also standardize one regulatory interpretation globally to reduce approval delays, what that would be? So first of all, compare about the other EU jurisdictions and Cyprus. And if we were to make one, let's say, before we heard about fragmentation, I don't know if it's possible to have one sandbox globally, but I want to hear your views.
They tried that.
They did.
Not
okay, let's see. It was 300 regulations, you said before. So many.
They tried some regulators, AIFC, ADGM. They tried passporting,
yes,
which is fantastic. But there is different issues there, because different laws apply in different countries. Correct. So, but it would be fantastic if
it always would be, but it's so difficult to bring all the regulators together to agree.
If the lawyers can help a lot.
So tell us about EU, Cyprus versus EU. How do you see?
The idea is very interesting, Andreas, and maybe that's the reason it didn't work, because every jurisdiction, it tries to promote certain advantages. So when someone is reaching a law firm, an accountancy firm in Cyprus, and they are sending their inquiry, they want to understand the pros and cons every jurisdiction has. So you can never have a best country. It all depends to what the client is looking for, what this company is looking for. However, we have some advantages in Cyprus. The advantages we have is that we are very careful when we introduce new framework, especially with fintech. It all started in Cyprus with Forex, as you all know. Then 2017, we had the great bull cycle in crypto. But even then, the regulators here, they were very protective. They didn't want to bring something at that time. They've been waiting. And in other jurisdictions, maybe you remember Malta, it was the crypto island, Switzerland, Estonia, Gibraltar, and many other countries. In Lithuania, it was all about EMIs, even up to date. However, countries who implemented very fast new laws, now we don't see them in the industry. The regulators, the European Union, they went after them because they have not been following everything from a compliance point of view. So Cyprus, the fact that it delayed is a protection, not only for Cyprus as a jurisdiction, also for the companies who have selected Cyprus, because the law is not going to change in the near future and make favorable or unfavorable our island, and also in the favor of investors.
And I'm also going to ask the others if you see this. I mean, Cyprus is the next sandbox destination, let's say. Would you say that? I think there are a lot of advantages. Being a small island, we can be agile and test things quickly. So why not see Cyprus? I don't know, I'm just challenging you to tell me if Cyprus can also be the next sandbox regulation to test here the sandbox. Yeah, tell me your comment, and then we can also...
It could be. I never say no, never. However, we also have some other advantages that someone is going to think before making a decision. When they are thinking to open a company for sandbox or anything else, other incentives are the corporate taxation. Other incentives is the benefits the UBO will have if they change the domicile in Cyprus and they become Cyprus non-dom. So, in my opinion, from my expertise, they never see only one thing, only the sandbox. They are going to see the whole picture. What are the whole advantages they are going to get by coming to Cyprus?
Of course, it can be a very long conversation. Okay, I'm moving now to Marios. Marios, you've designed risk-based frameworks. We worked also with regulators, with central banks, and etc. Tell us, how do we rethink the risk assessments so regulators can make faster decisions without raising risks? Because this is all about. The challenge is, what we are talking about is the challenge faster but safer. And your role here, since you are, I mean, usually the risk guys, I want them first in the room to assess the risks. Tell us your views, Maria.
Okay. In 20 years from now, you'll ask me the same question. Okay, I think this is a very big challenge as we see, because what is happening and what is done. One, risks are evolving. An example is the environmental risk. 5 years ago, no financial institution was assessing environmental risk. The last 5 years, we are working, for example, in the banking sector to set up and implement frameworks for that. When they estimate their expected loss, they have to incorporate scenario for an environmental event. 5 years ago, it was not even written anything about. You assess a borrower, a corporate for a loan, environment was never an issue. Now they have to get their emissions and they have to assess how environmental friendly they are. And this also is a factor for the pricing. So new risks are evolving, which we see that is evolving. Second, as we see it, there is a lack of data available very fast. Okay, and even though I can say that, look, for a technology company, this might be easier. Everything is there compared to traditional, let's say, financial services sectors. Not to say outside the financial services sector, which the situation is even much worse. But nevertheless, I would say that even now, the problems with data is very big. One, availability. Second, quality. Quality is not there. This is what we experience everywhere. And quality is not there because either the data is wrong or because the same data are in different databases and there is not a structured process to report them. So, and third, because there are definition issues. You know, many times the big organizations have many definitions similar, which have small differences, but when they report, they don't choose the correct data field. So it is always a problem. So from the regulator's perspective, but also from the supervisee, they need to have a structured process on the data because this gives the information to understand. And third, there's a need of education. The regulator understands more the risks, but they don't understand the business. The supervisee understands very well the business, and they don't understand the regulation many times, or they don't understand it at the level they should. And we have a delta on these two things.
But Mario,
and Sandbox, for example, as a tool, can help educate both.
Exactly.
Educate the regulator to understand the business, because with the transformations, with the evolution of the technology, business models are evolving very fast, and it is not easy for someone to understand and digest. And on the other side, these developers, these entrepreneurs, these innovators have to understand the restrictions they have in the regulation. So working together is something that will help. Risk will be always there. The issue with the pace of innovation and the regulation will always be there. And what I can say surely is that as we move along, what we see is that more and more regulation, I don't think this will stop, and always it will be an obstacle, but not only an obstacle, also a controlling factor, not to get excess risks.
So Mario's very well told us that there is lack of data. There is also lack of, there is a gap between the regulators and the innovators, and that the sandbox, it could be a good chance because it's a good chance to gather data in real time for the regulators, yes, and both of them to learn together, right? So it's a very good opportunity for the industry, for the innovators and the regulators to learn, yes, right?
If I may add there, that's where RegTech should come in, regulatory technology. And there's a lot of companies working around solutions for regulators, and I think on SciSec side, they should look into that.
Yes. The only issue that I see is that we have a sandbox guideline, let's say, which only covers a small part of the innovation. We have energy. There is not a sandbox there, and there are many, I would say, innovators, entrepreneurs on that field. On payments, which again, it is an era, and we don't have a sandbox. So next year, all member states should have a framework for a sandbox on AI. We still don't have, but AI on what? It's on many areas, on healthcare, okay? And we see us at KPMG, we have the Startup Innovation Lab where we invite entrepreneurs and we choose them to train them and then try to find investors for them. We see that there are entrepreneurs, there are weaknesses on that, but there are on so many areas, and Sandbox can be a very useful tool to help them, because we know that if you pass a sandbox, then it is tested from the regulator. It ticks a big box, I would say, and it can help also on the financing for these entrepreneurs.
Exactly, yeah. And also, you also mentioned that you want to see more dedicated sandbox as well, right? On specific cases, from what I understand, your views. Okay, so now moving to Barry, you have an innovation, a lot of innovation background, and I would like your views about and your thoughts about what kind of regulatory environment allows the crypto to thrive, because also it's a very innovative technology, and what kind of regulation would work without being splitted, without stopping them, and is it really possible to regulate without undermining decentralization?
Okay, thank you. I think for this topic, the idea of balancing innovation with regulation, I think I would like to set the stage with an example of where there were no regulations and where that puts you. I've been in the front edge of innovating my whole life, and nothing is more of a risk for a business than stepping into a situation that is unregulated. Because now your risks are you cannot evaluate your risks. Everything you do is a possible risk. I was working on a project in the early 2000s with Pacific Gas and Electric. Different industry. This is a utility for Northern California. We installed smart meters for gas and electric through the entire northern part of California. So 13 million meters of each style. When we started looking at the data, I was doing the first evaluation because I and my team were actually involved on the project. I looked at the data and I was amazed that I could look at and I could tell you which houses were families and which ones were meth labs and which ones were marijuana grows. That's what I could see in the data. Now the question was, am I allowed to see that? Am I allowed to know that? And if I do, am I mandated to report that? Or am I even allowed to admit to the authorities that I know that? So I went in and met with the CIO, Pat Lewicki, who was very, very good. And I had Charles Phillips, who was the president of Oracle at the time. And I introduced this topic to them. And I said, what do we do? Because there are no laws at all that cover this situation. None. That's a very scary situation to be in when you are a multi-billion-dollar company. And then the next question was, who do we reach out to? We have to talk to some authority to define where are we going to do and deal with that. There were no sandboxes. There was no concept of that. And we were deep in a questionable area. Eventually that was resolved. The idea for me to be able to work in a sandbox where I have the innovative team and regulators to sit there and actually work through the front edge of technology where we're building something that never has existed before, there are no laws, and have the regulators provide feedback and ideas is amazing, because we can accelerate innovation and we can accelerate the regulatory structures, because they will learn from what we're doing and we will learn from them. It'll inform our models. I've been in situations where a regulator stopped the discussion and said, have you thought about this? And usually when a regulator asks that question, you know you're into a difficult situation. In this case, their question was, if you think about this differently, you have this whole market opportunity that is legal.
Okay.
That's a fascinating perspective.
Exactly.
And so that balance back and forth, I actually think, while it might slow innovation a little bit, it accelerates the introduction of it to the mainstream, because now we know that it can be safe and it can be trusted, which in the end is the whole concept. building systems that we can be safe and trusted, which is exactly why the president invited me here to talk.
That's great. So Barry is saying that definitely regulation brings safety, it brings a framework. There are a lot of challenges from the innovators, but also we've seen the stance and what SciSec announced as well, to be technologically neutral. They are there to see the principle-based and not prescriptive-based. So they see, and that's what they announced when they had the introduction of the sandbox, is that we are going to see the principles that apply. Is this, for example, do they apply best execution? Do they apply the principles? And they don't go prescriptive into the innovation. And that's technology neutral. And that's, I think, the key from the regulators, and to be open-minded, to see in principle and give guidelines. And that's how the regulation will evolve, because there are many areas yet that need, a framework, as you said, and because it brings the safety net and it's necessary. So I think this is the technology neutral approach from the regulator, and principle based is.
It is, and in 2018, I had built a real estate investment trust, which was based on a crypto structure where we were doing asset-backed tokens and stable coins. This was in 2018. And the proposal in the United States, the SEC didn't want anything to do with the regulation. They just wanted to let it happen. I talked to friends that I had in the SEC, and I told them how we could use existing regulatory structures to actually move forward and allow this to work ethically and safely. And they said they wanted to wait. I shut that business down because I cannot build a financial structure based on no regulation and then deal with the risks after the fact when they come back at me and shut everything down and freeze your assets for 2 years while we have a discussion, right? And this idea of, when you look at the regulatory structures, I think for Simon, which regulatory structure? Because if I build a digital currency or digital object, it can have transactions across not just Cyprus, not just the EU, but North America, South America, Asia. And when something happens, which regulatory authority gets involved?
A very interesting question. I will say the way the regulators currently work is that they regulate the assets as long as the trader, let's say, selects the exchange, he will transfer the assets. It cannot regulate the decentralized industry, neither peer-to-peer. We see a huge gap in that area currently. So I don't believe this is going to change in the near future, because we don't see any regulation coming in the near future for decentralized transactions and decentralized also exchanges.
Yeah, so let's look ahead. We've seen a bit the speed and fast. Let's look a bit ahead. And I'm going to ask Andreas, looking ahead, how can regulators and innovators co-design a sandbox 2.0 that is both fast and trustworthy?
Look, the way I see it is that you cannot have regulators applying the same principles in sandboxes in their jurisdictions. I see that mature regulators should go to what's called now, it's kind of new terminology, an airport sandbox. So essentially, they create frames that are backed by existing licenses, and they allow mature innovators, companies, to land, test a certain product that is backed by a license, and then fly to scalability. That's, I believe, the next version of a sandbox. At the same time, regulators that they want to give a chance to smaller players, startups, to launch in a market, they just have to find the ways to support these innovators, quickly migrate to or transition to a permanent license without having the hassle to reinvent they will when they have to exit the sandbox. So again, I believe that 2.0 is a hybrid between the two. The other thing is, again, I mentioned it before, regulators should embrace technology themselves. So I would love to see a regulator testing their own RegTech technology in their own sandbox.
Exactly. And this is your takeaway. Because we're running out of time, I've just been informed. A quick, final remark from the other two, and we wrap it up. Your final remark about the future?
So my final remark for the future is that we are very welcome to bring in new technology, new innovation into Cyprus, and I believe the future is here.
Great. Thank you so much. Marie.
Okay, from the perspective of the sandbox, I think as Cyprus is making a very good effort the last years to become a hub, and we're doing good. We're not there, but we're doing good, and I think also that event shows that new players are coming to the market. We need to have a complete framework, all the stakeholders to be on board, and Sandbox, of course, can be a very useful tool within the whole framework of the startups, of the technology companies, of the innovators, in order to make Cyprus a very attractive place.
Destination, exactly. And Barry.
Okay, thank you. I think if I look at it with the future here and why, from what I have read and learned in discussion with the president of Cyprus and his deputy ministers, the conversations I've had with the many organizations sent here, is if I look at it from the attitude, this is an attitude of finding a path forward to establish Cyprus as a beacon for the region and around the world to create a future where there's a balance of innovation and a balance of informed regulation that can come out of a sandbox where they learn from what we are doing and provide an economic diversification and growth structure for the future of Cyprus. I think Cyprus is on the very edge of an amazing trajectory for growth.
Exactly. And the sandbox regulation, the sandbox regime now, it's very straightforward. So definitely it's worthwhile looking into. Thank you so much. If we don't have any questions, do we have any questions from the audience? No. Thank you so much. And we wrap it up. Thank you.
Thank you.
Thank you.
Thank you very much.
Thank you. Next, we have a presentation entitled From Compliance to Competitiveness, Building a World-Class Virtual Asset Framework in Small and Emerging Markets. Virtual assets are transforming finance, and smaller markets must balance regulation with innovation to stay competitive globally. Leading this discussion is Karen Burrell, Executive Director of the Financial Services Commission of Jamaica, an expert in financial regulation and market growth. Please welcome Karen to the stage.
Good morning. Hope we're all well. Thank you to the Wiki team, the organizers, for inviting me to speak on this topic I'm deeply passionate about. It's an honor to be back here at Wikifinance for the second time. This event consistently delivers cutting-edge dialogue and practical bridges between innovators and policymakers. Gatherings like these are vital. They link regulators like myself to these areas to form synergistic alliances and foster a financial ecosystem that is safe, resilient, and innovative on a global scale. As an avid football fan and a proud supporter of Liverpool, I often find regulatory lessons in this beautiful game. The English Premier League is arguably the most watched and financed in the world. Dazzling talent, global audiences, and massive investments. Yet, its referees and rule makers face scrutiny every single week. Decisions are dissected, standards debated, controversies flare up, and the spectacle thrives. But the regulations are consistently under the microscope. Will recurring regulatory questions ultimately undermine the Premier League's dominance? We'll wait and see. But a regulator, it must be thinking about the space, and I am the referee, make rules for you. Can a robust, proportionate compliance regime not only preserve trust and enable innovation to flourish, but be a mechanism that attracts sustainable investment? More pointedly, can a robust and proportionate compliance regime implemented by a small emerging economy for a nascent sector like VAS be a pull factor for industry players, large and small, enabling small and emerging economies to compete with the more developed and mature financial markets? That is a thought I wish to provoke over the next 10 minutes. Let me see. Okay. I want to start off by giving you a flavor of today's topic. I will begin with a concise overview. Next, we'll have a discussion about whether strong compliance can actually increase competitiveness. Then, I'll examine a practical approach to building a fit-for-purpose framework. The specific elements should consider a balance between safety and innovation. Finally, I will close with brief concluding remarks. Okay. So, virtual asset service providers, or VAS. These activities include AML safety risk, notable anonymity, cross-border flows, and novel transaction typologies that can be exploited for money laundering, terrorism finances, and tax evasion. FATES has clarified VAS within the full recommendations, requiring robust risk-based measures such as CDD and transaction monitoring. Compliance with SOFIT standards is therefore both a legal and reputational prerequisite for countries to maintain access to financial systems. Now, look at my slide as it concerns growth in this sector. It tells you something. DeFi activity is often more predominant in emerging markets. Within the context of FAST, DeFi refers to blockchain protocols and applications to peer-to-peer financial services without centralized intermediaries. Important to note, It's compared with developed nations, emerging economy have a larger share of DeFi engagement, and developers exploit permissionless finance to meet local needs. But what I'm referring to when I speak of compliance framework, the compliance framework in financial regulation refers to an organized set of laws, operational programs, KYC, CDD. A robust framework is risk-based, proportionate, and effective. Crucially, it also embeds supervision and enforcement tools so regulators can monitor compliance, remediate failures, and preserve market integrity. The clicker. Now, this slide shows you the context in emerging economies. And this shows the great opportunity for these economies as it concerns this sector. As regulators increase the compliance, the legal framework, it also fosters growth in this area. But what do we mean by compliance frameworks? Well, these are the programs that put in place the underpinnings for a proportionate, effective, and dissuasive framework, ensuring that you can be licensed and operate within the context that we have created. The purpose of compliance framework is to ensure that that existence continues into But the big question is, can compliance create competitiveness? So now, can we really make a jurisdiction more attractive? A robust fit-for-purpose framework can signal to countries, firms, and other economies that very same thing. A critical currency in the virtual asset world. Clear licensing criteria, proportionate capital and custody requirements, mandatory controls, and transparent enforcement pathways reduce information asymmetry and demonstrate that firms locally will be held to predictable standards. Compliance with international standards amplifies the benefits by opening doors to cross-border correspondent relationships, banking access, and investments. So how can small emerging jurisdictions create an attractive environment? Now what does a fit-for-purpose regime does? I believe it rests on three pillars: a robust but accommodative law, a licensing model that facilitates virtual assets activities, sandboxes options, a proportional supervisory regime that encourages vast businesses and models. This slide here stresses that the vast majority of regulators have decided away from placing a wholesale ban on VAS and have either sought to register or to license. The final pillar, a proportional licensing regime, tailors oversight intensity to the size, complexity, and risk profile of each VAS, ensuring smaller firms can grow without undue burden, while systemically important institutions face stricter scrutiny. It combines licensing, risk-based reporting thresholds, and targeted on-site deep tech reviews. In Jamaica, we conducted research. A summary of our findings can be seen in the table. Across several small economies, you can see the establishment of distinct VA exchanges, VA brokers, VA advisors, and conversion services. VASP at a glance, Jamaica would be emerging as it concerns the VASP framework. It's creating a clear, proportionate, and market-enabling law and framework. A multi-class regime calibrated to specific activities, incoming conduct of business rules to protect consumers and ensure market integrity, whilst ensuring that prudential requirements and training are put in place. In concluding, a fit-for-purpose regulatory regime can attract investments and VASP by providing legal clarity, predictable licensing pathways, and proportional safeguards that reduce operational and reputational risk. Small countries should prioritize enacting robust, clear laws to provide legal certainty and attract credible participants. A proportional licensing regime is essential so requirements match the actual risk and capacity of the activities. In order to have a jump on this, you can look to the various model laws. You can look to the Commonwealth model law, and there's a stablecoin model law that's being developed by LJ, Loretta Joseph. I think this is a very important tool to leapfrog in this framework. In closing, my presentation is simple. Robust, fit-for-purpose regulatory regimes don't repel the market. They attract quality customers, quality firms, responsible VASP, and sustainable growth. I hope in this short time I have spoken enough to provoke your thoughts to consider this, and importantly, industry representatives here to think strategically about how to canvass and cultivate future opportunities in small and emerging markets. Thank you for your time and the vital conversations we'll have after this presentation. Thank you.
Moving to our third roundtable of the morning sessions. Our next session dives into a critical topic for investors worldwide: investment opportunities and risks in emerging markets, global layout of private equity, venture capital, and ETFs. Emerging markets offer exciting potential but come with unique challenges. This panel will explore how investors can navigate risks and unlock growth through diverse vehicles like private equity, venture capital, and ETFs on a global scale. To steer this insightful conversation, please welcome our moderator, Menelaos Xenofontos, Head of Strategy and Intelligence at Invest Cyprus, who brings a wealth of experience in market strategy and investment intelligence. Joining him are four distinguished panelists. Unfortunately, Sergei Grechkin, Chief Strategy and Risk Officer at AIFM Kairos Capital, will not be joining us. as he unfortunately has the flu. Petros Mavromatis, board member and head of asset management services at KPMG Cyprus and vice president of the Cyprus Investment Fund Association. Ruslan Patlavsky, founder, CIO and managing director of Blackbeard Asset Management, with deep expertise in asset management and emerging markets, and Christos Xenofondos, CEO of Bard Worldwide Group, a leader in global investment and financial services. We welcome Menelaos and our panelists to the stage.
Thank you to our Master of Ceremonies. Good morning, everyone. Welcome to WikiEXPO. And as mentioned already, our current panel will take a deep dive on an interesting topic, and will particularly focus on emerging markets. Now, whether emerging markets are actually emerging is an interesting question to be addressed on a different day. But today we will basically inspect them through the themes of private equity, venture capital, and exchange-traded funds. And to do so, I am joined here today by three esteemed individuals: Mr. Petros Mavromatis, who is a board member and the head of asset management at KPMG Cyprus; Mr. Ruslan Patlavsky, who is the founder, chief investment officer, and managing director of Blackbeard Asset Management; and Mr. Christos Xenofondos, who is the CEO of Bard Worldwide Group, and who has the same surname as I do, but we're not related. I would like to kindly ask our panelists to give us a brief introduction about themselves and what they do prior to proceeding with the questions.
Thank you, Menelaos. As you said, I'm a partner at KPMG Cyprus. I deal with funds. I'm the head of funds and asset management at the office. But I'm also the vice president of the Cyprus Investment Fund Association. The objective of our association is also to promote Cyprus as an international fund jurisdiction.
Hello, everyone. My name is Ruslan. I'm a founder, managing director, and the chief investment officer of the asset manager called Blackbeard Asset Management. We're based in Limassol, and we manage two investment strategies via our Luxembourg fund. The strategies are emerging market high-yield bonds and emerging market distressed credit and special situations. Thank you.
Hello from me as well. Thank you, Menelaos, and my esteemed panelists. My name is Christos. I'm the CEO of Bard Worldwide Group. We mainly run portfolio management and investment opportunities, and we specialized in endowment-style portfolios, I would say, and alternative investments.
Thank you very much. So to kick things off, the first question is addressed to you, Petros, and has to do with explicitly with private equity, and to adopt a pro-KPMG approach and to cite some data just to put some context into the question. KPMG's Q2 2025 Private Equity Pulse report highlighted, and to quote here, an increasing shift away from globalization towards regionalization in deal making, where basically investors are focusing more on domestic and or regional markets. What does this trend mean basically for emerging markets that have historically depended on international capital, and are we likely to see a slowdown in cross-border PE investments into those economies?
Thank you, Menelaos. Yeah, this is a very interesting survey that is being performed by KPMG International, and it's good to share these insights with you. So for decades, global investments felt like a free-flowing river, capital crossing oceans, chasing opportunities anywhere on the map, really. But by 2025, that river seems to have narrowed. Private equity and venture capital investors are turning inward, focusing more on regions closer to home rather than the entire globe. This shift is not just a trend, it's changing the rules of the game, creating new winners and losers worldwide. We call it the regionalization phenomenon. This is because of rising geopolitical tensions, like trade disputes, we see that on the news, national security concerns, making investors nervous about betting abroad. Tariff wars increase the cost and complexity of cross-border deals. Think of it as a tax added just for playing abroad. Supply chains have been shaken by recent crises like pandemics and conflicts, exposing risks in depending heavily on distant suppliers. And governments now emphasize economic sovereignty, meaning they want more control over key industries within their borders. What does it mean in numbers? I mean, look at healthcare and biotech industries, where the local knowledge, we've seen the recent presentation by the Singapore Prime Minister talking about biotech. The local regulations, these industries saw strong investments recently. Meanwhile, the more traditional sectors like automotive and manufacturing sectors, which rely heavily on global supply chains, are seeing less capital from private equity firms. And investors have not given up on global assets entirely, yet they just pick their spots more carefully. So let's discuss a little bit the emerging markets. So the story in the emerging markets is relatively mixed, like a landscape of both clouds and sunshine, I would say. Some of the challenges that they are facing is cross-border investment has slowed, making it harder to access foreign capital. Investors raise the bar very high for risk and reward before stepping in, and a lot of the startups and the private equities see that. Competition intensifies for the smaller pool of global capital that is still available out there. Some bright spots, I would say India stands out as the beacon, continue to attract private equity with many mergers and acquisitions. And as Cypriot professionals, we are very much interested into the India opportunity, especially following the recent visit of Prime Minister Modi. The mid-sized deals, we see that they remain healthy, even as mega deals slow globally. And sectors like healthcare, infrastructure, and financial services are proving to be resilient and more interesting to investors. Emerging markets, now they must prove that they offer a compelling risk-adjusted returns, not just growth potential, to justify the international investment and raising of capital. This is a new and tougher reality for them. Let me just comment also on Europe's strategic approach. Europe is not standing still. Instead, it's turning regionalization into an opportunity. Countries like UK, Germany, and France are launching large domestic funding programs aiming to boost local innovation and reduce reliance on external capital. Europe focuses on technology sovereignty, trying to become self-reliant in key industries such as digital tech and biotech, but is competing the US and Asia that are well ahead in that game. European asset prices are currently lower, making regional investments a bit more attractive. And this we have seen huge financial pledges. For example, Apollo Global Management, a huge giant in the industry, plans to invest as much as 100 billion in Germany over the next 10 years. And Blackstone, another giant coming from the US, is aiming to put 500 billion across projects in the EU. So these massive commitments show a significant change in how Europe is attracting and distributing investment money, focusing more on regional opportunities than before.
Thank you, Petros. A lot of valuable points raised there. I think the most important one to highlight is that governments are choosing to have control over certain industries. India is emerging as a superstar, and that there are many initiatives being undertaken at the EU level as well. Perhaps my personal worry about the EU is the red tape and the fact that the EU's way basically to resolve the regulatory problem is to introduce superimposing regulations, creating a very gray area. I would also like to ask you, perhaps wearing the hat of the CIFA president, how might this shift impact a financial hub like Cyprus, which often serves as a bridge for regional investment activity?
This is a very good question. Being here, Cyprus is our country, and we're doing the best to promote it, especially as CIFA. So we all know that Cyprus is uniquely positioned. It's a crucial bridge in this evolving landscape, and we've seen all the headquartering companies coming and having the setup here. Even WikiFX coming here with this huge event shows that Cyprus has a role to play. Cyprus, you all know that it offers a well-developed financial system with expert fund services ready to support regional investors. We have been doing this business for decades, from the 90s, so there is a lot of expertise and talent on the island. Geographically, Cyprus is very meaningful, obviously, being in the crossroads of Europe, Middle East, and Africa, a perfect spot for regional investments. And recent updates in the regulatory framework, especially in the fund space, including the adoption of all changes of Alternative Investment Fund Management Directive 2, gives the opportunity to Cyprus to continue offering a robust EU-aligned investor protection. And we also have the new legislation on fund administration that has been enacted a few months back, which provides institutional-grade fund administration to the investors of our Cypriot-based fund managers. In my mind, for Cyprus to succeed, it must prove, though, that beyond of just being a place that facilitates general international investments, it has to become an expert in specific industries that are leading regional investments, I would say, like healthcare, biotechnology, which I believe a lot into biotechnology, and infrastructure. So by making the most of our infrastructure, or our financial system, our regulatory framework, which is coming from the EU, as you said, is a bit tough, but it's providing protection for the investors. And the prime geographical location, I think Cyprus can grow even bigger and benefit from the large investments flowing into Europe. Take advantage of the regionalization as well, take advantage of its neighbors and the opportunities that arise.
That's a very interesting multidimensional response. Thank you. Now, Ruslan, my next question is to you, and it has to do with emerging market debt. We're seeing EM debt delivering very strong returns in 2025. Just to cite some figures, local currency bonds are now up by more than 11%, and hard currency sovereign bonds by roughly 8%. But nonetheless, we're seeing investor flows remaining hesitant, as we've seen an inflow of circa 275 billion being poured into emerging market debt in 2024. But in 2025, we're seeing significant swings. For instance, 40 billion was poured into emerging market debt by July. And basically, we've seen also periodic outflows like emerging market bond funds witnessing an outflow of 3.1 billion. How do you explain this disconnect?
Thank you, Menelaos. First of all, we have to define the emerging markets. The emerging markets do not have a single definition. We're talking about 180 countries, and each fund, each researcher, each strategy, every person may define the emerging market slightly different. For example, is China an emerging market or a developed market? It's a big question because of the size of the country, the size of its economy, and the impact on the overall picture once we talk about the emerging markets. So there is no single definition, and that's why the data might not be representative for exactly what's happening in the region, although it's very indicative because it shows the trends. The inflows and outflows in general are fine, and that happens all the time. Sometimes investors turn around and prefer other regions or other asset classes, and there is nothing wrong with it. You cannot have extended inflows for a long time. To add to that, this year is a very different year to what we had historically. First of all, because of the very strong change in the geopolitical position of the US. And that fundamentally changes a lot of things within the whole investment universe, such things as perception of risk-free assets or safe havens, whether people like or not dollar-denominated assets, whether investors prefer to keep the money inside of the US or outside of the US. And on the global scale, that all creates a picture where other geographies, other asset classes are affected. So it's not always the emerging market in itself which creates inflows or outflows. It's also the other parts of the geography which may affect the inflows or outflows to the specific asset class, which we try to look in a separated manner. So If we look at what happened this year, because of the geopolitical events, we've seen rotation of investors out of US denominated dollar debt. The problem with that was that there are no other currencies or other denominated instruments sufficient to just digest the amount of, let's say, American debt rotated in the other currencies. That's created one of the issues for the emerging market debt as well. We've seen that there is a rotation, or at some point in this year, we've seen rotation out of the US as a geography and like exposure to the US economy because of the higher fears of recession triggered by these tariffs and trade wars. If we look at it historically, the only month where there were net outflows out of the US was April. But generally, that created a sentiment towards other parts of the world, including the emerging markets. Finally, the end of, or the beginning of perception that the US exceptionalism is not a fact anymore, and people's attempt to find other alternative safe havens created the need to look more openly on other geographies, other asset classes. So I think that overall, the emerging markets this year have been and still remain attractive. And it's not because of something in the emerging markets which have caused the outflows or inflows. It's the external situation around other parts of the global investment and political environment have likely triggered the changes in this particular asset class and this geography. But overall, there are no fundamental differences, and the emerging markets credit remains fundamentally attractive. Moreover, the outflows so far have been really minimal relative to the inflows, and the performance have been strong and still attractive.
Okay, and in line with what you just said, how does Blackbeard Asset Management identify and capitalize on such opportunities in high yield or distressed emerging market debt when others are retreating?
I think we need to continue one of the things which I've missed out. The reasons why emerging market is important, or the debt within the emerging markets or the instruments within the emerging market is important, is that it offers high risk adjusted or higher risk adjusted returns to investors relative to the other geographies. A lot of my conversation with investors starts from education, where I have to really present facts. Why is this something relevant? For example, if we look at the corporates, the companies, the leverage of emerging market corporates on average is 3 times debt to EBITDA. When we look at European or US high yield, the net debt to EBITDA or debt to EBITDA is 6 to 9 times. So the probability of default, the amount of risk the US and European corporates have, is much higher. At the same time, if you look at the yields which US and EU high yield bonds offering, that's typically ranging between, I don't know, maybe 5, 6%, maybe 7% at the highest end, depending on the credit rating. At the same time, if you look at the emerging market corporates, they can easily give you 6, 8, maybe 10. If you go to CCC category, which is also a highly levered situation, you can get above 10. But it's very important to keep in mind that because of the long historical period where the companies were able to borrow cheap debt and were able to bring a lot of the maturities forward, that created this strange situation where European developed markets are kind of perceived to be safer, but in the reality their fundamentals are worse and they're yielding less yield. And at the same time, emerging market in reality are much more faster developing, have better fundamentals, and give much more attractive yield for the investors. Now, how do we capitalize on this situation? It starts from the education, really. as I say, because emerging markets is a very weird pool of countries, and sometimes investors look at them as a cluster or a group of countries or block. And here, everyone defines the emerging market and frontier markets differently and slice and dice it. But a lot of people need really an education that the yields are higher, leverage is lower, the risks are not necessarily higher in reality. The fundamentals are attractive relative to the other asset classes within the industry. We've been doing this for 20 years, and we have built a very strong sense of what this market can provide. We have been working very consistently on a lot of the opportunities, and we have a lot of the knowledge on what we do. We constantly monitor the flow, and we constantly monitor the specific developments within specific corporates and specific sovereign issuers within the area to be able to capitalize on very attractive opportunities. Given the size of the market, given the diversity of the market, given the less efficiency of the market, lower efficiency of the market, this is a very interesting and very complex market to work with. At the same time, for a skilled, experienced, and very consistent investor, it can give a very attractive results, which we are proving for our investors in our performance.
Thank you for a very comprehensive response. Now turning to Christos, we're going to tackle the theme of emerging market equities through ETFs, which is basically something in which we've witnessed a renewed investor interest in. Just to, again, cite some data, emerging market equity ETFs were about approximately 4.5 billion in net inflows in the second quarter of 2025, which is approximately a 40% jump from the previous quarter. My question to you is, do you view exchange-traded funds as an effective way to gain exposure into the emerging markets growth? And how well do they capture real economic opportunities in emerging markets whilst mitigating single company or single country risk?
Thank you, Menelaos, for the question. I would say that ETFs have indeed democratized the access to the emerging markets. For many investors, especially the ones without the scale or the expertise, they give them directly access to allocate their capital through low-cost, diversified entry points. For me, the increase in the outflow in ETFs and the emerging markets is something that we see mainly, in my opinion at least, is that from the start of the year, we see that the growth and the yield is coming from specific companies in the US, and investors are looking to capture value somewhere else. And emerging markets is is starting to be seen something like where opportunities arise and higher returns might be there for the investors. Yes, ETFs, to some extent, they capture the value. They provide exposure to broad indices. They mitigate the risk of single country and single equities. And they help to mitigate also the political stability in some of these countries. They mitigate the corporate governance that you might need expertise to understand and know how they work. And so from my side, I would say that by managing a portfolio, I believe that ETFs give tactical power to access specific emerging markets and markets that you cannot access easily from the bottom up. And by doing your own research and finding the equities you need to have for the exposure you need. Now, we need to understand that ETFs is not a silver bullet, if you like. They have weaknesses, meaning that you need to understand the weights. Some of them are overweighted in specific countries like China or India or Brazil. And also we need to understand that they may seem liquid, but at the end of the day, you need to look at the countries you invest. Sometimes those names are not as liquid as we believe. So we need to be careful. To summarize, I would say that it's an effective tool. They should be used with awareness. They are excellent for broad allocation, but they don't replace the bottom-up approach, like a private equity fund with local managers, with active management of equities in those local markets, that they understand everything that's going on the ground, and they will be able to give you that extra value. I believe that by buying an ETF of emerging markets, I say usually that you buy the beta. If you want to build a long-term investment strategy, you need to have specific names and specific investments to capture that alpha. But other than that, I would say that the increase in the investments is just the logical next step based on what we see in the global markets and the geopolitical scene that we witness. So, yeah.
Okay, Ruslan, you want to add something?
Yeah, if I may just follow up on this topic. I generally agree that there are ETFs which can provide access to some pockets of emerging markets. However, that's given the specificity of the emerging market, how different the market is, how many countries are there, how sparse the liquidity can be in some of the countries, especially in the corporate side. The vast majority of emerging market ETFs provide very high level access, and about 70% of the composition of each and every emerging market ETF is based on the sovereign, and maybe up to 30% of that, in the best case scenario, will be corporates. Meaning that for this particular market, for this particular set of asset class, ETFs are still not really giving you access to the entire set of opportunities, primarily because of the low liquidity, especially on the corporate side. So yes, for bigger names, for corporates, you won't be able to get and target them through the ETFs. That's one. Second, there are asset classes which are not just specific to emerging markets, but generally there are asset classes like distressed credit. There's simply no ETFs which can capture that because of the specificity of asset classes. And here, you cannot just simply rely on ETFs. There are benefits of having ETFs for cheap because it's cheaper, it's passive, so you just invest and hold, it's easier to rotate. But at the end of the day, ETFs are not a solution for every situation the investor might need. And sometimes I agree here, you still have to go into individual active style where you will be able to target some of the countries, some of the corporates, some of the specific opportunities which cannot be captured by the ETFs.
From my side, I would say that I mostly agree on the sense that, as I said, it's a tactical move. So if you believe, for example, that commodities and metals are going to go up, then you find an ETF that follows LATAM index, and then you tactically go there, get the appreciation, and then you exit. Based on our experience and our research, when we try to find on credit side ETFs, we've seen that there is not an ETF that follows the benchmark. So the banks and investment institutions, they throw out that there is a benchmarking of let's say emerging market debt, and the returns for the last 10 years has been close to double digits, for example, or 6% or 7%. When we try to find the specific ETF that follows that index, it doesn't exist. It lacks the return. So I would agree that as far as fixed income, debt side, and credit side, I would say that the ETFs are lacking on that side. So I would agree.
Thank you.
So basically a tactical allocation whilst being wary of the pitfalls, just to sum it up. Turning back to you again, Petros, we're going to explore venture capital, which, judging from the macroeconomic and investment landscape in Cyprus, is arguably the hottest topic right now. Again, to adopt the pro-KPMG approach, and this time to cite what's being mentioned in the KPMG Q2 2025 Venture Pulse report. We're witnessing basically a decline in emerging market funding in 2024, whilst, and obviously in 2025, there are ongoing geopolitical and economic headwinds. My question here is, how are venture capital investors adjusting their strategies in terms of sectoral focus, as well as their investment consideration criteria, so as to navigate this more uncertain and selective environment?
Thank you, Menelaos. Yes, let's share some thoughts from the 2025 KPMG Venture Pulse report with people attending. 24 emerging market venture capital collapsed at around 41%, a huge decrease, dropping to 9.1 billion. This plunge is just not a number. It reflects a fundamental shift of how risk and opportunities evaluated at the global startup investing. It seems that the era of easy money and unlimited growth at any cost is coming to an end. It is not just the high interest rates causing problems, but multiple factors have all worked together for this reduction. So when interest rates rise, safer investments like government bonds, treasury bills become more attractive, making it harder for risky startups to raise funding. Inflation creates uncertainty for consumers, reducing their spending and affecting startup sales and growth potential for the fund managers, for the startups. Fluctuations in currency values in emerging markets is also an additional risk for foreign investors, making investments even more uncertain. At the same time, the market is maturing. If we see the huge venture capital boom in 2021 and 2022, it was inevitable that a correction would have been made. Overinflated startup valuations are finally returning to more realistic levels, and even the regulators have pushing for even stricter evaluations of assets. Investors demand discipline instead of growth at any cost. Combined with the geopolitical and trade tensions, tariffs and regional conflicts, they disrupt the plans for cross-border expansion for the VCs, and the supply chain worries make the global scaling even more risky. Most importantly, the exit window for investors is becoming a problem. So when they're selling shares for profit through IPOs and acquisitions, this window seems to have relatively closed because we've seen a huge reduction in IPOs in recent years globally. Investor psychology seems to have shifted. Investors have moved from the fear of missing out in very good opportunities into extreme selectivity in what they are choosing. The KPMG report, the data show that VCs still invest, but only in proven businesses worldwide, not early stage ideas. Hot sectors like AI and defense tech continue to attract capital because they are addressing urgent real-world problems. LPs, the real backers of the VCs, hesitate to commit new money, according to our report, worried about liquidity and how long returns will take to come back to them. There are some sectors that are weathering the storm. Of course, AI keeps the strong interest because it shows clear value and scalability. Defense tech is becoming even more important due to geopolitical tensions and demanding of innovation. Healthcare and biotech, I mentioned earlier, retain investor focus, especially in Asia. Consumer services focused on domestic markets fare better amid global trade uncertainties. As we said earlier, conversely, sectors like automotive and manufacturing struggle under tariff impacts and currency risks. So the key lesson for us is companies serving strong local markets and less reliant on global trade attract capital more easily. This is what it seems. Despite these challenges, some green shoots appear. Investment levels seems to be stabilizing recently with quarter-on-quarter improvements, yet we are not there yet compared to the past. AI maintains its momentum and the deal activity continues selectively, focus on only proven business models. So the recovery will probably start with strong local companies that serve large domestic markets. Some strategic implications for stakeholders. Let me analyze. For entrepreneurs, they should focus on winning on their home, local market, prioritize their profitability and resilience, not just growth or scale. Build businesses that can withstand funding droughts because, as we said, investors are becoming even more limited. Investors, they want to shift their quality over quantity, targeted patient investments, they should expect longer timelines and adopt hands-on support, diversify across sectors and regions to manage their risk, and definitely governments need to do their bit, build stronger domestic startup ecosystems. So my conclusion and the report of KPMG says that the 41% drop is changing permanently emerging markets, and the startup scene is moving from time of easy money to a more careful and selective phase.
So basically, holistically, we're seeing a variety of forces coming into play into the VC funds industry, rising cost of debt, we're witnessing currency risk, shifting investor preferences, and the point that raised an alarm bell for me personally, given my hat as the head of strategy in the Cyprus, is the disruption of cross-border collaboration, something which we are aiming for, considering our strong efforts to promote the ICT sector in Cyprus and by extension the startup scene, which is obviously heavily dependent on angel investments and on VC funding. So it's really important to hear going forward. Now, Ruslan, we've briefly touched the concept of debt in emerging markets. Now we're going to take a deep dive on high yield and special situations credit, basically. I would like to ask you, what current opportunity or trend excites you the most? And just to guide your answer a little bit, do you think there are particular regions or sectors where debt distress and restructuring are creating attractive points to tap into the market?
Yeah, of course. You have to embrace the fact that a lot of things are changing now, and because of the geopolitical events, because of a number of conflicts, regional conflicts which are happening, the disruptions in supply chain, the trade wars, they all affect the investments and the perception of the investors towards the assets. The trends which we are exciting most at the moment, there are a lot of them. They are both positive and negative. But if I would single out a few just for the sake of the answer, for high yield, for example, I would say that the reduction of the interest rates in the US, which affects globally the risk-free rate, and that basically pushes the yields down and makes the bond prices high, is an important factor. We've seen the cut by 25 basis points, and there is a perception that there will be another 2 cuts by 25 basis points each by the year end. This is something which hasn't been clear. And although this is happening in the US, again, consistent with what I was starting to talk about, the other parts of the global economy or investment universe affects the other parts of the market. So for high yield, regardless of whether this is EM or EU or US, the reduction in the interest rate will have a positive effect overall on the credit. And overall, as we discussed, the interest to emerging markets, the rotation out of the US, is a big thing which hasn't been yet happening before 2025. So this is another positive thing where investors look for new sectors, new geographies, new opportunities beyond something very traditional. Whether this will stay or this will kind of reverse to the usual preference, because frankly speaking, the flows to the US equities and in the US generally have been back now, but still a lot of investors start to look elsewhere and still prefer emerging markets among all the others. For the distressed credit specifically, the very important thing is that although the global recession fears seem to kind of calm down and it seems that we're weathering through, at the same time there are pockets of economies or specific countries where the default rates are quite high historically. And there are industries, specific industries, which are very disrupted by the supply chain, trade wars, licensing, geopolitical things, conflicts. All these things create, as Pedro said, automotive. Within the manufacturing, I would single out very specific industries like chemicals. Oil and gas is not doing great because of the prices for oil is great, and at that price, that doesn't really stimulate new capex for new drilling and new supply coming to the market. So there are very specific things which create a lot of opportunities for the distressed investor, for patient, knowledgeable, skillful investor who knows how to distinguish between like permanently distressed credit, which has been going to insolvency, and the opportunities where you can get a nice recovery. So the current environment, the more turmoil, the more volatility generally is more favorable for the distressed side of the investors because it creates an opportunity of flows. It's unfortunate that we're going through a lot of the volatility right now, but on the other side, that presents a flow of constant actionable opportunities from this particular side.
Interesting, and I mean, obviously what you mentioned requires an extensive amount of intelligence. As such, how important do you believe is local insight or partnerships in order to navigate such situations?
It depends on your investment strategy, it depends on the level of depth, it depends on your investment angle. For example, ideally you would want to know the local insight, not insight is the wrong word, the local perception, the local knowledge, the details, and that would make your investment more comfortable, more informed. So the local knowledge is always important. At the same time, when we look at the emerging markets, it's 180 plus countries. You cannot have insights or presence in each of these countries, and you don't really need. So you have to bring a common denominator or make some sort of a clusters within the geography to be able to bring a lot of parallels. Regardless of the legal bankruptcy regimes and the governing law of the instruments which we buy in order to restructure. And most of these securities, regardless of the country, they are issued either under the law of New York, that's about 70% of all emerging market bonds, and about 30% comes from the English law. So there are pros and cons, obviously, to sum up. Local presence, local knowledge, understanding, deep expertise in local details are always helpful, but not always achievable. And you have to try to get local insight, but it's just very difficult to get in every situation. So you have to be informed, you have to know what you do, and you have to find sometimes common denominators which will help you to move you further and be ahead of the market.
Thank you so much, Ruslan. Despite being 1 month down, I've been informed by the event coordinators that we need to put a stop. So unfortunately, I had one more questions to ask you, Christos, and it was a very interesting one. It was mentioned by your fellow co-panelists regarding the diversification amongst the emerging markets. Obviously, there's no one-size-fits-all, and not all countries under the emerging market umbrella are the same, so there was a lot of ground to cover. Nonetheless, I want to thank all three of you for your time and your valuable answers. I hope the audience was illuminated by our response, and we are happy to take any questions offline. Thank you very much.
Thank you.
Thank you. Now, we'll be diving into a fascinating and timely topic, challenges to the endorsement and adoption of cryptocurrencies by financial institutions. As the world of digital currencies continues to evolve, financial institutions face unique hurdles in adopting these new technologies while maintaining regulatory standards and managing risk. To share insights on this complex issue, we're excited to welcome Naushad Kadun, AML CFT subject matter expert at ITX Compliance and former regulator at the FSC Mauritius. With his extensive experience in compliance and regulation, Naushad is well equipped to lead today's discussion. Please join me in welcoming Naushad to the stage. Thank you.
So a very good morning, good afternoon, everyone. Pleasure being with you here today, and thank you very much to the event organizers as well for the invitation and to be part of this great and successful event. So my keynote speech today really covers the challenges that are, I would say, faced by virtual asset service providers pretty much all across the world. Many jurisdictions have moved to provide for legal and regulatory frameworks when it comes to really hosting and giving the ability to organizations to really set up shop and get licensed. I mean, the process of getting licensed itself is just such a challenge. Why? Because first of all, the concept of a license really means lawmakers are there to really watch out that investors are protected. That's one. Excuse me. And secondly, there's also the entire process of jurisdictions, secondly, competing with each other, and thirdly, trying to make sure that they don't bring some level of, I would say, unfortunate disrepute that might result in any virtual asset service provider engaging in the kind of activities that are not really warranted. So having some thought about that, we've had in Mauritius a legal and regulatory framework. And once again, I would follow my friend, Lieutenant Colonel Carrel, to really mention Miss Loretta Joseph, who was part of the development of the legal and regulatory framework in Mauritius. And since then, we've had the chance, I would say, to license a few virtual asset service providers. But the difference is once they were licensed, they came across the very same old problems, I would say, or challenges, which is really getting a banking partner. Now, when it comes to really getting a banking partner, we've seen some of the local banks move on to open bank accounts for virtual asset service providers, but a few months later, you would come across situations where the banks would feel the pressure to go on and terminate those business relationships. So one of the main causes while liaising with the Association of Bankers locally, and I think the very same challenge has been echoed by fellow associations, is the pressure that is exerted through counterparty due diligence. So what do we mean is you've got your correspondent banking relationships, and your correspondent banks, when they risk assess you, they ask you the question, do you have virtual asset service providers as clients? Now, my keynote speech today is really to address one misconception, because I want to use this opportunity to get the message out. The message that I want to get out is it's important, one, for central banks to have some great level of clarity and guidance towards the banks when it comes to really serving and accepting virtual asset service providers. Secondly, I feel that the banks also have to be adequately informed when it comes to understanding the parameters of their obligations. Everyone goes on and asks the banks, why are you not opening accounts for virtual asset service providers? Fundamentally, we want to see it happen so that we can provide for a conducive and healthy environment for virtual asset transactions. That's what everyone wishes for. But the difference is that the banks are just focused not on sectoral development. The banks are focused on what would their regulators and the central banks say. So that's why we need to have some level of clarity in terms of what are our obligations. I have observed the biggest misconception really lies in banks believing that they need to have clarity, transparency, and visibility on the transactions of a virtual asset service provider. But when you look at the FATF recommendations, what are pretty much the international standards that we live up to, they require the virtual asset service provider to be monitoring their own transactions. The banks should be monitoring the bank accounts of the VESPs that they have as clients. This is really one important critical message that I believe we need to get out. And I truly feel that the bank is considered by the FATF as an FI, a financial institution. As a financial institution, you ought to monitor the transactions of your clients, but not that of your clients' clients. Now, this clarity needs to get out, and this is really the underlying message that I wish to really convey today as part of my keynote speech. So anything to do with KYC requirements, yes, you would be capturing it the moment you do your source of fund check in terms of who is transmitting funds via fiat currencies to the accounts of the virtual asset service providers. But the moment the virtual asset service provider is accepting money in the form of any virtual asset cryptocurrencies, this does not fall within the remit of the banking partner until and unless there are any fiat transactions that are being paid to any particular person or received from any particular person. Only then there will be really valid grounds for the banking partner to go and have that level of due diligence on that particular person or client. So I've been asked to keep my message a bit short because I think we've run over quite a lot of the time for today's session. But I really wanted to make use of this platform and opportunity to get this message out to hope that the central banks, the policymakers really work together to get clear parameters out and the message out to their, I would say, licensees, which are regulated financial institutions, and for the dialogue to be maintained. And only when we manage to give that level of clarity and comfort to the banks that these are the parameters of what you should really be monitoring, only then that the banks will feel secure enough when it comes to onboarding. But then again, there remains the pressure from correspondent banking relationships. Why? Because the parameters of our policies remain within our jurisdiction out of sovereignty, and hopefully we can find some level of consensus when the message is out and there's some level of clarity. I wish to thank you very much, and if you have any questions, I'll be very happy to respond, but we're a bit short of time. So thank you, and see you in the hall during the afternoon. Thank you.
Next, we explore Digital Assets 2030, the full integration of crypto finance and the real world. This panel will discuss how digital assets will blend with traditional finance by 2030, highlighting key opportunities and challenges. Moderating today's discussion is Savas Agathangelu, board member at KPMG Cyprus. Our panelists include Loretta Joseph, chair of IDAXA and consultant at FSC Jamaica, Karen Burrell, executive director at FSC Jamaica, Samuela Davidova, representative of Liberland, and Andrei Neyman, CEO of Magic Square. Please join me in welcoming Savas and the panelists to the stage.
Is this on? Great. So, hi guys, and welcome to the final panel before the lunch break. We'll try to keep this conversation interesting and practical to make sure that you get the most out of it before you head for lunch break. I'd like at this stage to let you know that the panel you're about to experience is going to be spontaneous and unfiltered, as we just met with the guys last night for drinks, and we didn't discuss questions whatsoever. So we give you the opportunity to hear unfiltered perspectives. I'd like to invite the fellow guys here on the panel to introduce themselves, and let's kick off to a great discussion. Maybe we start from the very end, and we pass away here.
Thank you. Thank you a lot. My name is Andre Naiman. I'm a founder and the CEO of Magic Square, a crypto native marketing platform, one of the biggest marketplaces in the crypto space, exists for 4 years. We see crypto becoming mainstream, and every year we see more and more native adoption. So we are here to discuss how the process is rolling out.
Perfect. Thank you very much. Please.
Hello, everyone. My name is Samuela Davidova. I represent Liberland. This is my passport. We're building the freest country in the world. Of course, we are very crypto-friendly, but we do not control or limit which kind of currency you use as Liberlander, so you're free to use your preferable fiat or cryptocurrency. We have our own governmental token and also a token for exchange or with the other Liberlanders, and you can find it on the exchanges. The first one is Liberland Merit and the other is Liberland Dollar. We have our reserve in Bitcoin, 100% off. I think we're the first and only country in the world who has it. So, yeah, I guess that's quite a great context to begin the discussion, and I'm happy to chat with you. I know likely you're interested into learning more about Liberland. Please wait for the keynote of our president, Vít Jedlička, at 2:40. Thank you.
Thank you very much. Please.
Good afternoon again, everyone. I'm Karen Burl, the Executive Director of the FSC. I'm a regulator, former central banker. The sectors I regulate currently include insurance, pension, securities. I'm also in charge of the implementation of the virtual asset framework in Jamaica. Thank you.
Thank you very much.
Hi, everyone. I'm Loretta Joseph. I spoke before. I have many roles. One of them is that I advise multiple governments on legislative and regulatory frameworks around virtual assets. In my other life, I work for the ex-head of the Financial Action Task Force in money laundering, anti-terrorism financing and the proliferation of nuclear weapons, and how cryptocurrencies are used for illicit financing.
Thanks a lot. So, guys, as you can see, we've been joined from the very experts to answer a few questions in regards to how do we actually integrate crypto finance in the real world. I'd like to mention at this stage that predictions say that we're going to have about 4 billion people transacting on Bitcoin and other fiat-related crypto, like, you know, the tethers and stuff. So we'd like to hear more from the guys here. What is the actual problem that we solve with these different coins and different transactions? It's not going to be, you know, the speculation aspect that I'm interested in, but what the everyday person can win when transacting using crypto. So this is going to all of you guys. Feel free to jump in. Maybe we start, I don't know, with the very one that showed us the passport of Liberland. That you guys seem to be very attached to the idea. Samuela can give us a bit more insights on it.
Yeah, it's actually a really great question. What problem does crypto really solve? And does it solve any problem, or is it just another asset? or speculation. So if you zoom out on the word, maybe it's not particularly your problem, but the thing with crypto is that in the first place, it's borderless. So people are not restricted to use, as I mentioned, we do not restrict our liberal lenders to use some particular currency, but most countries do it. Why? Because they have a central bank and they have the ownership over how much money inflow will be there. And they don't really want people to diversify that, right? So yeah, of course you can exchange other fiat, you can have USD, but the central bank of your country likely won't like it. And so this also touches the policies of some countries. I believe that there may be some restrictive countries in Africa or in Central Asia. Some countries are more open to it because they understand that with that also comes more money inflow as the effect of more investment interest and stuff. So there can be actually diversified opportunities. But considering the individual freedom, so in the first place, you're free to use some asset and exchange value you created by your work. You get some money or any value in return, right? And you can choose whether that be fiat or whether that be crypto. And then you're free to transfer that abroad. Because, for example, some African countries are restricting, there's a strict transfer limit on how much money you can get out of the country. So it actually limits your opportunities, say, if you want to move abroad, if you want to travel. So you cannot even physically do it because you cannot transfer money abroad. Say, if the cap be like $400, you cannot really do much. And say if you want to apply for a visa abroad, say in the EU, so you cannot have any monetary exchanges, any transfers, any movements. So I believe that it actually in the first place brings great freedom to the individuals. And with freedom comes opportunities and also responsibilities. Yeah.
Very good approach. I'd like now to move on to a different part of the world. Let's go back to Israel. What Andrei's take is on that? Like, what is the real problem for the everyday people? I mean, probably in this conference, there is people from both worlds, let's say. So there's people that they invest in crypto or they speculate on it, and then there's people that they are wondering, how can this become part of our daily lives?
So let's talk about inclusion. We have 2 billion unbanked people in the world. So what you just mentioned, we want these people to be their own bank. They can be their own bank. They can hold crypto in any phone, and they don't need any process with any institutional to hold crypto, send, get paid instantly. Yeah, so inclusion is very important as a part of crypto economy. The second part that's important for everyone here is liquidity. So traditionally, most of the assets in the world, they're not liquid. Your houses are not liquid. Most of the funds are not liquid. And this is why we see tokenization that started to roll out big time. So we see a lot of companies in different parts of the world talking about tokenization. Tokenization of funds, tokenization of real estate, and this is called real-world asset. Real-world asset in crypto, it means that we are putting the old illiquid assets on the crypto rails. And we are giving a new life. Why liquidity is matter? Because first of all, you're not locked anymore. For example, as an investor in a fund, you're locked for 5 to 7 years. When the fund becomes liquid, you can trade your position, so you can terminate it any time. If your real estate is liquid, it means that you can trade it without the headache that involved with all the bureaucracy around. So for me, inclusion and liquidity, these are the biggest things beside the borderless thing and ownership and proof of ownership. But these two things, and generally we will see up to 2030 that most of the illiquid assets or barely liquid, they're started to move to this direction. Today, all the exchanges, NASDAQ, NICE, and all the big guys talking about liquidity, crypto liquidity. They want to trade 24/7 because today, those companies, crypto exchanges that open 365 days a year, they're taking their money, they're taking their jobs, and they want to get it back. So we will see a big fight for liquidity.
Very interesting approach. Thanks a lot. I mean, we tend to see these, especially on real estate now. There's also many, utility tools that allow you to tokenize your real estate or liquefy it, in an instant, which is very interesting also for the audience here. I see many, regulating bodies and stuff. We're gonna soon come to a regulating expert also on our panels, both of them, to tell us their opinion.
But here, this is your goal, regulation. It's supposed to be simple.
We'll get to that. So let's address first, the elephant in the room, and then we go to the more practical questions. I'd like to move on to Karen. What do you see? You travel all the way to come here for this panel. Just so you know, guys, some of the people in this panel, they traveled 2 days to arrive here to share their knowledge with us. So I'd like to listen to, what you have to say. What is the actual problem we're solving?
Okay, thank you very much. You can hear me. So I'd like to start by looking at the end. What do I see as some of the challenges? I would say I will list two: technology and policy, right? So when we think of scaling infrastructure for these assets, it's virtual assets, it's useful to look at it in that way. On the technical side, we're dealing with interoperability, for example. Blockchains and payment systems don't naturally speak the same language. Creating standards across platforms are essential, therefore. And we need to look at the questions that include scalability and efficiency. Current networks can't yet process all the transactions at the speeds of traditional systems. Finally, we have to strengthen the mechanisms as it concerns digital finance, traditional banking, and these tend to be expensive at the current time. But there's also a big issue with cybersecurity, because as we move to digital and virtual assets, the cyber threat becomes even greater and that risk increases. But I believe technology will in time solve these problems. I think the big problems are policy, and therefore the issues concerning policy, political will, and social consensus are the big problems in the future. So that's the two contexts I'm really looking at.
So in order for us to integrate really crypto in our life, we need the infrastructure while being, addressing many different issues, mainly cyber threats. I'm sure also in our audiences, many people, while transacting, probably been scammed or lost their assets or something. So going back to what the fellow panelists were saying, with great freedom, we have great responsibility. So that's another one. And moving on to the Australian side of the world.
She's Jamaican now. You're taking her, right?
Perfect. So Loretta, in your view, you've been, licensing and doing the efficacy of all sorts of different type of regulations and consulting. What do you see as us being able to get crypto into our lives?
So crypto, I think, is probably the most important technology movement we've seen since the inception of the internet. And it's because crypto it's borderless. It moves 24/7, 7 days a week. It disintermediates the traditional finance players, and they make money out of friction in systems. So you take friction out of the systems, we can now democratise money. But that also comes with a lot of risks as well. And I think when you're looking at regulation and laws, we can't regulate technology. You just can't. Laws need to be technology agnostic for a start, but we can regulate the players that use this technology. And so I think by 2030, I don't think we'll be talking about digital finance or finance. They'll just be blended into one. But we have to focus on the outcomes, and that's ensuring that whether players in the market, they're transparent, they don't scam people, we have market integrity. All these new asset classes that we're seeing that have been born out of blockchain technology still come with risks. But I think the biggest thing that we see with crypto is the democratisation of money, and we're seeing the movement of generational wealth across the emerging world, where kids that are 16 have a mobile device and they can send a digital asset to anybody in the world almost instantaneously, has changed the way finance will look. But we also have to do it mindfully and also understand that when we regulate these industries, we don't regulate the technology, but we regulate the players that use the technology, and the principles around, consumer investor protection, making sure that cybersecurity requirements don't have exchanges hacked, are really, really important.
Thank you very much. Well, now, this is not part of what I actually planned, guys, for you, but we talked about regulation and technology and allowing, these integration into our life. There's the very questions. Can we actually regulate technology, or is this impossible? Like, what do you guys think? Let's start with Andre. On a PhD level.
Yeah, so it's not about regulation of technology. It's regulation of money movement. Because when you're trying to regulate technology, it's almost impossible. But to regulate the entities that involved in process of money movement, you must do it. This is part of their obligation to protect, at the end of the day, all the involved parties. It's about protection.
Do we have innovation? This regulation, as you've mentioned, you want simple regulation. So what does that mean in terms of...
Simple? It means that it's clear and doable. At the end of the day, you can't stop technology. It will come anyway. So once you understand it's unstoppable, you don't need to create barriers. You need to protect, to do it smart. And I think the biggest challenge of regulators is to close the gap, since the industry is evolving very fast on a daily basis. So they need to keep the pace and regulate the process. So they need to bring qualified person that will do the job, and the regulation at the end of the day, it's supposed to come as fast as possible. Because when the space is unclear and most of the institutions deciding to do nothing, they're not acting because there's no proper regulation. There's no clear regulation, like MiCA in Europe. And at the end of the day, we want regulation to be all around, so you can act safely without the risk for doing something wrong.
So technically, we need regulation to protect the users that are going to be using this, like the everyday person. So maybe Samuel can enlighten us a little more on that, like how Liberland managed to get to this stage and also win the trust of all these people.
Yeah, honestly, I think that the government creating regulation in order and telling you that it's for safety, it's sort of like illusion, so that you would feel like there's an excuse, but it won't really solve any potential true problems. So that's why I mentioned that with freedom related to, say, diversification of assets, also comes responsibility. Say, if you have Bitcoin on your cold wallet, you're 100% responsible. If you are using exchanges, that may provide you a better UX, but also, like, it's not really yours. And from the other side, it can feel like, oh, well, there's always someone to blame in case something happens. I believe that the government shouldn't be a babysitter to people. I think we're adults. And creating a framework, like regulatory framework for how you can use your money, which you can invest in, what you can't invest in, how to do it, etc. I think we are able to figure out ourselves. So Liberland's idea is to not to obstruct people with nonsense, and to let them be free and be responsible for their own actions and to initiate their own actions. So we don't have and we don't plan to obstruct people from which currency they want to use.
That's an interesting approach. I mean, however, I'd like to mention here that maybe the everyday John Doe doesn't know how to react or action, on all these different media information that is out there. I mean, I think we can all agree, guys, if you go today on top stories on Google and you type crypto, each and every one of you will see different stories because your algorithm works in that direction. So I do personally believe that we probably need some sort of guidance for the citizens of each government that will also align with the infrastructure problems they need to solve. Liberland sounds like a great place. Maybe we chat a bit more on that later. Like to get a passport there, but I tend to see that the everyday people struggle and they need some sort of direction with all this, information that is out there.
Yeah, I get it. But then it's a question of education. And again, like if you really want to learn something, if you want to be aware, right? I mean, the problem with when there's someone to blame, so we tend to bring less attention to it. So if you know that you're responsible for how you gain your money, how you spend your money, which currency you want to use, and it's only up to you, so you will likely get more attention to it, you will educate yourself, you will put the effort in. But if there's someone to blame, so you won't, but then it won't, in reality, it doesn't provide you safety. If you lose your assets, you lose your assets, and then you will get a nice PR of, oh, we're so sorry, but it won't really solve a problem. So I love and promote self-responsibility in the first place. And I believe that this also increases your own freedom to actually, with higher education, you see more opportunities and you will likely have a better life.
Interesting. I'd like to get the opportunity to ask Loretta about it. I mean, I know all the work you're doing with the regulation and directions, the different governments and stuff. Like, what do you think on these statements? Like, do we really need to protect and overregulate, or can we be a little bit more flexible?
So laws need to be technology agnostic. I don't think a law can back a technology. We've learnt that over many decades. And the man that built the internet is a guy called Robert Kahn. He's my mentor at Open Systems. And he told me a great story once. He said when he built the internet, so he wrote the transmission control protocol and the internet protocol. He sent a message across an open system to a man called Vint Cerf, and that said hello. And in the first 10 years that the internet was created, it didn't have that much uptake. And the government tried to close him down. He was like, no, you can't really close down, it's an open system. And then he said, the following 10 years, everybody wanted to buy him. And he's like, no, I can't, the internet's an open system, I can't sell it. But I think it's very important when we look at not regulating the technology, because we can't regulate code, but we can regulate the players that use the technology. And the average day man that uses digital assets, they still need some level of protection, whether that's their consumer protection. We need people not to use crypto for illicit purposes, and we also need crooks not to run businesses that use cryptocurrency or blockchain. The best example I'll give you is FTX. FTX collapse had nothing to do with Bitcoin. It had nothing to do with the asset. It had everything to do with the fact that the guy that ran FTX was a crook and he had no governance models in place. So that's what we can protect people from, the likes of the Sam Bankman-Frieds of the world, but the technology itself does not need to be regulated.
Thank you very much. And since we kind of talk exhausted about regulation, I'd like to move on to infrastructure again. So are we ready to onboard all the users we want to in terms of infrastructure and seamless integrations? What do you think, Karen?
My view is that we can hear. Mike, okay. I'm pretty much optimistic though. I think there can be coexistence. I think that we need to build laws and regulations that are technology neutral. I don't think it's my competence, neither do I want it to be, to regulate technology. That's somebody else's regime, right? Mine is to look at what do central banks do, what do regulators do, what do commercial banks do, what do financial institutions do. And my view is that we have certain skill sets on each side. Central banks will continue to be regulators of banks. They'll continue to deal with financial stability. They'll continue to ensure that they do monetary policy, right? Commercial banks or financial intermediaries, I think, can do 3 C's, right? They will continue their customer relationships, right? They will continue their compliance, and they will continue to ensure that the system is strong. That is what I think the commercial banks need to do. They have their strength in that regard. They have their strength with their customers, right? They have their strength in custodial affairs. So custodial affairs, customers, relationships, and compliance. Now, as it concerns technology, as it concerns digital finance, virtual assets, they have many roles to include financial inclusion, to include ensuring that transactions are cheaper, faster, and reach the common man. I think if we look at those as, say, 3 pillars, central banks doing what they're supposed to do, central banks / the regulators, right? If you look at the commercial banks doing what they're best at, and digital finance providing these opportunities, I think we can coexist, and that will result in a more efficient system.
Great. So we need the players around the technology and possibly on a correct speed, as Andre very rightly mentioned, to integrate with all these systems and onboard the users. We're about 3 minutes to the end of this panel, so I'd like to address the real elephant in the room. How do we get people to trust these technology and currencies to be integrated into their lives? I'd like a short, approach from each and every one of you, because we talked about regulation and speed and infrastructure, but I think at the end, what is, the backbone of this widespread adoption is trusting this, movement. So I'd like to start as, the beginning from Andre, and then we go all the way back to the room. I'd like to hear your approach on that.
Yeah, every innovation starts from startups that believes in the idea, and then the idea matures over time, and the average period of time that takes to any idea to mature is like 30 years. So we started with startups, then we see different neobanks like Revolut in your pocket integrating crypto, and then crypto coming to your bank. When you see in your account fiat and crypto in your traditional bank, it means it's already there. And the trust is there. But regulation, I don't agree about lack of regulation. Regulation is not for me, for a person. It's for the companies like AMI license. I need a crypto license for different entities that they're not stealing my money. Not me personally, of course. So when we'll see our crypto in our traditional banks, like Hellenic Bank or all the other banks in Cyprus, different banks all over the world, is there.
So through trusted institutions, you're saying. We're kind of like borrowing the trust coming from the system.
Yeah, you need to see to believe it. You need to see that the bank, your bank, that you trust to take your mortgage, you trust to do all your payments, and you see crypto in your bank, it means you trust it because your bank trusts it.
Interesting. Samuela?
I'm not here to impose my standard on others, so if you don't want to use crypto, that's fine with me. How to make people trust more? I believe, again, into rather individual self-responsibility. So I believe into, say, having cold wallet rather than handing over responsibility for my assets to the institutions. But I understand, I believe this is a good approach for regular users who are more conservative and want to have this kind of institution there. So yeah,
you're meaning like 95% of this world.
I'm just boring, it's fine.
Yeah, okay, let's continue this conversation over the lunch. So please, a quick sentence and then we closing.
I think we gain trust in drops, but to lose it in buckets. Same thing with reputation. I think that the central banks, regulators, and commercial banks have built this up over years. I think if the players can collaborate and cooperate, and there's interoperability, I think that will help to push the agenda of ensuring that, well, we can't ensure, but increasing trust and the reputation of a system. And I also think that if you have a platform and a framework that includes a well-regulated, not onerous, right? Not onerous, but a well-regulated system, I think that will go a far way. Thanks.
Thank you very much. A quick sentence and we're closing.
So the irony is that we talk about blockchain and crypto and they're built on trustless systems. They're built on maths. I trust that 1 + 1 = 2. I don't need to trust an intermediary. But the problem with our industry, and we've seen it over the last decade or more that I've been in it, that we can't trust the players that use this technology. There's still a big trust issue. People don't trust crypto. They don't trust the speculation of it. They don't trust the projects that they've lost faith in. So there's an ironic difference between the trustless systems and the trust that the people that code these systems we have to put in. I think we've got a long way to go to make people really start to have trustless systems that work. I think things like Liberland are a utopia and we're still a very long way away from that. But in the interim, we can only trust the people that build these systems, and they have to have regulations in place to make sure that they're transparent, they protect people that use them, and that we're all in a very safe environment.
Thank you very much. So at this stage, I'd like to thank you all guys for being here with us, and I wish you a great lunch, and we'll see you in the afternoon.
A big thank you to all our speakers and presenters for their insightful sessions so far. Now, it's time for our lunch break. It will be just a little bit shorter until 1:30, please. So please be sure to return on time for the afternoon sessions. For our guests who have received lunch vouchers, please proceed to the Lanes restaurant. It is located at floor -1 below this hall, and present your voucher to redeem your meal. For those without vouchers, please bear in mind that lunch is exclusively for ticket holders. Enjoy your break, and we look forward to seeing you back soon at 1:30. Thank you.
delivered the message. Now what?
Now let's check the second message.
Ready?
Mum, The doctor's deodorant discovery now contains M3. Got that? M3 to stop odor 24 hours a day.
I feel like smoke, a string vibrating in the mist, a joke violating when a punchline hits, a song right when you start singing along. It's like ripples in the pond, like pickles in a jar, like fog. You couldn't see me with your lights on, navigating on a path unknown, gravity gone, rather it's strong, grabbing me onward, long and beyond, an ominous calm. My cognizance blurred like lines of a poem drawn with a mind of its own. I feel like that. I feel like I ain't ever coming back. I feel like tar, dinosaur bones inside my heart, trumpets and trombones and orchestras in the dark. I feel like rain. Everything is separate and the same. Cracks in sidewalks, silence between names like ash. Long after the fire flames pass, when the fighter planes crash and the souls that remain dash. Like plastic bag flying through the night, despite weight over eyelids and sci-fi sights. Like a tyke introduced to sugar-induced spikes past his bedtime, contradicting parental advice. Like I is a word that is blurred in its meaning, and why is never heard like the world's intervening. I a rhyme with the reason, even if the saying says otherwise. I feel like dust, connected by a static that I trust. Lust, hungry for an existential touch. Must I feel anything at all? The biggest thing in life on the scale is very small. I feel like knowledge itself, intangible and eerie. Like I'm screaming at the people, but no one can even hear me. I feel like
Ladies and gentlemen, please make your way to the hall as we're going to start with the afternoon session in about 1 minute. Thank you very much.
Practical obstacle hopping like hopscotch in the back of a parking lot. All the particles in the pot create a masterpiece of evolutionary scary science, where every single spirit is created in alignment. I steady ponder if I wander any farther, if I fall into the squander of the prophets and the bomb blitz. The bell rings, the bong rips. The time tells you to be on your shit. Force quit the program and forfeit the war, man. I don't wanna have any part of it, but it's not up to me, so uncomfortably I'm just sitting as a stationary target. And and I know those cries, but my fears stay frozen. But I don't know why when I hear it in my mind, every single thing we're doing here is hopeless. I keep the news off, it's all negative, but it'll find its way back through the cracks in the penmanship. Mindless chatter, I get madder like it matters. Brighter passion, I imagine. Two sides to every coin, but a human has never-ending sides. Are we living in the Truman Show? Are we doomed? If so, what do we do? And if it was up to you, would you stay or start moving? 3 W's appeared before the internet. WW3, is it imminent? Politicians are the ones who lack experience in real life situations. Really, that's some eerie shit. A bunch of old folks staring at some papers. Never had a psychedelic interaction with the nature to see that everything we see is all connected. Rather focus on the pockets in the office and agendas. No wonder they're out of touch. They just focus on the funds while the kids do drugs and get their hands on guns. They reprimand lost ones based on false pretenses and shoot down sons that are all defenseless. Then have the nerve to mention what they see as offensive and regulate the television screen with the censors. My consensus is that the government is senseless. The people have the power in their hands to finally end it, but the power shift is hourless and it could take a lifetime to break down the cowardice that now appears as evident. This is my sentiment I'm reading. Regards, a highly sensitive sentient being.
And we are now entering our afternoon session. After our short lunch break, thank you to all those who are here on time. And we're going to start right away. We are now diving into a fascinating fireside chat session on foreign direct investment in tech as a driver for innovation and growth. FDI is a key driver in advancing technology and fostering economic growth. And today, we'll explore its role in shaping the future of the tech sector. I am pleased to introduce our speakers. Pankratios Vanezis, board member at KPMG Cyprus, who will moderate the discussion, and Marios Stanoussis, CEO of Invest Cyprus, who will share his expertise on FDI and its impact on the tech industry. Let's welcome them both on stage, and let's enjoy the fireside chat session.
So good afternoon, everyone. Hope you all had a great lunch. I know Justin didn't exactly allow me to have mine, so to be honest, I'm extremely excited. Mario's is one of those rare gems that we see across the globe. He's a globe trotter. This is what I usually say about Mario's. He's everywhere. Everyone is talking about his endeavors across major emerging markets, and he's appearing on the news and media in the likes of India, which is extremely rare for a Cypriot government official to be appearing in the news in countries like India. So it's with great joy that we are having this discussion today. Maria, what a pleasure again. I know we are having a lot of chats offline, but if you would like to summarize with one sentence, what's the Cyprus tech FDI story in the recent 5 years within your tenure? I mean, especially for people that are not very much aware of what's happening, can we have a sort of a single line in terms of where we are?
Thank you, Bangradios. Thank you for your kind words. Definitely, with one sentence, I would say that Cyprus is pitching a lot above its weight, a lot more in terms of technology, innovation, and the tech cluster.
That's amazing. That's amazing. I like the analogy. We are punching above our weight, which is great. I mean, what do you consider are the right ingredients to have technology and direct investment in technology happening in the island on the one hand, and what do you think it's the key primary developing factor for a country like Cyprus having a technology sector up and running and really vibrant?
Yeah, this is definitely not something that happened just by accident or by a few instances that that stars were aligned. This has been a process where it started basically back in 2018, long before COVID, where the government has basically decided to see how we can help companies that are already established in Cyprus to grow and expand their operations here, to contribute to economic development and job creation, and at the same time bring know-how and innovation into the country. So what we did, we went and asked most of the companies that were here, what do they need to grow, and most of them, they came back with the response of talent, talent, talent. So for the tech companies that were here then, 2018, talent was the single most important criterion that was needed to be available for them to be able to increase their operations and grow. We had a very good tax regime, which was providing incentives, and a good IP regime that was also very attractive to tech companies, intellectual property regime. There was ease of doing business, but we had a major issue with the talent. So we requested from these companies to provide us a list of professions in the IT industry where we would be able to see how we can get them into the country with a fast-track procedure. So if I remember well, there were 29 specific jobs from AI, cybersecurity, big data, and so forth. We took this list as Invest Cyprus to the Minister's Cabinet through the Minister of Energy, and we requested fast-track procedures for anybody coming into the country from non-European countries to be able to work in these companies. So in a few weeks later, the Council of Ministers passed this as a regulation where individuals, experts, talent in IT could work in Cyprus with fast-track procedures, getting the working permits maximum 4 weeks. And it was then the so-called Business Facilitation Unit working under the Ministry of Energy, which evolved now into a Business Support Center. So this was one very important, let's say, initiative that helped. At the same time, other measures were introduced by the government later, which enabled the reunification of family. It was easy to get the whole family in Cyprus. Also for the spouse, for example, it was, there was a provision to be able to work in Cyprus if the family was coming from non-European countries in Cyprus. So the plan of family unification and the children being here was also very helpful in getting the talents in these companies, which after some time we have been seeing this in practice. It enabled expansion, it enabled growth, and then we have started also seeing new companies, IT companies, coming into Cyprus and capitalizing on the advantages that we are offered by the government through this fast-track support mechanism.
Mariamo, to be honest, I'm fascinated by this journey. And obviously, I totally agree that it doesn't happen overnight. I mean, do you think, I was reading on the Economist Intelligence Unit that there is a correlation between the amount of human talent and innovation. So does that mean that the foreign direct investment as a propeller for growth in technology does not necessarily come in terms of the euro invested at a single point in time, but we are more focused on how the talent is developed and maintained in a smaller market in an island like Cyprus?
Of course, it's very crucial for the talent to be maintained, and it's very correctly correlated. Innovation and talent go together, and that's why we are continuously trying to see, the model that exists and keep it polished so that it keeps working and the companies still get their talent from overseas if they cannot source locally and be able to grow. The Financial Times and FDI Intelligence Journal, especially because of the tech companies coming into Cyprus, has in 2022, if I remember well, has shown a 600% increase of FDI in Cyprus. It was also during COVID, and most of it is due to the technology companies that came into the country. In order to maintain and even enrich more this situation, the government for the last 2 years and a half, accelerated and offered new tools for maintaining exactly, talent and getting more talent into Cyprus, which is very important for innovation.
So we've got a longer-term vision. We've got the euro spend at a single point in time, but we will also have policies and processes in place to maintain the talent to accelerate this innovation journey for Cyprus. I mean, have you seen anything in the last 12 months that really turns your head at least, in terms of something exciting that is happening for Cyprus?
We are seeing top brand names in fintech, for example, that are increasing their presence in Cyprus. We are seeing very reputable groups now that are not here trying to set up base here. I cannot mention any names, I'm sorry.
So you are breaking some news here as well.
Kind of, yes.
Kind of, okay.
We have seen, though, when it is publicly available, the names of US companies that started coming into Cyprus especially from the president's trip to the USA, Mr. Christodoulidis in April. in 3 cities, in New York, in Texas, and in San Francisco. And following that, we have also new companies coming from India, which already some have established presence here, top names, international groups. Last week we were in India, which was again a great opportunity to have more opportunities open up for Indian companies that want to scale in Europe. So the trend continues and is continuing, I would say, with much growth, more growth than previously.
Amazing. There was a question on an offline discussion. Are we moving for our own technology park? Are we making a step closer to it? I saw stuff, Rihanna, and I thought of asking that question because it was part of the whole offline discussion. So yes.
Well, the government has decided to again request interest for the technology park. We know the story of the past, no need to repeat it. It remains to be seen, but from the discussions we had, it seems that there is some serious interest. So
Wow.
we are hopeful that this eventually will develop with reputable groups being involved. But
Again, FDI related.
again, it could be synergies with local companies as always,
Okay.
but FDI is there already. FDI interest is there already, and we are, let's say, hopeful and confident that this will.
Okay, I mean, I'm noting it down. Mariam, we're looking forward to some interesting developments on that space. Now, obviously, we do understand, and I'm very conscious in terms of time, and I wanted to ask you this question, because we are promoting Cyprus that everything is dandy and rosy. Every market has its friction. What do you think our biggest challenges and the things that we need to be working together in terms of providing solutions?
Yes, definitely there is always room for improvement in any country, in any sector. The fact that at the present time the tech sector is the #1 contributing sector to the economy of the country, with more than 4 billion euros going every year into the economy, thousands of jobs, and almost 50% to the GDP of the country. It's a big success already, but definitely we need to do more with red tape, bureaucracy, as exists in many countries. We need to streamline procedures more. We need to have the time to market being lessened, less time to market and licensing, especially when it comes to licensing. For
Totally
example,
agree.
EMIs, PIs, banks, whether it's under SAISEC or central bank or any other regulators, we need to make sure that this is streamlined. And generally, anything administrative needs to be polished so that we save time for the investors. And in this way, we also have more results and faster results for the companies, contributing also to the economy and more jobs created earlier.
But just to highlight for those that may not be so much into it, Invest Cyprus works in parallel with the government and is not part of the government.
Exactly. Invest Cyprus belongs to the government.
Obviously, yes.
It's the national investment organization for promoting and facilitating foreign investment. But we work closely with all the ministries. We don't have the ability to, let's say, have executive powers. But we make suggestions to the lawmakers, to the ministries, to further enhance the investment environment. So proposals that would help streamline procedures, proposals that would help the foreign investment cluster and the economy are welcomed by the ministries, by the relevant ministries. And this is what we do. It's part of our mandate. One part is the enhancement of the investment environment.
and on that part, what would be a single policy change that, in your view, will help unlock the next wave of this investor flow in Cyprus?
Well, a single policy change.
One, or you can give me two. If we can change two or three at the same time, that would be great. But I mean, in terms of which one do you think will bring the biggest effect?
Well, there are several options that could be suggested.
Okay.
But I leave this to the policymakers, the ministries, which basically make the policy to suggest those. Definitely, from our side, we would like to see more connectivity in terms of the airline connections. So a policy that would further help the connectivity of Cyprus globally would be very helpful for the economy and for the investors. So I single this one as very important.
I totally agree with you. I also single out the connectivity, the airline connectivity. We are a small island. We are at the crossroads of various continents. We should be able to reach destinations a lot faster and obviously make your life a lot easier. I see you traveling and it's taking a toll on you. I do see the benefits. And also, I need to highlight that it's refreshing that we see the government also doing a global journey in making sure that we attract foreign direct investment. Now, as Marios, we don't speak, obviously we will be speaking. In the next 5 years, what do you want to see in Cyprus? What is your vision in terms of where you want to see Cyprus in 5 years?
Definitely, I would like to see Cyprus as a developed, modernized nation, which it's not that way, by the way, where companies can be established and enriched tech sector, but also other sectors could be enriched of the economy with foreign direct investment. A model nation where people, families, business people can enjoy. I think the lifestyle in Cyprus says a lot for those that are here. I would say enrichment and work on the right track, for the good of the country, for the good of Europe, for the good of the region, and for the good of the whole world.
So Cyprus evolving as a regional hub, while at the same time maintaining this progress through let's say, the happiness index. I'm working on a happiness index. We want to see how this is also impacting and why people that come to Cyprus are actually becoming more happy. And on that note, and right on time, Maria, is there a question I didn't ask that you wanted to sort of... No, I covered everything. Okay. Now, obviously, Marios, to his great credit, has done a lot. And it's not often that I praise people, but obviously hearing that, seeing posts that you are one of the most influential in terms of FDI globally and recognized, and you put us on the map, that's a great respect. Well done, Marios. Keep up the great work. And I think we've seen...
Thank you. It's not me.
I know it's a team effort.
It's a team effort.
There are people behind you. I understand.
It's a team at Invest Cyprus. It's different people from the ministries. It's the private sector. It's the consultants. Everybody. We are working together and speak daily for making Cyprus better. This is our bet, and we are winning on it, and we want to keep doing it for the good of society and for the good of the people.
Thank you. Thank you, everyone. Thank you. Mario, well done. Amazing.
Our next session tackles a vital topic: green bonds and climate funds. How can financial capital drive low carbon transformation? As the world accelerates towards sustainability, green finance plays a crucial role in funding the transition to a low carbon economy. Today's panel will explore how financial instruments like green bonds and climate funds can mobilize capital for impactful environmental change. Moderating this discussion is Spiros Ieridis, Manager of Asset Management at the Cyprus Investment and Securities Corporation. Joining him are four esteemed panelists: Cleopatra Gitti, INSEAD Certified Independent Director and Advisor to International Organizations and Governments; Stavriana Kofteros, Founder and Partner at W11 Ventures; Andreas Charidimou, COO of Mega Equity; and Ksenia Dimitrieva, International Business Developer at C-Bonds. Let's welcome Spiros and panelists to the stage.
Can you hear me now? Okay, it's working now. So good afternoon, everyone, and thank you so much for joining us today. It's a pleasure to be here at Wiki Finance Expo. A very big thanks to the organizers for setting this up and inviting us to participate. I hope you all got to enjoy lunch today. How many of you had salad today, by the way? Can you please raise your hands? You know, it's that green thing on the buffet, yeah? A lot of people, yeah? Well, in case you didn't have enough, today we're going to be serving you with a lot of green stuff, yeah? So we're going to be giving you a lot of green bonds, green funds, green tech, green tokens, green, you name it, yeah? So keep the appetite. So we're living in a pivotal moment today where climate change is no longer just an environmental issue. It's also a financial one, yeah? So our panel today will explore how two very powerful instruments, green bonds and climate funds, are actually working to drive the critical transformation of the economy to a carbon neutral economy. Before we start, please allow me just a couple of words about myself, my firm, and our experience with climate funds and ESG investing. So I have more than 17 years experience spanning from trading, Forex, I even work for the CISEC regulator, for Bank of Cyprus, and I'm currently leading the asset management team at Cisco. So I've seen the investments from all the sides. Something that we've been observing recently is a demand, especially from institutional investors for green investments, ESG investments, or sustainable investments. So a lot of words that we're going to analyze today that are used interchangeably. So at Cisco, we're very proud of having recently launched an innovative ESG investment solution, the Cisco Sustainable Portfolios, in a strategic collaboration with our partner Schroders, which is the largest asset manager in the UK. And they are actually a global expert in terms of ESG. We're very happy to be able to offer a really robust ESG solution that basically picks the best-in-class climate funds and covers needs of clients, covering all risk profiles, and importantly, with ticking the regulatory requirements for compliance reporting. I would like now to pass it on to my co-panelists for a brief introduction about themselves before we can continue with the Q&A. Cleopatra, would you like to begin?
Hello. Well, welcome to all the people who flew from very far away to be here with us today. Thank you for joining us, and thank you, Spiros, for leading this panel. About myself, 15 years of governance experience, sort of board governance that looks at the stress assets on climate and why these are relevant to governing our businesses in a sustainable way, and what are the metrics that determine sustainable business. And 30 years experience in the advisory world across Europe, Middle East, Africa.
It's a lot of experience.
For governments and multinationals. So thank you for having me today.
And now Stavriana Kofteros for a brief introduction.
Hi, not good morning anymore. Hi, everybody.
Good afternoon.
Pleasure to be with you and looking forward to a very interesting discussion. I'm Stavriana Kofteros, founding partner of W11 Ventures as a growth and innovation advisory and venture friend. So we're in deep tech, and what we love doing is scaling deep tech companies, international deep tech companies, hopefully from Cyprus as well.
Thank you so much, Stavriana. Andreas, would you like to give a brief intro?
Yeah. Hi, everyone. First of all, I would like to thank the organizers for the invitation. I'm Andreas. I'm the Chief Operating Officer at Mega Equity. And we have recently been involved in the issuance of a green bond that has been listed in the Cypriot Stock Exchange. So we're ready to jump in the discussion as well.
Thank you, Andreas. And now from Zenia Dimitreva, a short intro, please.
Yeah, sure. Good afternoon, everyone. It's a great pleasure today to be here. My name is Ksenia Dmitrieva. I'm the international business developer at C-Bonds, and we operate as a data vendor. So that's why today I will show you some visualizations which are very helpful for those who are interested in green bonds, in the ESG sector in generally. So keep it up.
Thank you so much and welcome to the panel. Cleopatra, if I could begin with you the Q&A. So earlier on I mentioned like a lot of terminology which maybe some of the audience are not very familiar with. Can you help us with providing some definitions, let's say with the basics of the title of the panel, let's say the green bonds and the climate funds. So basically what are these and what is the combination, let's say, with the transition to a carbon neutral economy?
Yes, thank you, Spiro. So green bonds are more than a financial instrument. It's another financial instrument, but with a promise to finance transition or transformation to climate-sensitive projects or missions. Structurally, they're like traditional bonds, but they with one key difference. Proceeds are earmarked for green projects. And this distinction has created what we call the greenium, which is it creates a strong demand for issuers to borrow at slightly lower rates, while investors make a significant measurable impact. And they benefit from the impact the green bonds create. But green bonds are not the only tool. Climate funds, whether mutual funds, ETFs, or private vehicles, pool capital into diversified green portfolios. So they complement green bonds by scaling participation from governments, institutional investors, and retail investors. So together, they are the twin engine of climate finance. So I'll stop here, but...
Hello. Thank you so much for that. If I may ask a follow-up question on that. So you have a tremendous experience from working with boards and advising businesses on various aspects, strategy, and so on, including sustainability. Can you please mention, so that the audience can understand, why should actually some profit-making company care about sustainability and this transformation, the so-called, I mean, apart from being obviously a good citizen, which is nice to show, is there another actual tangible benefit for companies to go through this process?
Well, there is no other way than do sustainable business because the planet is so stressed and we feel climate change. Everyone feels climate change. And we feel that resources are getting scarcer, whether it's water or supply chains get. So unless we learn how to create or generate our business in a different way, more climate-friendly way, it will not be profitable business. So there is only one way forward, which is using capital to transform our business. I wanted to talk a little bit about governance and why green bonds and climate funds enhance the creditworthiness of an organization or a business that decides to deploy it. I know Xenia will talk about data, which is a very important part of transparency.
Important indeed, yeah.
So I look forward to her presentation. But for markets, and especially for the audience that we have here today, governance, the transparency of the information, where the money will be raised, how it will be used, and for what return it will be used. Governance creates liquidity and transparency. For investors, it creates confidence, which is a very important part of the market. For regulators, it means standards and incentives. And for rating agencies, it means independent checks, which are very, very important in delivering value, right? But looking ahead, I know the audience here is very tokenized and
it's
driven.
very fintech.
Very, very tokenized.
Actually, hold that thought about the future. We're going to talk about it in a while.
Okay.
I'd like to go to Stavriana now, please, and ask Stavriana from your role as an advisor to deep tech venture capital funds, and also from your participation in various committees, for example, the Investment Jury Committee of the European Innovation Council for European Deep Tech Startups. Can you give us some insights from your experience to what extent such entities are actually directly implementing ESG projects or are undergoing a transformation towards sustainability?
Obviously, my approach is going to be very biased and skewed, so I do have the venture capital type of approach when we talk about that. Well, we have some facts. Facts being, or consider them conditions at least for Europe, right? It's the Green Deal as net zero, as zero carbon, etc. That creates costs for European businesses and anybody who wants to do business with the European Union, right? So we need to become competitive, though. In order to become competitive, we need to be able to invest in technologies or in funds that invest in technologies that create such competitiveness. So if we're talking about not just climate funds, but climate tech, energy tech, green tech, whatever you call it in the realm of tech, that equalizes that. And as a fund or an instrument, whether that's a green bond, is able to finance green projects in green tech that brings at least at par returns with conventional, then we're onto something, because it is what it is, right? There is net zero, we have the terms that we need to meet, and if we have companies that are stationed in Europe, then we still need to be competitive internationally, or if we hear what the politicians at European level are saying, we need to become a very competitive continent. To be able to achieve that, first of all, we need to make sure that we invest in tech and create sustainable companies, but not sustainable just in the terms of green or not green, because it's not about goody-goody, but sustainable in the terms of returns to shareholders with a long-term approach and not just a quarterly approach. hopefully. So that's the big bet for me.
That's very interesting. Thank you. So basically, you're saying that sustainability can tick two boxes in a sense: profitability for the company and make it more sustainable, and also competitiveness over the long term. Yes.
Absolutely, because everybody's human, right? And greed is always a subject of humans, and markets rarely regulate themselves. So you always have different incentives. So we need to make sure that these things align and they go hand in hand. So we'll make good while we're also creating wealth, because sustainability without creating wealth, not just for the funds, but for society, trickling down, then is not going to be sustainable in all the big essence of the word.
Okay, thank you for that. Going now to Andreas. Andreas, I understand that you already mentioned it, that you were active in green bond insurance, and so I'm guessing you're quite experienced in this respect. So since you have this experience, can you share with us what are the most let's say important regulatory requirements when somebody is issuing or listing a new green bond onto the market?
Indeed, there are, for answering that question, we've got to take it a step back and, split the green name into two categories. The one can be, I can self-claim that the issuance of this bond is green, or you can independently verify it through a various set of international standards. One very important being the Climate Bond Initiative, which is a non-profit organization that does that. It provides a set of standards to certify that your issuance follows, the Paris Agreement standards with regards to, being green and renewables. And there are some other standards within the initiative being, you need to third-party verify that, the issuance of that bond and that the proceeds that are being raised are directed to that project. And that project is indeed used for, green scope, being, renewables and you name it. What's important is that the independent verifier needs to be an expert on that specific project. So if we're talking for a solar panel, it needs to be an expert in verifying that indeed it's a solar panel and the proceeds are, and we're talking about science expertise. So yeah.
So verification and transparency is paramount. Yeah.
It provides investors an extra level of trust that I'm indeed investing into something that's green, and it's not. We've been hearing recently the term greenwashing, and it's not something that I'm.
I was going to ask you actually later, but since you mentioned it, maybe you can through it now. I mean, can you maybe give like a brief definition of greenwashing? And what are some of the safeguards that one can do to, let's say, address or mitigate this risk?
Of course. So greenwashing basically is, claiming that something is green when in fact it's not. Very, very vague definition, but in a nutshell, this is what it means. So back to what I already said is that when you've got an independent third party verifying that your project is indeed green and it follows the European regulations, SFDR, the EU taxonomy, and all those things, then it provides the investors with a level of trust that it's not involved in any greenwashing mechanisms, and indeed the proceeds are being used for green projects and renewables.
Okay, thank you for that. And now going on to Xenia, I understand you have a presentation, yes, to deliver. Okay.
1, 2, 3. Yes, actually, Spiros, I have something to show to our audience today. So thank you so much, first of all, for your introduction. And good afternoon, everyone who are the fans of salads. Actually, me too. So as the concluding speaker, I'd like to take a practical approach, let's say, and to summarize the key insights we've heard today. So, and to connect them also with the data that we provide, because C-Bonds is a global data vendor focused on bonds. So today, together, these perspectives help us see not only where the green bond market is growing or facing challenges, but also how reliable data can guide smarter decision in financing the low carbon transition. So I will start from, let's say, a small analysis that was performed by my colleagues, actually. So green bonds have moved beyond being a novelty, right? So this year marks a historic peak in green bond issuance, as you can see, so with the primary sovereign placements leading in the surge, as again shown by C-bonds, as you can see here. So governments are increasingly adopting these assets as a mainstream borrowing tool, not, let's say, as an experiment. So, and this scaling up matters because sovereign and corporate issuers alike aligning their funding with climate goals, as you can see right now on the screen. So there are different regional trends. If we take, for example, Western and Eastern Europe, especially sovereign sector, then we will see that the most issuances fall in the 2-4% range, as shown on these videos, which we took actually from our bond screener tool, which you can see right now. So this, we can see also that the Eastern Europe exhibits a wider spread, let's say, starting from around 2% and extending higher. So these patterns reveal not only where financial capital is driving the low carbon transition, but also the differences in investor opportunities and risk-return profiles across regions. So, as we also know, Eastern Europe in particular stands out as a hotspot where proceeds are tied directly to low carbon projects. So it's also interesting to know this, but even as issuance volumes grow, risk remain, right? So as Andreas mentioned about greenwashing, so it persists with some issuers labeling bonds as green without strong environmental criteria. So also investor appetite can be limited since in some countries buyers are reluctant to accept a green premium, slowing also sovereign issuances. And overall, these developments show that while green bonds are increasingly mainstream, their success depends on credibility, transparency, and investor trust. So, for your information, here at C-Bonds, we also provide prospectuses, final terms, and covenants. So we analyze these prospectuses, post the covenants from them. So it also helps you to make the right decision when investing in ESG or green bonds. So just as a conclusion, financial capital can speed up the low carbon transition, but only when it is used carefully, transparently, and at scale. So if we speak about green bonds separately, they are now an important part of climate finance, yet their impact depends on investor trust and clear. So, and actually here is the great moment when platforms like C-Bonds make this possible by showing issuance trends, regional dynamics, yields, historical data, and so on, so that you as an investor, for example, could separate real impact from greenwashing. And in this landscape, when uncertainty is like a desert, we also perform as a green oasis, I would say. I like this comparison to salads, Spiros. So right now you can see on the screen the latest research that our team prepared. It is only about ESG bonds, also like mentioning green bonds. I have it with me, so in case you'll be interested in seeing it, you can just come to me and we will have a look at it. And also you can just scan the QR code to connect with me in LinkedIn via WhatsApp in case you'd like to try these tools on your own. We also have API solutions. You can see it on the banner on the right. So for those who are dealing with risk assessment here, it also could be very helpful for you to try. So thanks a lot.
Thank you very much, Xenia, for a great presentation.
Thank you.
I note you mentioned two keywords, transparency and credibility as very important determinants of value. And since you mentioned this, can you maybe comment from your experience with working with various institutional clients? How can investors balance the so-called financial returns with the goals they have in investing in green bonds and sustainable investments in general within their investment portfolios?
Yeah, actually, according to my experience, we have a lot of institutional clients, and it is very complicated to, let's say, meet these, like sustainability and financial goals. That's right. So again, as from our perspective as a data vendor, here you can look for, let's say, bonds that both meet ESG criteria, like ESG ratings, for example, and the yields. So I would suggest using C-bonds, actually, the bond screener as well, where you can point it out. So that's it.
Okay, thank you for that. Andreas, going back to you again, you also had a lot of experience with managing people's monies in private banking roles and in general. I would like to ask you, do you see a genuine appetite from within Cyprus or maybe from elsewhere? Maybe you have clients for investors actually asking for ESG instruments such as green bonds and climate funds? And if so, is it mostly institutional or is it the retail part as well?
I want to start by saying, like a phrase, like trends change, especially investing trends change. There is demand for green bonds, and there was demand, especially before the recent elections in the US.
Hold that thought about Trump. I'm going to ask about it later.
Yeah. So there is, I believe there is a bigger demand from institutional investors because of not because of the attractive returns, which there are attractive returns in these type of instruments, but mainly because they want to diversify and they want to reach an alternative aspect that they do not have already in their portfolios, and it's mainly stemming from institutional investors. Retail investors need more literacy into this stuff we have been discussing at the panel.
I agree with you, and if I can add also my 50 cents into this from my experience, you're right that we see the most drive from institutional clients, and I would say that most of them feel the sort of regulatory pressure that they need to actually deal with this, and so when they request a mandate, they make sure to include sustainability. But as time goes by, like you said, and they also see that it kind of makes sense from a returns perspective. It can catch up. Stavriana, turning to you again, I know you touched on this previously, but if I can ask, environmental, social, and governance factors, do you see this being considered from the companies that you're involved with as an actual value-adding component, or do they also feel like a pressure to tick the box, like we discussed now with Andreas, that it's something that they need to take into account, or is it a combination of both, or which one do you think is more important, commercial considerations, or let's say regulatory plus something which they feel is value-adding?
I don't think that our pool of companies that we work with is very representative of the larger population of companies, in the sense that we do work actually with a renewable company, a vertical company, green energy group here in Cyprus, and they're also developing a green accelerator that they're launching very soon, and they have a green fund. So they're very particular, they're very driven.
Very specific, very driven.
It's the core business,
They
right?
believe in this.
Yeah, they do believe in
Okay.
it. They live and breathe. It's the way they become sustainable by doing it. But it's changing, and we haven't caught up with it entirely, but there's green taxation coming, and that's going to affect every company, whether it's an SME, it's tech, non-tech, or whatever they're doing, because you're going to have higher interest rates to pay if you're not green enough, whatever green enough would mean, right?
Nobody likes taxes.
So it depends. But let's just say that at least in the deep tech world that we particularly work, there's a lot of, shall we say, true interest in green.
That's very encouraging.
But if you allow me to say, I mean, we talk about tech and we talk about AI, all right? It's kind of like the elephant in the room, because AI is horizontal and it's everywhere. And there's a lot of functionalities and a lot of savings to be gained by introducing AI, meeting climate tech, energy tech, etc. But to train the big models, the superscalers, you need massive amounts of power, and that means energy. And energy needs to be sustainable. So if it's not powered by solar or actually nuclear, which is clean, then we're not going to be able to power those data centers that are powering the big LLM. So everything kind of interconnects.
Absolutely, great points. Thank you for that. Cleopatra, going back to you again, you discussed before the trust component created with sustainability and the governance. Can you tell us from your experience any challenges you have encountered with when you advise such firms during this transformation, and how maybe these have been resolved in practice?
So a couple of points. The first has to do with companies understanding how green bonds or raising capital for green transformation fits into their capital structure. And I think that's a job for you and probably Andreas, right?
For the investing part.
Yes. I think consistency in how you collect data that are aligned to your project, that are aligned to your financial return on the investment is a big part, so consistency. And then it's all the due reporting. So how does the green reporting fit into the overall financial reporting, which is very important. It's not a standalone language. It needs to fit into the financial return to the investor, raising capital through green bonds or climate funds. So I think it's transparency. It's being clear of what is the delivery, what's the return to the investor, how you monitor it, and how it aligns.
You need data, yeah?
Data and standards, right? Rating agencies have different standards, so you have to choose which rating agency standard you will report on.
And they are not very uniform currently, right? There
Not
is a
very
variation.
uniform. Even though the EU has its own taxonomy, banks, traditional banking is being stress tested on climate. But I think for corporations, it's about understanding how green bonds and climate funds fit into their capital structure, cost of capital, return on capital invested. So I think those two need to go together. But one key point is that governance, as I said, is that bridge between trust and transformation. So if we think about it in that way, then whether we use token finance or whether traditional finance, it's the same principle.
Trust is paramount. Thank you for that. The next question is a quick one, and it is addressed to all. Andreas already mentioned it during his. So I wanted to ask you all, obviously the election of President Trump has really sent some shockwaves in global markets. I mean, we've seen the tariff wars, the disruption in the political status quo, and so on. President Trump also clearly said that he's not a very big fan of sustainability. I would like very briefly your thoughts on what you think the impact will be currently and also way forward into the future, even after Trump finishes his presidency. Cleopatra, maybe you can begin.
Yeah, so sustainability or greening is not an option. I think business understand it's not a political narrative. It's the sustainability of the business. So having scarce resources, a stressed out planet, consumers that can afford or cannot afford to consume, these are sustainability issues that you have to tackle as an organization. So it's not an option not to be sustainable. It's the art of doing business these days. Technology is an enabler. Capital markets are changing in the way they stress test capital. So I think everything comes together and it's not an option.
So you're optimistic that the trend will continue and accelerate?
Otherwise, we won't have a planet to live on, right?
Okay.
Or consumers to consume.
Stavriana, are you an optimist about the trend or not so clear-cut?
I'm always an optimist, but I'm very cynical. So this is not a political comment, but I'll tell you what I think Trump is. A massive wake-up call, especially for Europe. So I don't know, whatever he believes about sustainability, the truth of the matter is what happens on the ground. And what happens on the ground, he listens to the tech companies. He wants to make America great again by enabling the US tech companies. And most of them are AI. So he needs to make sure they are powered. I mentioned before powering the data centers that are going to run the big large language models to power the AI, because that's where the race is happening now. It's like Star Wars used to be before. That's on the one hand. On the other hand, it was a massive wake-up call for Europe, because we're now talking about strategic technologies and strategic sovereignty, and that also have to do with green tech, energy tech especially, and now we're investing in it. And it's not just about incurring, putting a burden on the European companies, whether they're maritime. So let's not forget, when we talk about net zero, transportation is the biggest contributor to carbon emissions, right? And stuff still needs to move around the globe on ships. And they travel, and they're going to dock in a European port at some point. They still need to be green. So there's a lot of innovation that needs to happen, and it needs to find itself and commercialize in the market, and there's only one way to do it. So it is about making sure it's sustainable in a profitable way that creates wealth, and not just the green taxation kind of burden or whatever other burden that makes us uncompetitive. So it woke us up, hopefully in the right direction, and hopefully we shall remain awake through this competitiveness
I like
race.
the comment about the wake-up call. I tend to agree about this. I think Europe is finally realizing that it's time to, instead of just being a champion in regulations, which is good to have regulations in place, you need to do other things as well, like invest in technology, and because the other major powers, they are way ahead, the US and China, and Europe really needs to catch up. Andrea, would you like to add anything onto the Trump discussion?
Yeah, I recently came up with a funny definition into green bonds. We define what greenwashing is, all these things. I've heard green hashing.
Green hashing.
Green hashing.
Can you define it?
Where companies don't really find the need into, releasing information about their green projects and their green initiatives, after the election. There has been a rollback in the subsidies in the US with regards to, renewable projects and green projects. So there is a current negative trend, but as I told in my previous point, trends change, so you never know.
So you're also optimistic for the longer term, yeah?
Yeah,
okay.
yeah.
Thanks for that. Zeng, in the interest of time, I will not ask you the same question. I think it was exhausted. The next question, again, it's addressed to all, and we're sort of running out of time. Just let's say to finish, hopefully on a positive note, and connect this all with fintech and tokens and something which our audience probably can relate better. How do you see the way forward with these instruments, the ESG instruments, green bonds and climate funds? Do you see a future of tokenization for such instruments? And if so, how would this help the transition to a low-carbon economy?
It's actually a very nice question. Thank you so much, Spiros. Well, I have spoken a lot today with different people here at the WikiEXPO. And to those that I have spoken to, they said that in any case, bonds, let's say green bonds, they will be usually used for portfolio and so on, just to balance it. And as for tokenization and crypto, everything, we're just let's say, bond guys at C-Bonds. So we, let's say, bonds is our passion. So that's why it's a bit complicated for me to comment on this question. But I know that bonds are the heart, of portfolio in any case, let's say.
I think we ran out of time. If we can have just a couple of finishing remarks from each of you, if you have any last remarks, and maybe connect this with the last question. Just 1 minute each, please. And Andreas?
Again, it's important to understand, what green bonds are, literate people, literate what projects are the funds that are being raised through the bonds are being used to, and I do believe that there is need to be a trend towards investing in renewables and in greens, because we need to save our planet.
Thank you so much for that. Stavriana, a quick remark maybe?
I don't think I have anything intelligent to add other than that. Let's all try to not think of the long term like economics will say that in the long run, this and that, we're all dead in the long run anyway, but at least in the medium run, let's make sure that we create sustainability in all the senses of the word, to make sure that we have companies that are going to be surviving and thriving, and a planet that's surviving a planet, because I don't think we can innovate fast enough to go to another planet.
Probably. Thank you for that. Cleopatra, last word?
Yeah, just that politics is changing, trade is changing, finance is changing. We see the traditional finance about to converge with digital finance, especially for this conference here. Green bonds and climate funds are an essential part of a capital structure as we move into a transformation or change of the world. So we shouldn't ignore it. We should try and understand it and deploy it.
Surely, very good points. Do you have any questions from the audience, please? No? Okay, I think we can wrap it up. Cleopatra, Stavriana, Andreas, and Zenya, thank you so much for your inputs. I really enjoyed our conversation. A big thanks to the audience, and I wish you enjoy the rest of the conference. Thank you. Thank you so much.
Thank you very much. Our next session explores one of the most transformative forces in finance today. How is artificial intelligence shaping the Cyprus fintech landscape? From predictive analytics and risk management to personalized financial services, AI is rapidly redefining how fintech operates, and Cyprus is becoming an active player in this evolution. Moderating this exciting discussion is Andreas Livadiotis, CEO of X-Valley Technologies Limited. Joining him on stage are our esteemed panelists, Andreas Spiridis, CFA, Head of Risk Advisory, Quantitative Risk at Grant Thornton Cyprus, Nicolas Marcou, Head of AI Eclectic Consulting, and Volodymyr Zhukov, co-founder of IngestAI.io and venture partner at Network VC. Please join me in welcoming the panel to the stage. Thank you.
Hello, good afternoon to everyone. Welcome to an exciting panel, AI. Please let me introduce to my fellow panelists. Andreas, would you like to start with introducing yourself?
Hello. Hi. Hi, Andreas.
Hi.
Thank you, first of all, to the organizers. My name is Andreas Spiridis. I am leading the risk advisory and quantitative risk team in Grant Thornton, Cyprus. And I'm also the vice president of the CFA Society. So my main job, my main technicality is I am a quant. I help financial service providers measure their risk and mitigate it.
Thank you. Instead of Mr. Dimitris Kouroudis, today we have Nicolas Marcou. Nicolas, would you like to introduce yourself, please?
Yes, thank you. Hello, everyone. My name is Nicolas Marcou. I'm the head of AI at Eclectic Consulting and member of the AI task force for the government. My job is to help companies create their AI strategies and their implementation plan.
Thank you, Nicolas. And the last one, Volodymyr Zhukov. Would you like, please, to give us an introduction?
Hello, my name is Volodymyr Zhukov, and I'm a venture partner of Network VC. It's a Californian VC fund, and I'm here to invest in startups and to find some interesting opportunities in startup ecosystem in Cyprus. And also I'm a CBO of IngestAI, and what do we do actually? We help enterprises in the United States to implement AI in their business processes. Thank you.
Thank you, Vladimir. So Andreas, to set the stage, how do you see AI transforming the financial services sector in Cyprus over the next 3 to 5 years?
Thank you for the question. So, first of all, I'd like to talk about a bit what is AI, because AI, probably from the late 2022 to early 2023 AI boom, people think that AI is just Gen AI, generative AI. So in terms of the LLMs, so the large language models, I believe that basically it's the fastest technology that was ever adopted, in my opinion.
Totally.
And the reason why it has been adopted so fast, it's because it's frictionless. It's basically the same as texting with your body. So I believe it's quite saturated at the moment. Yes, we will see more models coming out with more advanced capabilities, etc. But the real growth, in my opinion, is specifically in agentic AI. So basically building agents that can actually perform tasks autonomously. So that's my take, at least on the general shape of where AI is going to take us in the next 3 to 5 years, maybe even less actually. But particularly in Cyprus, I believe the focus should be, and it's already in RegTech and in cybersecurity space, so use of AI technologies in this particular space. We do have a lot of companies in the EMI space, in FX space here in Cyprus, and we do have some cybersecurity companies. Unfortunately, Christos couldn't make it today, but he runs one of them. So I do see an impact, particularly in Cyprus, so innovation coming in this particular space of cybersecurity and RegTech.
Especially now with DORA coming, you will need this extra help.
Exactly, yes.
Great. So Vladimir, how is Cyprus growing in the fintech ecosystem? What unique opportunities or challenges does AI bring in the local context compared to the larger markets? Because let's be honest, the large markets are ahead of Cyprus. Cyprus is behind.
From one point of view, yes, but from another point of view, Cyprus has a very good geographical position, and we see that the world will be diversified. So North America will be one world, Latam will be another world, Africa will be another world. So Cyprus is somewhere between all these worlds, and it can bring a very, very big potential for growth, because we can be a point where everybody is connected, where different financial systems are connected. And of course, AI can bring a lot of value to this process, because first of all, with AI, language barriers not exist anymore, because we have ChatGPT in our pocket and we can talk like 180 plus languages and can understand what people are talking. So that's why Cyprus has a very strong background in fintech historically, and had a very good geographical position, and it can bring a very big value if we will use this chance, because at this moment AI is based on data. Yeah, so if we don't have data, neither model can help you in any process. So if we have data about finances, if we have analytical system, if we have analytical startups, then of course we can have a very big value for different financial institutions, we can say, from all over the world. And we can be a point where all these institutions are connected, and we can be a bridge between different ecosystems.
Okay, that's very interesting. Let's hope we can achieve that. Yeah. And Nicolas, coming from the team of the government and the regulation, what do you think? How can Cyprus balance innovation with security, compliance, and AI adoption? Because, you know, AI can do a lot of good things, but also a lot of bad things.
Yes. All right. So the AI Act, the EU AI Act, passed in 2024, and it's going to be fully implemented in August 2026. It is expected that it will cost around 2 million per company for compliance. Estimates. I'm expecting that cost to fall because of RegTech companies coming to fill in that void. Now, regards the government, it is our job to give clear direction, the regulatory part, sandboxes, and clear directors and key people, so that the companies can interact with and be fully compliant. We have seen this game before. It's pretty much the same as GDPR, right? So there are unknowns on the regulatory part, on the actual laws, but we have seen the actual process run itself, and I think it will, at the end, it will be the same as GDPR. Another person, key person in a company, running the same compliance tests, etc., etc. Now, as far as the other parts of AI, like social disruption and job disruption, nobody knows exactly where is that going, right? From our perspective, We just keep trying to move slowly and not break a lot of things yet. But it's moving so fast that any projection is likely to fail.
Okay, thank you, Nicolas. Andreas, back to you. AI promises better risk modeling and fraud detection. Automation is something that everybody needs. From your perspective, how is AI changing risk management practices in Cyprus financial institutions?
So we have to separate what we mean by financial institutions. So if we're particularly talking about banks that are heavily regulated, I can say that there has been some steps, but not tremendous leaps yet. So at the moment, if I focus on the banks, so they are using traditional machine learning techniques, but in order to take the full advantage of advanced AI techniques, that's still not so progressed. So the reason behind that is it's driven by the regulator. So we are seeing some changes in the appetite of the regulator. For example, the ECB has released an update in July of their internal model guidelines, and they included a very extensive section, particularly on ML, on machine learning. So this is something completely new in the space, and it looks like the regulators are more willing to accept more artificial intelligence, so let's call them the black box models. So a lot of innovation currently in the financial institution space happens mainly in preparing on how to validate these models and how to start and test them. So because, as Nicolas said, it's probably going to be very, very quick, the adoption. So basically, they are acting already in a way of setting up frameworks to basically be able to assess if the models that are developed in AI can actually, for example, not hallucinate or not bring false information. So one area that I've seen, particularly in banks, is use of large language models in order to assist the front office personnel by feeding it in the internal circulars or internal guidelines of the bank. So it's basically acting as a huge knowledge base, like a data bank, that it sources information quickly in order to be able to answer queries from clients, but also from all stakeholders as fast as possible. So where I am seeing it going, however, especially in the fraud detection, I did mention earlier cybersecurity, for example. That's something that we are seeing already a lot of innovation, so outside regulatory space of the banks, for example. So in terms of regulatory compliance and cybersecurity, we can build tools in AI that do dynamic log activity. So they're looking at the log activity all the time and try to match it to the particular regulators. And that will assist in identifying breaches early, even before audits come in or before having to submit something to the regulators. So this is an area that it has been developing even before the boom of 2023, but now it's even growing faster.
Okay, so essentially we need AI to fight AI because the bad guys are using AI in KYC, in cyber attacks everywhere.
Exactly. So I do see a great application of AI, not only in financial institutions, but especially in AML space or KYC. So I know that that's something that has driven a lot of investments actually from Cyprus in the past. I'm not saying that compliance shouldn't be there. Definitely it should be there, but it's a burden on both parties now. And definitely with the use of AI, we can make this as seamless as possible.
All right, thank you. Nicolas.
Yes, sir.
From a national perspective, again, because you are replacing Mr. Dimitris.
You know I'm business, right?
How is Cyprus positioning itself in the AI-driven financial innovation race?
All right. So our main task here is not to become irrelevant in the coming years. You see other countries in the Baltics Lithuania, you see Ireland, you see Malta. Everybody's investing in AI. So we already have the financial institutions here. We have good regulatory overhead. However, now with AI, a lot of these things will happen very fast, all right? So our task here is to enable everybody to use AI while bringing at the same time investment in Cyprus. So we are not an outsider. So we don't have everything outside, right? So we take profits and margins from all the stack, right? So we are fully vertically integrated into the profit machine of AI. This, however, comes with several issues like electricity, water supply, etc., etc. The good thing on that end is like we have a lot of progress and models are becoming smaller and much more agile, and it seems that we will be able to fit it in without having to resort to nuclear energy.
Okay, thank you. Do you think data centers should be hosted in Cyprus for testing?
Data centers, from my regard, are a strategic element of a country. It's not an economic center. If we can have it as a dual use, yes. But imagine, let's say, you have an AI-powered government and giving services to AI companies, and then something happens unexpected. The purpose of the government is to remove such risks, not add more. So if we say everybody rely on outside the country for providers, then we're increasing the risk. So we want to bring them in and have the full vertical stack here, strategically, not serve everybody on the planet, serve the country, and maybe give a little bit outside.
Okay, so our infrastructure will need some upgrade.
Yes, and the chief is actively pushing on that.
Great,
regard.
good news. So Vladimir, it's your turn. As both a founder and a venture partner, what trends in AI adoption do you see attracting the most investments in fintech?
I think there are several actual trends. First of all, it's analytics, because AI plus big data is a very powerful thing. And if I'm running a startup at this moment, I think I will go to something about analytics of big data, of financials. That's a very huge topic, and it can bring a lot of value to the market. The second thing is everything connected with assets tokenization. Unfortunately, we don't have any legal background for this topic, but it 100% will occur in nearest time. But this is a very huge market, and it has a huge potential, because I think that everything will be tokenized in nearest future. And if we start doing some projects that can help us to tokenize everything, I think every person in this venue will become an investor. Like, I can have 1,000 tokens of real estate worldwide. I can have 100 tokens of some operational business worldwide. I can have 300 tokens of commodities, everything. So tokenization plus AI that can help to analyze the tokens, that can help to build my own strategy, etc. It will be the very huge topic that can bring a lot of potential and can get a lot of investments from the market. And I think the third topic, it's super actual at this moment, it's cybersecurity, because artificial intelligence help to fake a lot of documents, and other stuff. And cybersecurity will be actual, and as time goes, it will be more and more actual, because as AI technology raises, the scam technology raises too. We should understand it.
Interesting. So you say analytics will be a major player in the AI race. So can you give us an example, something that AI can help financial institutions through analytics?
For example, we can take, data from different markets and local markets especially, because there are a lot of local markets worldwide, and we don't have analytics at all. They are not digitalized yet. But if we digitalize them, and if we have this information, AI can deal with this information and can build prognosis systems. So we can build actually models that will be based on data that existed for tens of years. And in this case, we'll have something like prognosis system for different markets. And I think it has a big potential.
All right, thank you very much. Would you like to add something? Please.
So yes, in financial analysis, okay, whatever an analyst does as the preliminary analysis, that can already be automated through workflows. However, how we can leverage AI to do something over and above is actually analyze unstructured data. So that would mean social media posts or clinical client transcripts, phone transcripts, for example, and all this information that a clever analyst would have already been picking that up, but not probably not as efficiently or not as fast
automatic.
Or automatically. So one way of enhancing your financial analysis would be with AI would be this. So adding on top of it with unstructured data processing.
Okay, yeah, that's very interesting. So Andreas, back to you. What do you consider the primary limitations or ethical considerations associated with applying AI in the risk advisory services?
Okay, I'm gonna take out of the discussion the bad data because, okay, that's definitely something that, okay, if you have bad data, it's the famous quote, garbage in, garbage out. And our current AI technologies, they're based on data. So taking that out, I think the main limitations and ethical concerns from my side are across 3 dimensions. First of all is explainability, transparency and explainability, they go together. So that's basically the reason why, for example, banking regulators have not been allowing great use of machine learning or other AI technologies so far. However, there have been leaps in producing methodologies in explaining AI techniques. So I do see that as a limitation at the moment, but it's getting much, much better. Another area, and probably my main concern, would be what's called algorithmic bias. So having in mind that these models are built on data, if there is a bias directly in our data, that will be picked up, propagated, and even amplified by an AI machine. So having a look, especially in the risk advisory in the fintech, we don't want our models to discriminate populations, for example. And if we do have inherently that bias directly in the data, our model will definitely discriminate. So we have to be very careful assessing the outputs at the validation stage, for example, or at the testing stage. We have to be very, very careful in slicing and dicing it, the data in many, many different ways in order to try and identify if there's any algorithmic bias. Usually we were only doing this across sectors or across geographies. That's not enough nowadays. We can definitely see. Just to give an example, if in general, historically banks were giving out larger loans to people of 40 plus in terms of age, for example, that definitely will be picked up by an AI technique and will only allow to give out loans to people that have a greater age, irrespective of other characteristics. Of course, you do have to weigh the different characteristics and drivers, but that's definitely a risk. Last, one of the concerns that I have is around accountability. So, and that's where our legal framework needs to be enhanced, I believe, because, okay, in terms of accountability, if something goes wrong with an AI model, whose fault is it? Is it the developers, the vendors, or the users, the actual user of the model? So accountability in terms of the use of AI, I think it's something that needs to be covered a lot by the legal.
Yeah, that's very critical, actually. A good point. Nicolas, back to you. So how are the government-backed initiatives to support AI adoption in the financial sector?
In the finance sector, what the government, I'm not talking from the government side, right? I'm just in the task force. What they did is they released a lot of funds to support new ideas and startups that include AI solutions, that use and implement AI solutions. I think the first block is like 7 million, but the total will be like 33. And they will go for finance and public sector activities. And the goal is to automate as much as possible from our old infrastructure. Now, what was the other question?
How can public and private collaborations accelerate AI-driven innovation?
Nice question. All right, so there is a constant push and pull from private and public, and it seems that the private sector relies a lot on the regulatory part to be a bit lenient. Now, if the public sector makes everything transparent as part of the regulatory part, like everything is an agentic form of AI, that will make it so much easier for companies to be fully compliant. We're pushing on that regard. I don't know if it's going to happen for sure. Now, the other stuff that we're going to show is because of the power we are using in Cyprus, it's very expensive. We cannot own the full stack. Again, the government is pushing for more power, interconnectedness that will take down the margins on the power and we'll have more AI power solutions. And the last part is, is to be self-reliant again, so that if you build AI solution in Cyprus, you will know your actual cost and you will not be living on VC la-la land of the current environment where the token price you pay is subsidized like by 95%. This means that your actual margins will remain there even when this bubble of AI bursts. So you have your stable business and you will not rely on outside. That stability framework is coming from the government for all companies in Cyprus and the finance sector as well.
That's very good. Let's hope they can achieve that. So Vladimir, I have a difficult question for you. Cyprus is an island. It's both good and bad. So you see a lot of local companies, Cypriot companies, foreign owners companies, but we all face the border issue. We are not close to Europe. We are in the middle of everything, but how do we close the gap? Because we are close, but we are far at the same time. How do you close the gaps with startups, with established companies to go international, to go to Europe?
I think that one of the answers is, for example, IP box, or taxation that is very, very good in Cyprus. The other thing that is very good in Cyprus, I personally believe that you have the best legal system that is transparent, that is English speaking, we can say, and everybody from United States, from Canada can understand transparently how they can open an entity or how they can acquire an entity in Cyprus. And that's a very good point, and I think that Cyprus is really the best country in Europe according to legal things. And that's really true, because personally, when we invested in European startups, it's a big pain. And we try to ask in startups to register entity in the United States because it's much easier. But if there will be a startup from Cyprus, it would be quite easy to acquire them. So I think that Cyprus is an island, it's true, but it's super comfortable island for startups, because I think Cyprus may be one of the best places in the world where you can start Cyprus. It's very easy to open legal entity here. It's government helps a lot to get permanent residency or to deal with all the legal stuff. And you can bring a small team and create a startup here on a pre-seed stage, on a seed stage, and it will be very cost effective because it can take you thousands, hundreds, thousands of dollars to do it in United States, for example, and you don't need to be represented in United States because you don't have traction actually, and you need to develop a startup. And Cyprus is a super good region where you can develop it. There are a lot of tech-savvy people here. There are a lot of tech specialists here. There are a lot of huge expats community, huge English-speaking community. So you can start integrating in English-speaking worldwide community from Cyprus. And I think that this is a very good perspective. And I see that government tries to help to bring as much IT people and startup people to the island as they can. So I think the only thing we need to do is to spread this information, because not so many people knows about that, how Cyprus is comfortable for startups.
Okay, so you are saying essentially we need to take more opportunities, more risk, travel around and show Cyprus to more people.
Yeah, that's true. Because it has a very good climate, it's not so expensive, it has a very big potential in connections worldwide between Asia, Dubai, everything is close. Like Cyprus is an island, but everything is close to this island. And it's easy to go to United Kingdom, to United States from Cyprus. That's not a problem. So I think, it's a very good place for startups.
Thank you. Andreas, I'm going to ask you one question that I want to answer for everybody. So how is the AI impacting the job place, the employment, and the skills of the Cypriot people? Will they lose their job like they are afraid of AI, or is not happening?
It's a good and tricky question.
Okay, that's good.
So basically, at the very beginning, I talked about agentic AI and building agents. Okay, obviously, the big advantage of having agents doing some legwork or some easy tasks, let's say, is that, okay, agents don't need to sleep and don't need to eat anything. So they can work around the clock. I think that's a bit scary, especially for junior people, so entering the workforce at the moment. I cannot hide that. I know that always we're trying to beautify it, but that's the reality. So I think that the focus should shift on new skills, on more or stronger AI-linked skills. That doesn't mean that you have to become a software developer. I believe that at some point that's going to be saturated as well. However, you have to stay close to the adoption of this technology and follow the trends. That means that, in my opinion, the more focus would be on having a skill set that can digest the problem and solve the problem, because we are calling AI artificial intelligence, but in the end it's dummy as long as we give it intelligence in. So knowing how to break down a problem and explain it well to an AI agent, that's going to be a real trick. In general, if we're talking specifically for the local population, I do believe that we are lagging a lot of digital skills in general, and we have to focus a lot on upskilling. And that's what we've seen in major organizations at the moment. We are providing a lot of trainings to staff, but that needs to happen even at school level or university level. It should be a module that should be followed by most people. I can tell you, for example, in the general population, now almost everyone is using ChatGPT or Gemini or other LLMs, and I can tell you, and probably most of you will agree with me, that people trust the answers that gives it more than even their doctor or...
I know this.
So I'm not saying that it's not going to go there. Maybe it will. But people need to understand how to use these technologies, and they need to catch up on these new skill sets.
Nicolas, Do you think, as Andreas said, the universities, the school, and all the people of Cyprus should be using AI for their daily tasks, for their work, for home?
I'm pretty sure like 20 to 30% is already using it, like on a daily basis. I have a disagreement here. Of course, everybody will use it. It's there, it's applicable, it's like air, it's in every product that we use. So I don't think a specific tutorial or a course will help out a lot. Sure, it will hone down your skills. My disagreement is, since 2023, we have seen a 30%, in the US at least, we have seen a US downgrade on junior positions, meaning mid and seniors with good knowledge of AI can do a lot of stuff. This means that for companies that are moving forward, there is no next batch of people catching up on them. So we are losing part of the employment funnel, which means a second order effect is that there will be no next batch, or it will be a very small one, and that will mean that they will demand higher wages, or you will not find them and you will rely solely on AI. This will create a third order effect, that you will create that hollowness in companies where they don't own their knowledge, they don't own their process, they don't even own their tools. This is extremely bad. From my perspective, is like wait for companies not to jump the wagon and start firing people and hollowing out their operations, is strategically use it, maybe not hire so many people, but don't fire your core. Keep moving forward with the people you have and some AI specialists, and use them as multipliers, but don't hollow out your operations just yet. We have yet to see the real price of AI. Once we've seen it, we will know the real margins and if it's worth doing it enterprise-wide. That's all.
Vladimir, what do you think? Should everybody from school to work have an agent next to him to help him, or we should do some more critical thinking before we use AI?
I think, yes, first of all, we need to understand the limitations of artificial intelligence, because if we will be like AI savvy, then we can use AI tools correctly and effectively. If we will just rely on that what ChatGPT says, as some people do, we can have a lot of biases and wrong decisions that will be ineffective in general. So I think that AI education should start at early classes at school. Yeah, that's true, because we have AI in our pocket and we need to understand how to use it effectively. And we shouldn't be afraid of artificial intelligence, because it can be a companion. Yeah, it can be your helper, personal helper, if you know how to use it, and it can make you much more effective, and you can have free time for all other stuff in your life. But if you just rely on what AI says and do what AI says and don't think critically, so that's your problem. That's not a problem of artificial intelligence, basically.
Exactly. Yes.
It creates a hollowness of understanding. Like you don't know, but you rely on it and hope it's true, right?
Yes.
A true expert on any domain can use it as a multiplier. A novice on that domain will just drive into the wall, just faster. This is the split.
Okay, thank you. So now for closing remarks, 30 seconds each, please. So please tell us, how can the government and other organizations protect their data from AI hackers? Because we have seen the people tricking AI to give out databases, critical keys, information, and also how the government can apply the policies to protect the data that is going to be shared through AI.
So, I'm not a cybersecurity expert myself, but if I can mention something on that, I already mentioned, for example, we can leverage AI in order to be safeguarded from AI, if that makes sense. So we can build right solutions. So even the policymakers can build right solutions in order to try and identify anything malicious happening, so in order to not lose information. So for example, something that is quite big at the moment is API monitoring activity, so or identifying patterns in order to pick things up early before you end up losing information. So something that I wanted to mention, maybe it goes into this discussion, maybe not, but since we're talking specifically for the fintech landscape, AI use in the fintech, we do have some great examples, for example, SciSec, Sandbox, and even the Innovation Hub by the CBC, where we can actually test a lot of these solutions before we go live. That's something that is very advantageous for companies in Cyprus, because they can come here, test their products, make sure that they are in line with MiFID regulations, MiCA regulations, and all that before they expand it to Europe.
Okay, thank you. Nicolas, closing remarks?
Closing remark, all right. Be careful. This technology is very powerful. It shouldn't be used anywhere, everywhere, all the time, especially in fintech where you handle money, and especially in government where you handle people, exactly. Right? So just go slow. When everybody goes fast, just slow down and breathe, right? There is no hurry. Use it internally, use it automation, but
validate what you get.
Yeah.
Vladimir, final remarks?
Yeah, I have a small final remarks here. First of all, don't put in public that what you want to be private, and that's one of the things. The second thing is, understand what AI says and try to explore more details if you don't have a clue like what the topic, what AI is talking about, because it has biases, and technologically it's almost impossible to make these biases, the level of these biases lower. So you should understand it, and you should understand that AI won't replace you. You can be replaced by the people who are using AI actively. So just explore these technologies and become an AI savvy person.
Thank you all. Guys, we don't have time to take questions, but if you want to ask us any questions, please join us later after the panel. Thank you very much.
Ladies and gentlemen, we were excited to welcome Justin Sun, founder of Tron, to share his insights on access and inclusion at scale with Tron for Billions. Unfortunately, due to an urgent matter, Justin is unable to join us in person today. However, he has kindly recorded a special video message for us to enjoy. Let's watch Justin's video.
Hi everyone, I'm Justin Sun, founder of Tron. Thank you for inviting me to speak here at the WikiEXPO Cyprus. It's always great to work with the WikiEXPO team. Cyprus has become an important meeting point for innovation, finance, and technology. I'm excited to be here with some of the brightest minds and most passionate builders. First, I want to share some exciting news about Tron's growing mainstream adoption. Tron Inc., formerly known as SRM, has launched the Tron strategy, which reached an impressive $1.8 billion in trading volume on its first day on NASDAQ. This shows that more US institutional investors are beginning to see Tron as a strong entry point into the crypto ecosystem. And I believe it will open the door for many more people to step into crypto. In addition, the US Department of Commerce has selected the Tron blockchain as one of the primary networks for hosting official economic data, beginning with the second quarter GDP release. Publishing the GDP data hash on Tron highlights the role of decentralized networks in preserving data integrity, strengthening accountability, and ensuring open access for citizens, researchers, and policymakers worldwide. Tron was founded with a mission to decentralize the internet and empower people by creating a secure, scalable blockchain network for borderless transactions. Tron hosts more than 330 million user accounts on the blockchain, with $28 billion in total value locked across the ecosystem. On average, the Tron processes around 9 million transactions daily with over 2.83 million daily active accounts. And in the past 365 days, Tron has generated more than $3.5 billion in protocol revenue. That number highlights the real economic activity happening on Tron, from stablecoin transfers to DeFi and payments. It proves Tron is not just about speculation. People are relying on it every day. Tron has become one of the most widely used blockchain ecosystems. But more importantly, it empowers individuals worldwide with access to fast, affordable, and scalable solutions. Early this month, to ensure the Tron networks stays accessible to every demographic, the super representative community has voted to reduce the average gas fees by 60%. Additionally, the Tron super representative community will implement quarterly reviews of network fees, considering factors such as TRX price movements, network activity, and growth metrics to maintain a competitive positioning. There has been a lot of momentum and growth across the Tron ecosystem. First, as of this month, USDD is now natively deployed on Ethereum. USDD is a fully decentralized stablecoin pegged to the US dollar through crypto reserves. The total supply of USDD on Tron exceeds $500 million with over $550 million in TVL. In the near future, the protocol will launch as USDD, and token version of USDD, to enable users to earn interest on USDD through a decentralized and transparent savings system. It is an interest-bearing version of USDD, designed for users who want to passively grow their stablecoin holdings while maintaining full control on-chain. Additionally, USD1 is now live natively on Tron. The strategic decision to mint USD1 on Tron signals a growing trust in the network's robust infrastructure and demonstrates increasing institutional confidence in Tron's ability to deliver secure, scalable blockchain solutions for global markets. The Trump meme coin has also officially deployed on the Tron blockchain, and I will stay committed to driving ecosystem growth by supporting diverse projects across the industry and by strengthening the connections between traditional markets and the crypto economy. Today, Tron is the leading blockchain network for USDT transaction volume and daily user activity. Until recently, Tron hosted the largest circulating supply of USD Tether stablecoin, which currently exceeds $77 billion. Tron is the #1 network among all blockchain networks for USDT total transaction volume and daily active users. As stablecoins on Tron see more global adoption, security and trust has never been more important. Last September, Tron, Tether, and TRM Labs first announced the launch of the T3 Financial Crime Unit, also known as T3 FCU. Last month, we announced the launch of T3 Plus, a global collaborator program made up of some of the largest and most influential players in the crypto ecosystem. It is designed to expand public-private collaboration to combat illicit activities on the blockchain. Binance has joined as the program's first official member. Since launching less than a year ago, T3 FCU has frozen over $250 million USD in illicit assets globally, including almost $6 million frozen in a successful coordinated first effort with Binance via T3 Plus. Collaboration and open communication with industry contributors are essential to driving our industry's growth and ensuring we move forward in the right direction together. I'm excited for the progress we'll create together and the future we'll build as one community. We collaborate with many of the most influential contributors in the crypto industry. Xstock's integration in collaboration with Kraken and Bakkt opening up new opportunities for tokenized equities. MetaMask will natively integrate Tron, enabling MetaMask users to interact directly with the Tron ecosystem. Integration with the Bridge enables Tron to be instantly composable with 25 other blockchains, including Solana, Avalanche, C, and more, facilitating full cross-chain interoperability. Integration with Chainlink for Tron's DeFi infrastructure, reinforcing security and reliability across the ecosystem. Collaboration with Near, enabling seamless cross-chain swaps through a frictionless experience for users and ecosystem developers. As the crypto industry continues to mature, decentralization and transparency are no longer just technical ideas. They're becoming powerful social movements. Tron's impact goes beyond the blockchain, driving a global shift toward more open, transparent, and inclusive systems. Super representatives on Tron play an important role in maintaining the network's decentralization and ensuring its long-term security and governance. Tron's super representative network includes some of the most established names in technology and finance, such as Google Cloud, Binance, Kraken, OKX, Nansen, Luganodes, Kiln, and Abra. Their involvement signals growing institutional confidence in Tron's infrastructure and its ability to support secure and scalable blockchain solutions across global markets. Looking ahead, one thing is certain. Decentralization is about empowering individuals and ensuring that opportunity and innovation are not controlled by any single institution. Blockchain gives people everywhere the ability to own their value, their data, and their voice. Together, we are shaping a more open and inclusive world where billions of people can participate in the global economy on equal terms. While we have made great progress, there is still much work to be done. I want to encourage everyone to keep building, to keep pushing boundaries, and to keep driving this movement forward. Thank you.
So, now we have a fascinating session titled Liberland, a new jurisdiction for borderless finance. Liberland is an innovative microstate project aiming to create a forward-thinking jurisdiction that embraces the future of decentralized borderless finance. This session will explore how Liberland plans to redefine the landscape of global finance through technology and governance innovation. Joining us is Vít Jedlička, President of Liberland, a visionary leader and founder of this bold new experiment in sovereignty and financial freedom. Vít has been at the forefront of pioneering new models of governance that challenge traditional borders and promote open, accessible finance for all. Thank you.
Great to be here in Cyprus. Amazing conference. Great job, organizers of WikiFinance, as always. We had the pleasure already to present Liberland in Hong Kong. That was a great event. And I'm actually just heading to Network State Conference in Singapore, which will be another great opportunity to present Liberland to a wider audience of people that are open-minded about building new jurisdictions, especially the ones built on blockchain. Liberland is not just a blockchain country or network state or virtual country. We're actually a sovereign project that is 10 years old, and I hope that some of the things, okay. So I'll just show you the pictures because the video is not taking off. Liberland was founded 10 years ago on 13th of April during the birthday of Thomas Jefferson. It was a great opportunity to remind people that there are too high taxes and too much regulations in many of the states that we are living. Especially here in Europe, we do have a major problem with overtaxation and over-regulation in general. It was founded on the territory between Croatia and Serbia. Wait a second, okay. On the territory between Croatia and Serbia, amazing, beautiful 7 square kilometers of land that were unclaimed by neither of these countries for more than 10 years. And I came from a background where I studied political science and I studied also economy. I actually majored from monetary economy. I was writing about the fact that central banks don't have enough gold in their sheets. And then my second thesis was on global governance. That's where I came to conclusion that there is a great danger of the globe becoming actually a place for global government. I believe that, I'm sorry, can we lower the echo because I hear myself too much? Is there any option to do that? I'm listening to myself way too much. And it's giving me a little bit of problem to speak because I'm getting my own voice. So when I finished my thesis on global governance and monetary policy, I decided that it's time to educate people. I started a big channel on YouTube, more than 20 million views. I did a lot of work. Yeah, that's much better. Thank you. And I did a lot of work on educating people. We started a political party, which was very important also step. By the way, that political party is making it into parliament in Czech Republic finally 10 years after. But at some point I realized that there is no chance to really change the systems that we are living in, and that the best option is to actually start a new country. So we did it. We started a beautiful country between Croatia and Serbia on territory that was not claimed by neither Croatia nor Serbia. Right now we have almost 800,000 people that applied for citizenship of our country. There is more than 1,300 citizens. The country, just that you know, is 7 square kilometers long, and we have now representation in almost 90 countries around the world, which also tells you something. Normal countries in Europe have representation in only around 70, 60 countries, and Liberland already has representation almost everywhere. We are, by the way, missing a representative in Cyprus. I hope that the part of our presence here on this conference will be a result that we do have some nice representative office here in Cyprus. What is very cool about Liberland is that we have everything on blockchain. We were able to basically put the whole state administration on blockchain platform. It's running more than a year right now. All the finances, all the shares of companies, all the land registries, everything is one single blockchain platform, which I think we're a little bit ahead of any other country, at least 5, maybe to 10 years ahead of any other nation state. Of course, this seamless transactions in society, together with voluntary tax system that we have, will create enormous prosperity. And we have combined the best elements of different governance systems that we could find in previous constitution and put everything on blockchain. So Liberland is a meritocracy. The more taxes you pay or the more contributions you make to the country, the bigger is your vote. I think it's also another important upgrade in the way we are running our society. Liberland is a republic. We made sure that the state doesn't do anything a part of securing the country, taking care of justice and diplomacy. So it is in line with what the founding fathers of the United States wanted to see. Liberland is also democracy. We have built a system with majority of citizens can veto any law. Majority cannot vote about new laws, but they can veto any law that they don't like. We have a little bit of monarchical element as well. We have kind of House of Lords of Liberland that also reserves the right to veto the laws. But this was also kind of the result of my 8 years, 9 years of studying politics and trying to really come up with better system for governance of human society. One really that learns from all the mistakes from all the previous constitutions. We do have, by the way, a constitutional convention in December. If you are in Prague, you are very welcome to join us. December 19th, we're finalizing our constitution. Everything already works on blockchain. The main principles are already laid out. We do have an election every 3 months. By the way, the gentleman that was speaking before me actually was elected to be the Prime Minister of Liberland. We are kind of honored to have the wealthiest Prime Minister ever on planet Earth with his presence in Liberland. We have another great gentleman, Evan Lutra, Michael Ptáčník, Tariq Abbasi. Those are the top people that our system generated. And those elections are every 3 months. So if we don't like how these gentlemen are performing, we can exchange them quite quickly. I think it's another good feature of Liberland ecosystem. I cannot show you the pictures from Liberland because the video is apparently not working. But I'm more than excited to invite you to become part of Liberland because I believe there is hardly any better country that you can join that easily, do it online. There is hardly any other country which would be so much forward-looking when it comes to adoption of cryptocurrency or blockchain. We have a great new deal for people that are becoming citizens right now. They are also getting residency in Paraguay, which is I would say, best residency that is out there when it comes to tax residency. We're helping our citizens to become tax-free, which I believe is part of the vision of our country. And there are a bunch of other perks, actually, if you become citizen as a bonus, especially to people that are coming from EU. And yes, it's possible now to move to Liberland. As the fun fact, you can already build there. Even we still have some issues with Croatia when it comes to moving over the borders between Liberland and Croatia. We need to solve them. If you have any good contacts in Croatia, please let me know because we need them. But after 10 years of going back and forth with Croatia and after 8 years of complete blockade of our borders, we finally managed to get over them. And we're in dialogue with them, which is also great at this stage that we were able to finally open dialogue. And they started to see us as extremely positive project for the whole region. With Serbia, we have not had any problem from beginning. They actually stated 11 days after Liberland was established that they don't mind creation of Liberland on this territory. That is not their land, despite historically this particular piece of land used to belong to Serbia. So again, great opportunity to be here. Great opportunity to establish new embassy. I already opened up, I think, 3 major partnerships for Liberland. We are going to, with one of the companies that is presenting here, at this summit, we are going to start licensing gaming companies in Liberland. They are one of the top legal companies for organizing licenses. And there are so many other things that can be done. We are at this process of becoming EVM compatible as a blockchain, which allows us now to onboard all the DAO factories that are major players in the ecosystem. So the incorporation of companies will also become much easier from next week on. Incorporation or putting other blockchain projects like Uniswap and launching it on Liberland ecosystem will be also much easier. So we're also looking for more developers. I will be presenting actually tomorrow already on Ethereum Sophia and finding more partners for this. So thank you very much. Apologies for small technical difficulties, and I'm here for you. If you want to visit Liberland, you're always welcome.
Thank you very much. Our next session will explore an exciting and futuristic topic: Cyprus and the new space economy, building a $1 trillion future with CSpark. Cyprus is positioning itself as a key player in the rapidly growing space sector, and today we will learn how the Cyprus Space Exploration Organization, CSEO, is driving this ambitious vision. To lead the discussion, please join me in welcoming George Danos, President of CSEO, to the stage.
Ladies and gentlemen, I am very happy to be here today, and I want to start with a question. How many of you are using any kind of maps? Can I see some hands, please? Great. And how many of you have ever used sunglasses? I would be surprised if I didn't see any hands. And let me ask the next question. How many of you had an MRI? I'm sorry. This is GDPR. I couldn't be asking that question. In that case, let me ask a different question. How many of you have ever used the stock market? So, what I'm trying to point out here is that all these technologies, including those of us that are watching the Olympics, Eurovision, having teleconferencing over our mobile phones, all these are technologies that are coming from space, including the stock market, because the GPS, the exact timing of a transaction, is being recorded via GPS. Let me see how this works. I suppose I press the green button for the next slide. Oh, my presentation doesn't seem to be on display. So therefore, I cannot present. I suppose this will be fixed in a moment. Not a problem. And thank you for all those at the back that are becoming quiet, because it's very disruptive to have a presentation when we all enjoy a conversation. So can I please ask the people at the back, some peace and quiet helps the presenters. I'm waiting for the presentation to be loaded. Excellent, thank you. So, that was my point. GPS, telecommunications, everything is space related. So space exploration isn't just about exploring the space around us, whether we're babies or whether we send probes out there in the solar system. In fact, space exploration is also about our own planet, prosperity, viability, and protecting our environment, which in the previous panels, you saw all the discussions about how do we protect our future. We are ruining this planet. The numbers of revenue of space exploration, as you can see, were in 2019, 366 billion per annum. And in 2022, they rose to 546. Can I ask you, what do you think the number was for 2024? The annual revenues globally for space? Anyone? Any hands? Yes. It's getting close to $1 trillion, indeed. 613 billion, and it's getting close to $1 trillion, and it may exceed $1 trillion by the end of this decade. As you may have heard, everybody is running to go back to the moon. And you see the image there of the 1960s. It was the Soviet Union and the United States. But now, no. It's not just about countries. It's about companies, and you see some names there. But also, there are new countries running to get to the moon. And the technologies that have to be utilized in order to get to the moon are all benefiting our planet. And yes, there are tremendous investment opportunities. For all those that are here, I had visited Cyprus, I'm sure that this is the image that you understand when you hear Cyprus. Swimming, beautiful beaches. But let me tell you, that's a completely different aspect, unique aspect of Cyprus. And that is technologies, investment opportunities, and the fact that Cyprus is getting very much involved in space exploration. And I'll tell you a little bit about this organization, the organization that I represent, the Cyprus Space Exploration Organization. You can see some of the numbers. What is unique about it is that we have 430,000 followers around the planet. We're actually somewhere in the region of number 5 on Facebook, for those that still follow Facebook. And you can see some of the statistics that I'm not going to mention. We have 4 pillars. Pillar number 1, education. If you're going to have the new space ecosystem thriving, you have to start from education. And here are some examples of the education that is being disseminated globally by the organization. And you see some of the views and some of the statistics. Recently, we signed an MOU with the University of Athens, the National University of Athens, to promote education and innovation. And as I told you, here on Facebook, you see the dissemination globally, particularly high, right under the NASA's and the ESA's. Going next, we have to promote innovation, create opportunities, stimulate the ecosystem, incubate startups, and then give opportunities to investors. And you see here some examples. The last 10 years, 8 global wins coming from here, from Cyprus. And recently, we signed an MOU with the Cyprus Chamber of Commerce specifically to further promote innovation, which is already thriving on this island. So now, we have what we call the International Space Cluster. It used to be the Cyprus, but we renamed it because we now have lots of companies that have joined us from abroad. Moving on to R&D. And I want to highlight the entity to the top right, Lockheed Martin. One of the biggest corporations on the planet, our strategic partner in what we're doing. And, of course, from my past, Virgin, because I was a founder of one of the Virgin Group of companies. So we are connecting on all this with our research. And we see some examples of research that we have done, and I want to highlight some of the articles. This was in the Washington Post, speaking about the instrumentation that Cyprus is designing with our partners to be sent to the surface of the Mars. And moving to the last but not least, international collaboration. You see here Mr. Skouridis, who was, I understand, speaker this morning, and we're at the headquarters of NASA there. But the rest of the bodies you see here, very important, and I will explain. Loads of MOUs, loads of cooperation around the planet with some of the leaders of space exploration at the level of the United Nations and space agencies. But at the United Nations, that's where some of the miracles have happened. Specifically, we brought together those countries that don't normally work with each other because of regulations, their own national regulations. Specifically, there's a law that prohibits cooperation between the United States and China. So, how are we going to go back to the moon without seeing conflicts? So we had to bring to the table the big players. And that's why this body, with the support of Cyprus and our organization, CSEO, became the founding member of this body that, at the level of the United Nations, brought certain principles for cooperation between the players that will go back to the moon. And we saw, just last autumn, about a year ago, Cyprus becoming a member of the Artemis Accords. And that's the moment where the Deputy Secretary of State of the United States signed the agreement at the Presidential Palace here in Cyprus. And what did all of this bring to the table for the planet? Signing of a cooperation agreement with the International Space Research Organization and Lockheed Martin and others, including NASA, creating the first International Space Innovation Center of the planet here in Cyprus, cooperating with high-tech equipment that you see here, an emission control station to produce satellites to study the impact of space weather, climate change on our planet, and bring solutions. All these are happening, and results. To be an astronaut isn't just cool. To be an astronaut, you also have an impact to your health, and results have been coming utilizing AI, and we've found solutions that were recently published in the Sunday Times. And with that, I'm finishing with the 6th COSPAR Symposium. That's the Global Symposium for Space. It's happening here in Cyprus next November with all the leaders of space. So yes, Cyprus is playing an important role in innovation. And with that, I conclude. Thank you very much.
Our next session is titled Cyprus as a Global Innovation Hub, from water security to Web3, AI, and cultural tech. This talk explores how Cyprus is emerging as a leader in cutting-edge solutions across diverse sectors, from sustainable infrastructure to frontier technologies. Delivering this visionary perspective is Barry Perkins, founder and CEO of the Hived Music and Tesseract Group, and the strategic lead of Pixlet Holdings, with deep experience in global innovation and impact-driven ventures. Please join me in welcoming Barry to the stage.
Okay, once we get the slides loaded or presentation loaded up. There we go. That was quick. Thank you very much. Okay, as we go through here, good afternoon. Welcome to Limassol. I'm honored to be here at a crossroads of history, culture, and innovation. I stand here as the founder and leader of Tesseract Group, a company of my own, of Hived Music, which is another one of my businesses, and as a strategic lead for Pixelet Holdings and Pixelet Group of companies. Today is about a path forward where finance, innovation, and humanity converge. There we go. Imagine today a child born. This child will grow up in a time of astonishing breakthroughs and extraordinary challenges. Their future will be shaped by forces far bigger than borders and by hopes that we all share. Water, clean water, a chance to learn, and a voice that is heard. These are not abstract ideals. They are the threads of a life with dignity. There we go. Our futures are connected, and so are our challenges. Water scarcity, unequal access to opportunity, cultural fragmentation. These are deeply human problems, and the answers will be built together. Water is a fragile, precious, and shared resource. Yet communities worldwide, including here in Cyprus, face severe water shortage and water stress. What was once a drought cycle here every 20 years has become a scarcity of water every 2 years in cycle. As of September 2025, this month, Cyprus reservoirs are at a critically low 14.7% of capacity, far below what's needed for families and for farms. Every source is under pressure. Rainfall is unreliable, aquifers are depleted, desalination is costly, and imports are unsustainable. And this isn't just Cyprus. Globally, 2.1 billion people, 25% of this planet, lack safe, clean, reliable water. Families, farms, cities can't thrive without reliable, affordable water. Knowledge opens futures, but access is uneven. For many, education is out of reach entirely. Shockingly, around the world, 251 million children and youth are out of school. Even for those that are in classrooms, education is often insufficient. More than 600 million children around the world cannot read or do basic math at minimum levels. And it doesn't stop there. 750 million adults globally cannot read or write a simple statement. That is shocking. Entire generations are being left unprepared, cut off from a chance to thrive in tomorrow's economy. Even here in Cyprus, the challenge is clear. In 2023, more than half of the population had no basic digital skills. This is an aging issue. While most young people are digitally literate, the gap widens as people grow older, leaving large parts of society outside of the digital world. And we know that the movement forward is a digital world, even though we are analog.
Without access to knowledge and digital literacy, entire generations are going to miss out of a future. Music reminds us of who we are. It carries our history, our joy, our struggles, and our dreams. It transcends audiences. It transcends borders, politics, and language. It connects us in a way that nothing else can. But today, the music economy is weighed down by layers of middlemen: streaming, media, marketing, ticketing, advertising. It's a long list, each extracting value before the artist receives their money. The result, most creators earn small fractions while the vast majority of the money flows elsewhere. True cultural prosperity comes when wealth flows back to the creators and the communities, not away from them. These are questions that no single person, no single company, no single nation can answer alone. Here in Cyprus, at the crossroads of continents, cultures, and ideas, we have the opportunity to do something remarkable, to create an ecosystem where sustainability, innovation, and culture can converge. An amazing journey in collaboration with the government of Cyprus, under the president himself, Invest Cyprus, and key partners aligning purpose and private capability, we are moving forward. This isn't tech for tech's sake. I've been in tech my whole life. I've 40 years in the tech industry. I'm not here to talk about technology for the sake of technology. This is a story that we must write together, one of resilience and renewal through water, knowledge, creativity, a story where innovation serves humanity and progress becomes possible. At the intersection of creative finance, innovative technology, and human potential, Cyprus can be a trusted hub for the region, safely channeling capital to outcomes people can feel. 3 pillars, 1 purpose, building futures together. Water, the foundation of life. We're advancing decentralized water purification based on Aquabac technology powered by solar and battery with modular storage, delivering clean water for less than a cent per gallon while recovering up to 90% of wastewater, making it potable, not just gray water, potable, 100% clear. A solution that is resilient, local, and scalable. For project funding, we're establishing the Cyprus Water Fund. This is a sovereign fund here in Cyprus, and we use a Cyprus water token or coin. It creates a stable coin backed by real-world water assets, ensuring sovereign stewardship for Cyprus with compliant investor access and liquidity. The future economy will look nothing like today's, with Web3, AI, blockchain, and cybersecurity rewriting the rules of finance and governance. The Cyprus Academy, in partnership with Tesseract Group and Pixelet Holdings, aligned with Cyprus Vision 2035, isn't just digital literacy for everyone. It's a launchpad where young innovators gain the tools they need to lead. Together, we can make Cyprus a magnet for global collaboration where ideas are born, skills are forged, and opportunities ripple outward to communities everywhere. Music, the soul of humanity. Hive Music is an immersive platform that integrates AI, Web3, XR, and so much more advanced technology. It redefines the global music economy by connecting artists directly with fans. Cutting out the middlemen means artists own their work, fans become super fans, and the money flows straight to the artists. Here in Cyprus, Hive Music's Expression in Harmony Festival will unite global artists, local talent, emerging tech, and education in a celebration where innovation meets humanity, culture as a catalyst for transformation. Water, knowledge, and music. 3 threads, 1 tapestry. Individually, they're powerful. Together, they are transformative. When life, opportunity, and soul converge, we create economies, ecosystems, and meaning. A crossroads for the future of the world to come, together to collaborate and build a better future. When we began, I asked you to imagine a child born today. The future the child inherits will not be shaped by chance. It will be shaped by choices we make together. This future isn't written. It's built by those who step forward. This is about creating something bigger than all of us. A place where innovation serves humanity, where culture and commerce move in harmony, and where finance becomes the engine of a better future. What happens next depends on us. So my invitation is simple. Join with us. Imagine, create, partner, invest. Let's take this journey together toward a world where life, opportunity, and soul are not just preserved, they are amplified through finance, for humanity, for generations to come. Because the future isn't something we wait for, the future is something that we build together. If you scan the QR code on the screen, you'll be able to look at detailed or overviews for each of the beginnings initiatives that I have started here in Cyprus based upon a request of the President. And we will continue to move forward. If you want more information, talk to me. I will be here till the end of the event, and I will be around in the hotel till 9 p.m. tonight. I would be happy to talk to you. Thank you very much for your time, your interest, and coming here. Have a good day.
We now turn to a critical and timely discussion. From fraud to money laundering, the role of crypto and Forex in combating financial crime. As financial technologies evolve, so too do the methods used by criminals. This session will explore how the crypto and Forex sectors can shift from being perceived as vulnerabilities to becoming powerful tools in the fight against fraud and money laundering. Moderating this important discussion is Anna Stylianou, independent AML consultant and founder of AML Cube Consulting and Education, with deep expertise in anti-financial crime strategy. Joining Anna are esteemed panelists, Norshad Kadon, AML CFT subject matter expert at ITX Compliance and former regulator at the Financial Services Commission of Mauritius. Michalis Zivanaris, partner at Economo & Co. LLC with a strong background in financial regulation and enforcement. And Nassos Katsiamidis, CEO and co-founder of Klidi.io, a pioneer in digital identity and secure transactions. Please join me in welcoming Anna and the panelists to the stage.
crypto and financial crime. This is what we are going to discuss today. An interesting topic. Why? Because crypto is slowly becoming part of our everyday life. A few years ago, not many people knew much about crypto. How about today? More and more people are adopting crypto. They're using it for payments, investments, creating innovative products or services. And something else that impressed me is that regulators are having a positive approach towards crypto and recognize that crypto is here to stay. But you know it very well, like me, that like any other financial tool, crypto can be misused for scams, fraud, and money laundering. These are real risks. But is it a preferable tool for financial crime? So this is what we're going to discuss in this panel. We'll look to what extent crypto is enabling financial crime and its role. What tools and approaches are there to identify and mitigate the risks related to crypto and the challenges that legitimate crypto businesses face as part of their licensing processes. Let's introduce our panelists. My name is Anna Stylianou. I am an anti-financial crime consultant. I have a mission to increase awareness to the extent possible, if globally, and help fintechs and other financial institutions to prevent and detect money laundering and other types of financial crime. Now, Shad, would you like to introduce yourself and then?
Thank you. Thank you very much, Anna. Naushad Kidden from Mauritius, former regulator. It's on, I think, yeah. Thank you. So Naushad Kidden, former regulator. I'm from Mauritius. I have 12 years serving the regulator in the legal, regulatory enforcement, inspections, investigations departments. I'm also now at the moment a consultant with the Financial Intelligence Unit in Mauritius. So helping now also the private sector and also the public sector. And I think today we have a very fitting topic, Anna, to bring on the discussion. Thank you.
Great. Michalis?
Yes? No? Is it working? Yeah. Thank you, Anna. Hi, everyone. I'm Michalis Ivanaris. Pleasure to join this panel, and thank you for attending. I'm a dispute resolution lawyer, partner with Economo & Co. LLC, focusing on corporate and commercial disputes and advisory.
Hello, can you hear us, by the way? Yeah, because I cannot hear anything the previous guys said. My name is Nasos. I'm the CEO and co-founder of Glidi.io. It's a Bitcoin and stablecoins exchange and payments platform. We're based in Europe with plans to expand in Switzerland and Canada very soon.
So let's start with our first question. I'll address this question to Michalis. What is financial crime and where does crypto fit in?
Well, I mean, financial crime really is an umbrella term. Obviously, how we define it depends on the jurisdiction. But since we're in Cyprus and we're discussing about crypto, I think the most appropriate way of framing financial crime would be any legal activity that has to do with either fraud or money laundering activities. In Cyprus, usually these offenses are either regulated or defined by the criminal penal code or by the Civil Liability Acts or by the Anti-Money Laundering Act. So these are the main, let's say, legislative frameworks that can be used through which we can convert these offenses into what financial crime is.
Great. So, Naushad, would you like to tell us a bit about, from a financial intelligence unit perspective, what is financial crime and the relationship with crypto?
Thank you very much, Anna. I think if there's one thing that's changed over the years is for a while everyone started with money laundering, and then we moved on to considering terrorism financing, weapons of mass destruction. Things evolved over time. And one trend that we've noticed over the last few years is the prevalence of fraud and scams. And as well, the combat against, I would say, bribery and corruption has taken a different volume, even though there has been a lot of focus on there. So financial crime as a definition has really managed to encompass not only money laundering, but just everything else in terms of what we've been discussing. Back in my home country, in Mauritius, we've noticed that the definition of financial crime has evolved, and even the powers provided to the law enforcement agencies, they are now better equipped to be able to address all of that. And if there's one thing which is pretty clear now, is when we talk about a predicate offense, it's about any crime that we could think of. It's about stealing a bottle of water, it's about committing a tax crime. Literally every crime that generates money results in a money laundering offense. And the moment we have that, reporting persons, accountable institutions, depends on the terms that you use. You have that legal obligation to report those suspicious transactions to the financial intelligence units, which in return, I would say, produce intelligence reports. And those intelligence reports are disseminated to the relevant authorities for necessary action at their end. And if I'm allowed to just close on one topic, is every country's ability to share information between the authorities are assessed by the Financial Action Task Force during mutual evaluation exercises.
Yes, exactly. And crypto is just another channel, let's say, that enables money laundering. But overall, financial crime existed long before crypto. So from a financial intelligence unit's perspective, do you think that crypto is a preferable tool for money laundering compared to other types of money laundering techniques? Let's say.
I think with the recent scams that we've noticed, and even general crimes and people really tagging cryptocurrencies to, when it comes to money laundering and any type of financial crime, has been to some extent unfair, because even fiat currencies happen to be used for that. But the one advantage which I think criminals have been looking into in terms of tapping on the efficiency gains of cryptocurrencies is just the pace of transactions. That's one. And also secondly, there's a large portion of the regulatory environment that's still very much a gray zone. And additionally, you have a lot of service providers in the virtual space which are not licensed. So bringing all of this together, there has been some level of adoption by criminals. But then again, there's one thing that needs to be clarified. In most circumstances, service providers come to the market with clean hands, with the right intentions. And it's really money launderers and the culprits that really try to make use of, I should say, bona fide service providers.
Yes.
And then the end result is, just because of one or two bad apples, the rest of the ecosystem gets tainted.
Exactly. Now, my next question is addressed to Nasos. What misconceptions do you encounter most often about crypto and financial crime? For example, there is a myth that crypto is anonymous. Do you agree on that?
On the base of it, it is anonymous, but it's not really.
Pseudonymous, maybe. Maybe the word pseudonymous is more appropriate.
Exactly, that was my point. The word we should use is pseudonymous. It's but in my opinion, we first need to start from a decentralized kind of environment with a centralized kind of environment, and how we connect the two legally wise, but also AML wise. You cannot really regulate the decentralized environment. You can set, yes, some rules, but you cannot really regulate it.
I always say that you cannot regulate innovative technology with traditional regulations.
Bravo, exactly. I agree completely with that. The point that, especially us as a centralized exchange, we need to focus on is what comes in and what goes out. Okay? We have certain rules today, the MiCA regulation or the travel rule that forces us to follow certain regulation. The only problem I see with that is the global landscape. What if US regulates crypto in a different way than the EU? What if Australia regulates it differently? So that's where I believe we'll find some hurdles. But all in all, even if crypto is pseudonymous and the transactions are decentralized, I have some figures for you, by the way. I think it's easier to speak with figures and facts, especially on Bitcoin, because I split Bitcoin and the rest of the crypto market. On Bitcoin, 0.11 to 0.14% is basically of the transactions is used for illegal activity.
Very small percentage.
Very small compared to euro, because we always need to say if it's low compared to what. Let's say euro, it's over 1%, yeah, especially cash. So still, and I believe always, anti-money launderers and people who want to commit fraud will use physical assets always, not online assets.
Because they need to bring the money into the real world so they can benefit from that. So another question is, blockchain is often said to make tracing of funds easier. So what are some advantages and limitations that blockchain forensic tools really offer?
Question for me? Yeah. So there are tools, yes, like Chainalysis, AML. I mean, there are plenty, 6 or 7 in the market. That
science.
Exactly. The only problem with that is that I call them doctors. Yeah. What we need more is preventive measures. So how these tools work is that if they think you commit a crime, and when I say you commit a crime, we're talking about pseudonymous addresses. Yeah. If we think that this address is weird or it committed a crime, then we flag it. And then we all have access to those flagged addresses. So when, let's say, a wallet sends crypto to our platform, it's immediately flagged as high risk, and we disable the account immediately.
Or assigning it as high risk.
Yeah. But the problem here is that if somebody wants to commit a crime from an address that never committed a crime, you can never know about it. So I believe we need more measures with that. We are building some things for that as well, but I believe the market as a whole needs to understand that we need to be proactive. This is my opinion.
Okay. Now, Shad, what's your opinion on this, on cross-border and jurisdiction challenges of blockchain forensics?
What we've noticed is the pace with which mutual legal assistance works does take some amount of time. So if there's one thing that we've noticed is the way instruments that enable countries to collaborate with each other work, it requires, one, the preparation of a very complex document that's supported by evidence. So just that in itself will take a large amount of time. And then again, when the request is received by the recipient country, their authorities, they take some time to observe whether the legal conditions are met. And obviously there are levels of approval that run there. And at the same time, we're talking transactions that happen in seconds, if not milliseconds, where a lot of value is able to cross border. And with the hopping of value of cryptocurrencies, virtual assets that happens, and when you compare that with the pace with which countries have to run through their diplomatic process to be able to make investigations work, it makes it very difficult and next to impossible to be able to prevent, I would say, crimes happening. So I think the problem is more with the legislation and mechanisms in terms of having to cope with emerging technologies, as opposed to the technologies having to slow down to be able to cope with legal instruments.
Yes, exactly. And now a question to Michalis. You're a lawyer. How are courts treating crypto assets in fraud and money laundering cases? And in the eyes of courts, are crypto assets property?
Okay. Actually, I'll start with something that has been thrown around in the discussion. You said you cannot regulate new technologies with old regulations, something like that. Yeah, okay. You can't hear me, but I think that's more or less correct. It's interesting because in litigation, what we do is we reapply existing legal concepts to emerging technologies and we adjust them. And that is very interesting. And the courts have been called to do that. A small diversion, what I'm going to say draws a lot on the jurisdiction, on the case law of common law jurisdictions from England and Wales, but also from other common law jurisdictions such as the BVI, Australia, New Zealand. And the reason for this is because Cyprus, as a common law jurisdiction, can draw on these legal developments and apply them in our courts as well. So you asked me how courts deal with digital assets and cryptocurrencies, and specifically about property. And this is more of a, if I can use the term, gateway question, because the kind of property that the proprietariness that we attribute to crypto assets defines the kind of remedies, the kind of causes of action, and to an extent also the criminal liability of people who misuse these assets. So the short question is yes, they are treated as property. And this might sound as very obvious, or should have been very obvious, but it's not. And there is a very big discussion going on now about what kind of property crypto can be, and how we can define this. And it's not a philosophical or an academic discussion. It's a very much practical discussion, as I said, because it links to causes of actions and remedies. And there have, I mean, because I know we're pressured by time, I'll stop with one short example, and I'm sure we can pick it up later. So there was one very interesting case where they said, well, Bitcoin can be property, but the private key to access the coins is not property. So we should be very careful in how and what we define as property. So the digital assets per se, yes. I'll leave it there, and I'm sure I'll pick it up later.
Okay, so let's go now to licensing. Licensed crypto asset service providers often struggle with getting their license first and then getting access to banking services. Why and what are the risks for these institutions, Nasos?
I hope I heard the question right. You are talking about banking problems of CASPs?
Challenges of getting access to banking services in Cyprus.
Yeah, in Cyprus. That changes the answer.
Not only.
In Cyprus, it's very difficult, but we've seen a shift in the last few months. We've seen a shift. I cannot tell more at this stage, but we've seen a shift with this. I believe from 2026, Cyprus banking will embrace crypto. The point here, though, is that, again, the people who regulate crypto in Cyprus especially, we need to be very careful on what we actually accept. Let's not hide behind our finger, yes? I mean, we've built, not the last few years, but like a decade ago, we built a bad reputation with some things. And I don't want to see us doing the same mistakes again, but with crypto. So I'm a firm believer in Bitcoin, okay? That's what the first step needs to be, to actually accept Bitcoin in our everyday lives. That's the first step. And then we need slowly to see what else we can input into our culture as in Cyprus. Now going back to the banking part. It's very difficult because there are plenty of sectors inside the blockchain industry. And you cannot really know everything as a bank. Yeah? There are like 20, 30 different kind of sectors inside the blockchain space. The first thing is for us as CASPs and then MiCA licensed entities to get an account. That's the first step. I believe we will see that in 2026. And then our clients will also be able to accept crypto, turn it to euro, and then inside their bank accounts. If we're now talking about the rest of Europe, there are very friendly banks that we work with, both EMIs and normal banks. So I believe the future is bright, and all we need is better communication for the banking industry to actually understand how to do compliance on crypto and how to regulate it internally.
And mitigate the risks associated with crypto, because de-risking is not even encouraged by the FATF and other international organizations. And last question, how can regulators find the balance between oversight and enabling legitimate crypto activity? Naushad, would you like to provide your insights?
So how do regulators find the balance between oversight and some level of openness, shall we say? I think if there's obviously one thing is, well, for regulators, their concern will always be being able to intervene. And those powers are already there. I'm sure they're very much worried when it comes to their ability to be able to have a timely intervention. And on that part, it makes it a bit more difficult because in the virtual space, you don't have correspondent banks applying the brakes. If there's one thing that the regulators can do is imposing very strong, I would say, borderline onerous obligations on the service providers. And then comes the discussion of whether you're killing the industry and the sector. And I think this is exactly where we are. And we are at that stage where we are still trying to find that delicate balance. And on the other hand, I would say that a proper transaction monitoring system, one that allows direct access to regulators and authorities as opposed to having requests for information, triggering an inspection, triggering an investigation. This takes time. This requires a process. The thresholds are low, but internally the process takes time to be launched. So having an ecosystem which may potentially plug visibility or for the regulators might be something that allows for, I would say, a healthy and progressive growth for any virtual asset of choice.
Okay. So we have a few more minutes. I would like to ask, what do you see the future of crypto and regulation? What do you think about where are things heading to?
The future of Bitcoin, and not the rest of the crypto space, but for Bitcoin, I believe we will see many financial products built around it. Bitcoin will be the settlement network and layer of many of these financial products. As an example, we have plans to introduce Bitcoin-backed loans. The only problem with that is, again, for the regulators to understand how this works.
Awareness. I think there is a big room for improvement in terms of awareness on the part of the regulators and the banking industry.
Yeah. I believe the regulators, though, if we have any regulators here, just an advice from a receiver of the regulations, not to regulate with the mentality of just the fintech space 10 years ago, 15 years ago. Let's actually regulate the actual crypto space, not just bring old regulations into a new world. That's an advice from me. But in any case, coming back to your question, very briefly, I believe Bitcoin will be the settlement network, again, for financial products, but also for cross-border payments. I believe we will live in a future where you won't see or use or know that you are using the Bitcoin blockchain. You'll just use it to exchange, let's say, euro to Indian rupee. That's what I believe. And let's hope regulation can catch on, but not over-regulate always, but be actually
support innovation. So, Michalis, what are the legal obstacles or any other final comments that you would like to provide?
Well, in terms of legal obstacles, there has been a part of the discussion that you were talking about essentially tracing or finding, being able to identify certain routes of the transaction. And one of the greatest legal obstacles we see in terms of litigations is following the asset through different wallets. And one of perhaps the most difficult hurdle to overcome is when an asset enters into a common pool and then it exits into 1,000 different wallets. I think that area can be considered in a different way in order to enhance the trust and the ability of this really amazing innovation to fulfill its purpose.
Great. Naushad, also final thoughts?
I mean, I was going to say, because when I was working with the regulator, we've tried a few applications freezing of assets, and not every single one of them has been successful. So the entire process of seeking an appointment with a judge in chambers, which, by the way, is a sped-up process because it's in chambers, takes 2 to 3 days. I mean, 2 to 3 days, you're talking cryptocurrencies. There's probably been 1,000 rounds during 2 to 3 days of movements. And then again, you're going to have to, of course, ensure you have judges and authorities that understand the complexity of what needs to be frozen. There are legal thresholds that need to be applied when property is frozen, because you're literally impacting the civil rights of a particular person. And I think freezing of assets remains critical because it prevents the onward dissemination of the property, the cryptocurrency itself. So this remains a challenge for law enforcement agencies anyhow.
Great. So as far as I can see, we don't have time for questions, but feel free, if you have any questions, to ask the panelists right after the end of this panel. Thank you very much.
Thank you, guys.
Our next session is titled Liquidity is King, Trading Opportunities and Illusions in the Derivatives Market. We'll dive into the true nature of liquidity in derivatives trading, exploring both the real opportunities it offers and the pitfalls investors should watch out for. Moderating this discussion is Katharina Brunkhorst, CEO and co-founder of Secasa Technologies Limited. She's joined by two industry leaders, Stanislav Bublik, advisor to the board at Finery Markets, and Andrei Stoichev, CEO and managing partner of VS Capital. Please give a warm welcome to Katharina, Stanislav, and Andrei as they take the stage.
Okay, I think we can start even with the wrong headline of our panel. Oh, there it is. Yeah, welcome, and we are so happy that you're still here and watching our short panel about liquidity is king, trading opportunities and illusions in the derivatives market. As I'm joined today by two great panelists, I would quickly hand over for a short introduction about yourselves.
Hi everyone, nice to meet you, great to see you here, and thanks for joining in. My name is Stan, I'm the CPO of FinYard. We're running a software development across trading in CFDs and trading cryptos for crypto exchanges and CFD brokers.
Thank you for the intro. Thank you for the invitation. Happy to be here. Cyprus is one of my favorite places, so really happy to be here. Obviously, I'm running my own brokerage company, being in the industry 20 plus years already. So I'm looking forward for the new season and to discuss the liquidity topic now.
Great. Thanks for the short intros. Yes, liquidity is often called the lifeblood of markets. But as we've seen recently, it disappears sometimes when stress really hits. We saw it, for example, with the tariffs in April, when margin calls tripled within 1 week. So hedge funds had to post 1.5 billion more in collaterals. Or another example was just recently with major crypto sell-offs, where within 24 hours, 400,000 traders were liquidated. So what do we see? Liquidity is king, but only as long as it's there and it is not an illusion. So my first question, I mean, when is liquidity truly king? When is it an illusion, and for which signs to see or to search? For example, mirroring venues, shallow books, spoofing. I would hand over to Stan for this first question.
Thanks a lot. So actually, when we look at the liquidity profiling and how you set up the operation on the broker's end for that, first you need to understand what type of instrument, what is your risk appetite for this or that instrument or for this or that asset class, and depending on your risk appetite, you would choose a different strategies for addressing the liquidity. On the one hand, you can choose something where you can put more capital into, and in this sense, you would separate pricing and execution into different pools and approach it differently, while for some other instruments, you would just kind of face your LPs directly. And in this sense, it is critical to understand where the price discovery of the asset comes from, and aim to get pricing sources as close to this price discovery, or ideally from this price discovery venue. So, and the price discovery for cryptos happens in one place, for FX, depending on different pairs, happens on different places, and so it's a big job basically to figure out where is the center of the liquidity for this or that instrument, and source it from there, and then you kind of execute, and there's a separate story on the execution strategies.
Andre, what's your take on that? Thanks, Stanislav.
It's, I guess, all the time the main question. Which instrument and which market, how perform when there is more liquidity or less liquidity. Obviously, that's why we can see really big movements of some of the markets when the liquidity is not so great. For example, some holidays or some, periods where, main traders, market makers are off, let's say. So it's always about taking care for your risk, as Stan mentioned, and checking what's going on the market and adjust based on the liquidity which you are having or creating, depends of what you're doing exactly. And another important thing is that liquidity in general is not like on average on the general instruments, because for FX, liquidity is one thing. For indexes, let's say, it's totally different thing. Stocks is another thing, and crypto is something new and again totally different. Of course, people from the industry, brokerage companies, they need to take care based on their risk approach for all these different asset classes to adjust their offer based on the liquidity and based on the markets which they are and time zone where they are operating.
Yeah, you just spoke about different markets. Where would you see the biggest gap between apparent price discovery and real tradable liquidity?
Well, the better liquidity, the better the small difference between these two things, obviously. That's why still the liquidity in the crypto, for example, is way less than comparing with the Forex. So that's why it's from time to time traders are receiving slippage when you trade a big size of crypto, let's say, or others are just, for them it's hard to trade because the conditions are not so great, but the conditions are based on the liquidity itself. And on the other side, for example, for the Forex, you can trade practically on choice because the liquidity is so deep and good most of the time that even big ticket sizes can be absorbed easily. Of course, for the majors we are speaking now, but can be absorbed easily from the brokers or through the brokers to the prime of prime liquidity providers, etc., etc.
let me add some controversy here. There's always
Let's continue our conversation before the panel.
Yeah. So actually, I've been doing for quite a few years institutional effects, and for the recent years, in my previous jobs and with FinYard, we are kind of heavily rooted into crypto technology, crypto execution, and I would say that these days, unregulated crypto derivative exchanges, I think, provide much better price transparency and much better kind of understanding of the real liquidity compared to traditional FX ECNs and traditional FX institutional FX venues. And why that happens is that the market structure is different. I would, of course, tend to agree that in euro dollar you can execute pretty much any amount with a very efficient total transaction cost, but that is only for euro dollar, not for big range of other pairs. And if we look at the actually understanding where is the real liquidity, where is the real supply and demand, crypto exchanges these days provide a much better transparency, because pretty much all of them are based on central limit order books, and on FX we have like basically LMAX, that is a central limit order book to some extent, and you see the transparency of the order book, you see the trades transparency, and based on that you can very effectively determine the fair market mid at any moment in time with crypto, while it's not exactly the case with FX, which is a quote-driven market. And I think it's actually a kind of fundamental difference between those two markets.
Okay, so you say like crypto exchanges offer a way better and fairer price discovery than OTC FX?
I do believe yes. On the one hand, you have a central limit order book that is, constituted out of firm orders with no last look. On the other hand, you have quote-driven, market maker-driven markets, which on the one hand have good liquidity in certain instruments, but we've seen many cases with scandals in the FX market. We've seen last look practices that were discussed a lot and are now regulated by FX code, but still kind of you have to put an effort to understand the execution quality there, and basically the central limit order book doesn't have all those issues by design. I'm not saying it's great to execute in central limit order book, and it's not easy for market makers to market make in central limit order book, but central limit order books are amazing for price discovery.
Perfect. As we have today many brokers all around here, and some of them focus mainly on spreads and commission, what's of course totally understandable, but we always have to see if the trades can be really executed, if the quality is there behind. So Andrei, for what should brokers look for when searching for a good liquidity provider to have real, genuine liquidity and not only false ones?
Yes, this is the right question at the right moment, let's say. For sure, all the costs which are associated with a trade is obviously very important and super sensitive for the brokerage companies, because a lot of costs are around, technology, staff, offices, everything, sales, and on top of this, for liquidity also you are paying. So that's why any cent, any dollar make a big difference. But together with the cost you mentioned about the commission and spread, which is pretty much one thing, it's important to know the market depth of the liquidity which you are receiving, because if you have really tight spread, let's say, but you cannot execute even 1 Bitcoin on this spread, it's useless, let's say. So of course, you need to know also your flow, your clients, which can predict in a way, but not really, because you never know who will be your client tomorrow. But in general, negotiating the pricing, the spreads, the commission with your liquidity providers, it's important to negotiate also the top of book, to see the top of book, to discuss this, maybe to ask from your liquidity provider better top of book, or I don't know, maybe it's too much for you, maybe they can squeeze a little bit. It really depends of your case. So that's why a lot of liquidity providers, they have several pricing engines, let's say. Depends of the size of your company, depends of your flow, depends of your clients. They provide one way or another. So yeah, very important question, and the question which must be put from the very beginning of collaboration between you and your liquidity provider, because from time to time, after some time working together, you notice that things are not exactly what you were expecting, not because something is wrong in general with the execution with the liquidity provider, but just because of lack of communication.
Yes, thanks for the insights on that part. Stanislav, do you want to add something quickly?
Well, I would just echo to what was said, but I also want to add a couple of considerations that are not linked directly to the kind of actual liquidity profile of the LPs, but we shouldn't forget that, you know, most of the audience here we are kind of is trading non-fungible products like CFDs, and for such non-fungible products, you have to very carefully consider swap cost for the position rollover and the possibilities actually to kind of getting in and out of the position. So on the one hand, you have the kind of cost of total transaction cost. By the part of this transaction cost, you have quite significant cost of carry of the position, and that's kind of often omitted.
Thanks for the addition. Now let's take the last minutes of our panels to talk as well more about opportunities and not only about pitfalls, illusions, what to look out for. So maybe start with you, Stan. Looking ahead regarding tokenization, new execution models, where are the opportunities for the markets right now? What do you see as a major thing that will happen in the future? Maybe shifting from traditional venues to new venues to the tokenization. Where is the liquidity shift? Where are opportunities for the brokers especially?
Yeah, thanks for this question. Actually, since we are kind of working with two worlds, on the one hand, we are working with a kind of more traditional world on CFD and on the TradFi asset classes. On the other hand, we are kind of very, very well integrated in crypto and with all the technology in the crypto space. And I would say that the technology for supporting all the traditional assets based on chain, based with the margin engines that are used in crypto exchanges, you know, pretty much everything is already there. The only kind of limiting force for kind of launching the vast range of TradFi instruments on chain, launching perpetual contracts on them. The only stopping factor is regulation, because those assets are regulated under MiFID and other similar frameworks in other countries, and that requires effectively whitelisting of the holders' wallets, and that kind of defies the nature of the fungibility in crypto, how stable coins, for example, are acting, where you can freely transfer tokens within the system. So this is the main inability to freely transfer tokens on chain is the main limiting factor for tokenization. And as soon as either exchanges figure out a way to kind of pass on the needed information between themselves and tokenization providers, or regulation somehow adopts to the reality, I think we will have a massive shift of liquidity from the traditional exchanges like NASDAQ or whatever onto on-chain venues, because we already know, and it's already a known fact that crypto venues are huge retail hubs. More than out of the young population, more people hold crypto rather than holding stocks. And I think it would be just this one last step that is remaining to kind of fully move to 24/7 tokenized instruments, whether it's traditional financial assets or kind of non-financial assets. And it will be a very interesting world because it will be more fragmented, and it will be more opportunities for liquidity providers and more opportunities for traders.
Yes, thanks, Dan. And you see clearly the shift. And I hand over to Andre. You have the last minute now.
I know that we are running out of time, but question for opportunity is also a good question, a good final in a good conversation. So while regulation is coming for the crypto as well, and it's already happening, and already a lot of crypto providers already licensed. This is really good for putting more liquidity in the market. Never mind if we are discussing now crypto directly or maybe stocks as we are discussing now. All these participants who are one way or another participating in the forming the pricing, doing market making, or taking liquidity or providing liquidity, this will create more and more liquidity at the market, which will conceptually will improve the pricing, which will improve the execution, which will give better conditions to the retail clients, which will be happy and start trading more. Basically, this is the opportunity. We'll see how these things will develop, but this is the logic.
I think that was a perfect last statement. Thanks so much for your time today for this great panel discussion. I think we dive deep into the topic of liquidity, illusions, opportunities. So our time run out now, exactly. So yeah, thank you all so much for listening.
Thank you.
Next, we delve into the great rewiring, how AI, fintech, and crypto are reshaping macroeconomics and the global currency order. This session will shed light on the powerful impact of cutting-edge technologies on the global economy and the future of currency. We're honored to have with us Nikolaos Akizidis, a published author, keynote speaker, and strategic advisor in finance and AI. Please join me in warmly welcoming Nikolaos to the stage.
Hello to everyone. Good afternoon, and thank you for coming to this session. Okay, let's start. Financial world is changing faster than any of us can trade, invest, regulate, or build. And this is not about new apps, faster platforms, or bigger data sets. This is about the very structure of global finance that is being transformed. Yeah. I call this the great rewiring, because what we are witnessing isn't just a digital upgrade. It's a reset of finance itself. This rewiring is driven by three fundamental pillars: fintech, AI, crypto assets, which are not simply changing the game. They rewriting the game by redefining what an asset is, how capital moves, and who truly holds power. For traders, markets now move or liberate capital flows. For investors, new opportunities are emerging that didn't even exist 5 years ago. For regulators, risks evolve in real time, demanding constant adaptation. And for fintech professionals, they are writing the new rules of the financial system. For decades, the global economy itself rested on three pillars: predictable capital flows, currency stability, and institutional control. Historically, central banks and fiscal authorities have shaped economic cycles through adjustments in interest rates, monetary supply, and fiscal spending. Markets follow their lead. But today, this framework is breaking apart. For traders, markets no longer just respond, they front run. For investors, stable coins settle more daily transactions in some emerging markets than their domestic banking systems. For regulators, capital is moving while bypassing traditional intermediaries. And for fintech professionals, they are no longer just respond financial markets. They are rebuilding their foundation. Now, platforms decide how fast capital moves, how risks are absorbed, and how markets adapt in real time. These are not isolated disruptions. They signal a rewiring of the global economic operating system itself, shifting power from institutions to networks, and from predictable cycles to the real-time dynamics. Fintech is tearing down the old walls of finance, as capital is now allocated without going through traditional banks. For traders, this means new source of liquidity that don't come from exchanges or central banks. For investors, tokenized assets and decentralized platforms open direct access to opportunities once reserved for institutions. And for regulators, the challenge is to redefine supervision for a system that no longer follows national borders. For fintech professionals, they are not just disrupting the system, they are redesigning. So fintech is shifting financial economics itself from centralized capital formation and national banking systems to a global, decentralized, real-time financial ecosystem. Artificial intelligence has transformed economic forecasting into a real-time adaptive process. For traders, markets now move on AI-driven forecasts, not just official announcements. For investors, hedge funds run tens of thousands of AI scenarios, adjusting portfolios in real time. For regulators, AI enables institutions to stress test and model extreme scenarios with precision. And for fintech professionals, AI is the engine that translates forecasts, risks, and policy signals into real-time action. So, what is the result? With AI, markets and the economy are no longer simply descriptive. They have become predictive, dynamic, and more adaptable than ever before. Crypto assets, that's the elephant in the room. We call them speculative assets, hedge against inflation, programmable money. However, their impact is undeniable. We're witnessing okay. We're witnessing the rise of the parallel financial system. For traders, cryptocurrencies act as a decentralized store of value, full of volatility, but also opportunity. For investors, stable coins are no longer just theory. They are used daily as a hedge against currency volatility. For fintech professionals, DeFi protocols are issuing loans, paying yields, and moving capital, all without a single bank branch. For regulators, crypto assets provide what legacy finance often lack: open verification and programmable flexibility. So crypto assets are no longer just another asset class. They represent the blueprint of a new financial architecture. So, what does this leave us? It leaves us at a turning point, not just in technology, but in the very structure of finance. For traders, markets are faster, more predictive, and shaped by algorithms as much as fundamentals. For investors, portfolios now include digital assets, tokenized securities, and AI-driven strategies. And for fintech professionals, they are not building apps, they are building the rails of the new financial order. And finally, for regulators, they face the challenge of governing systems that evolve faster than laws can be written. So, this is no longer about financial innovation at the edge. This is about a fundamental shift at the core of finance. The great rewiring isn't coming. It's already here. And our responsibility is clear: to engage, innovate, and lead this transition with intelligence, ethics, and long-term vision. And some final thoughts. Speaking about fintech, remember all the time that fintech is about financial technology, which means that technology serves finance and not the other way around. Speaking about crypto assets, you should think and you should consider tokenized assets. And finally, speaking about AI, AI is not a tool. AI is an entity that brings order from chaos. But AI has no character, no ethics. You do. Thank you very much.
Our next session dives into investing in space, capital, risk, and long-term value. This panel will uncover the financial opportunities, challenges, and future potential of space investments. Leading the discussion is George Troulias, founder and director of Gideon Planetarium and Observatory. He is joined by expert panelists George Danos, President of the Cyprus Space Exploration Organization, Samuela Davidova, representative from Liberland, and Rina Faber, COO of Loonco. Please join me in welcoming them to the stage for our last roundtable.
One, two. And with you? Hello, everyone. So investing in space today is like investing in the internet in the early 1990s. High risk, yes. And with you? Oh, okay. Fuck. Sorry, guys. Okay, let's start again. So I mentioned earlier that investing in space today is like investing in the internet in the early 1990s. So there is a high risk, yes, we agree, but with the power to reshape economies, industries, and humanity's future. So good evening again from me. My name is George Trougias. I'm the director of the Gideon Planetarium Observatory in Cyprus since 2008. I'm the national coordinator for many international projects related to astronomy, science, and space exploration. And these projects relate to NASA, UNESCO, United Nations, and so on. Over the past 18 years, I have led teams into astronomy research, asteroid discoveries, and science outreach. And today I want to talk to you about why space is not just a dream, guys. It's real and compelling investment opportunity. In the corridors, they asked me if I'm related to crypto and so on earlier today, and I said, no, we're going to talk about investments in space. And they said, wow, how is this related to our subject? So our experts here, they will give you all the answers with me as well. So one of the main reasons is that the global space economy, guys, is projected to surpass $1 trillion by 2040. $1 trillion, with sectors ranging from satellite services, telecommunications, to asteroid mining, space tourism, and in-orbit infrastructure. Many of the technologies we take for granted, like, let's say, GPS navigation, weather forecasting, climate monitoring, and global internet connectivity, but we use them every day. Or these are technologies that they already depend on space investments. The opportunities are real, and they are already creating measurable returns. Of course, space is a frontier market, and like any emerging sector, it carries risk. But consider the reusable rockets and falling launch costs. All these, they are transforming the economies of space access. So partnerships between governments and private companies, our international organizations are mitigating uncertainties. Insurance models and collaborative missions, they make the market more predictable than ever. Risk exists, yes, we admit, but it is increasingly manageable. Now, the long-term value of investing in space is even more compelling. Beyond financial returns, space investments build the infrastructure for the future. Asteroid mining promises access to rare metals and critical resources. Space observation satellites provide actionable data to combat climate change and monitor biodiversity. These are not abstract possibilities, guys. They are foundations of a new economy, and early investors can shape it. Investment in education, and I have to admit that I agree with my friend here, Mr. George Danos. He mentioned earlier in his presentation that to start from the early stages, like education, science outreach, public awareness is really, really vital. As these areas, they lay the groundwork for inspiring and preparing the new generation of scientists and space explorers. We, at the Gideon Planetarium Observatory, witness this process every day. Children, students, and families walk through our doors, very curious about the universe, or they are driven maybe by their love and passion for science. With guidance and opportunities, and by engaging them in citizen science projects at the Gideon Astronomy Academy, they strengthen their knowledge and develop essential skills. Many of these young people have since advanced to international projects, contributing as astrophysicists, nuclear physicists, engineers, biologists, and other specialists in space-related sciences. Finally, investing in space is about legacy. Those who take the leap today will be remembered as visionaries, who expanded humanity's horizons, who translated curiosity into tangible impact. So the capital, the risks, and the long-term values are all intertwined, but they offer a very, very unique chance to be part of history. So I invite you all to look at space not as a distant dream, but as the next frontier for smart, impactful, and transformative investment. So those who invest wisely today in space won't just see returns. They will help to write the next chapter of human civilization. And hopefully we will be able here with our three panelists, our three people, guests on the panel, Mr. George Danos, President of the Cyprus Space Exploration Organization, our lady Samuela Davidova, representative of Liberland. I want to be a member of Liberland. I already talked with her earlier. I want to get this beautiful passport. And Ms. Rina Faber from Q and Lunco. So, welcome guys. Thank you for being with us today. So, space is no longer purely exploratory. It is an emerging market with tangible investment opportunities that rival other high-growth sectors. And my first question goes to all of you, because you all come from different backgrounds, and I want to listen to all your opinions. What do you see as the most promising sectors in space for early-stage investors over the next decade, let's say? Shall we start with the ladies? Oh, sorry, no offense, George. Ladies first. Rina?
Please.
Okay. Do you want me to repeat the question?
All right, thank you.
Okay.
Hello, everyone. You know, I don't have to be a Liberland representative because people love the idea so much that they represented themselves. Thank you, George, for the introduction.
You're welcome.
That's very warm. Happy to see you here. So I feel very proud. You know, maybe you ask why Liberland on the space panel in the first place. So we have our own space agency. We will be now delivering our flag to the first commercial mission on asteroid, which is quite cool. And I am glad that I am one of the people who initiated the space program, thanks to being entrusted by our president, who delivered you the keynote today, earlier. So yeah, we have a space program. The question related to the upcoming and most promising opportunities in the next decade. Well, I think that first of all, I would provide some context. So our perspective is that the market is currently moving from, before those were just the big governments, big countries having their own space program. And now you can see more super small countries having their own satellites, which is a question of, 2 years to actualize such a mission, to have their own satellite
pictures of their own territory, to progress the agriculture, and to have ownership of those satellite images. So this is one thing. Smaller governments are moving into the industry, and second, the market as well. Like as I mentioned, there are the first commercial missions, but this was not a question, say, 10, 15, 20 years ago. So this is what's happening now. I can imagine this only would accelerate. Why Liberland is interested into space? Because we have minimum government and, well, minimum governance on this planet. And it would be great to also provide some regulatory framework related to the space industry, which is outside of this planet. And you can see that it's actually very regulated, which limits people and, new players to enter the market. And I hope that we can contribute to that. So I can imagine that there will be, more private projects. But in the first place, I believe that now, at this stage, it will be serving more smaller governments and, governments in the first place, because still the budget is required and it's not a cheap thing. Yeah, that's my perspective. Rina?
Thank you. Rina? Tap. Change microphone, maybe? Yes. That one is for singing.
Yeah. Oh, maybe I should just... yeah, thanks. There you go. I want to support Samuela in her opinion on that. And I want to start with personal perspective that for years I've been wondering how I ever use my combined knowledge on astrophysics, remote sensing, planetary science, and space medicines combined. And it's occurred to me yesterday when I was preparing for this panel. That's exactly a moment. That's when you solving that mystery where it can be applied. So I want to say that the rise of space agencies, new national space agencies in the last decade, for now it's like more than 80 agencies in the world. And for last decade, it was like plus 17 agencies. And this global demand for space services is accelerating and making access to space not only just it's make more available, but it's also more attractive for investment. And answering the question, I just want to have some story that's some analogy that's space economy transformation that's we are witnessing today. I think we passed a bifurcation point when it was government demanded field and to right now it's commercial led. And this represents one of the most significant inflection point in modern history. And for analogy for this is U.S. railroad in the past century when it was the completion was in 1869. And it's opened American frontier for massive economic development, like SpaceX Starship doing this today. And that was, at the moment, last spike moment that breaks through that creates really new industries. As you know, American Express or Wells Fargo or General Mills, they were from central grain processing or freight businesses, and they are the leaders right now, still have more than the century later. And the point is, the main thing that I want to say that the most valuable investment may not be in the rockets themselves, not the railroads that are already built, but in the picks and shovels, the traffic management, the new platforms that are accelerating the whole industry.
Thank you. George?
So, I want to take you a little bit back into the past. We had the aviation industry. We had the big names of countries in the airlines. Let's name a few. Cyprus Airways, British Airways. But all these now are slowly becoming private, or actually not slowly, very fast, becoming private, including the big names. Cyprus Airways is private. British Airways, I believe, is private. And we've seen the sector having gone from completely controlled by governments into completely run by the private sector. The same is happening now with the space industry. We have the agencies. Why? Because space is very high risk. Space is very expensive, very costly. And the success rate isn't particularly high. We've seen lots of rockets exploding. We've seen lots of failures before we had success stories. So all this risk had to be taken by the governments. But now, which one is the company that comes first to your mind when you think space and commercial? I'm not going to name them because I'm not going to advertise anyone, but we all know who I'm speaking about. So, as the same is happening now to the space sector, don't think necessarily that space exploration means that you have to invest in building rockets or that you have to go and start mining asteroids. Yes, this has to be done, but if you're an investor who wants lower risk, lower investment, not in the billions, then think about what is happening right now in this country. If I was to say to you 10 years ago, can you consider Cyprus as a thriving destination for investments in space? You would say to me, I see Cyprus as a destination for going to swim or having parties in the summer. But that has changed now. You have now the first International Space Innovation Center of COSPAR. COSPAR is the space research organization, the global space research organization. And they selected this country not because we have the highest results in absolute value, but because for our size, the results we have brought are much bigger per capita than many other countries, if not the majority of the countries. So we got 8 global awards at the level of NASA, just in the last 10 years. So with this innovation center now, we are running the international organization's innovation competition globally, and we are supporting the ecosystem to go through what we call support, incubation, so that we can give to the investors entities that are prime and lower risk to invest. Examples? How about health? The human population is aging faster and faster. So, is there something we can learn from space? Indeed. Astronauts are being bombarded on a daily basis by radiation and other parameters that is ruining their health. So, utilizing today's trendy word, AI, our researchers from the Cyprus Institute of Neurology and Genetics, partners of the International Space Innovation Center, have brought solutions for the astronauts, but utilizing repurposed drugs, this can be applied to the human population today. So therefore, big pharma, is it something to invest in? New solutions to invest in? Lower risk? Indeed. And think also AI and the ability to have cheap microsatellites rotating around our planet. Already a company has got a constellation which is providing the internet from up there. But it's not just the internet. Imagine if you're bringing information absolutely necessary for the industry, having an eye up there that gives you information for insurance companies, for agriculture, for anything else. So are there solutions from space that are cheaper to invest in? Yes. And how do you do that? Well, simply, you have to be attached to those that are experts in the field, that are innovating, supporting innovation, and bringing to you ready results.
Thank you, George. From what you said, you actually mentioned diverse applications in space, like Samuela mentioned, and also Rina, she mentioned about technological advancements, especially in the smaller nations. And George also talked about the benefits, not only the long term, but the short term, that someone can invest with low risk. And since I'm looking at the time, I want to say that NASA claims, according to their knowledge, their experience, that for every dollar they invest in space, the return is more than $8, which means that you pay one, you get 8. The European Space Agency also claims something similar, and they say that the opportunity for opening new works multiplies by a factor of 2.1 and increases by 1.6 the GDP. And okay, maybe someone says that investing in, let's say, in space needs a long-term vision, but for sure we get immediate returns for the society. We have societal benefits very early. So you also mentioned the collaboration between the governments and some private companies in your saying. So that makes me jump to my fourth question. Let's say that collaboration between the governments and the private companies and international organizations is critical to mitigating risk and unlocking scalable opportunities. And my question is, how do you see public-private partnerships evolving to create more secure investment pathways in space? We only have 3 minutes, so if you can be brief, please. Do you want me to repeat the question? The question is, how do you see public and private partnerships evolving to create more secure investment pathways in space? George?
So, because we are already doing that, it's not a difficult question. We are working very closely with our government, and hand in hand, we recognize the fact that the government is regulating, the government is supporting, the government is incentivizing and providing the necessary fertile ground to do that. And all we have to do as science, entrepreneurs, investors, is simply to come in on this fertile ground and work to bring the solutions. It's impossible to expand further because we have only 1 minute, so I'm going to stay just to this.
Thank you, George. Our ladies?
Okay. Yeah, it makes sense that these things are already happening, and we already provided some more context into that. I believe that the government, the best way to support my perspective is to create clear, sort of rules, but not to interfere too much. I believe that any kind of industry, be it space, be it AI, be it blockchain, what will really help is is more creation, thanks to more cash flow, more investments. Yes, there will be falls, but only thanks to that, they will crystallize some great new projects. So initiate more, deliver more. I believe that would help. And if the government will not obstruct by increased regulation, which only limits new people, new companies starting, so that would be great.
Okay, and my takeaway will be that by 2030, I think successful space companies will have deep government partnerships that provide stable revenue while building the capabilities that scale the space sector. Because we actually see this shift right now. Like for Artemis mission, now it's more than 55 countries provides regulatory clarity and market access. NASA CLIPS and SBIR initiatives, they are all collaborative. Also, our initiative at Lunar Company, we are building open source collaborative space mission design platform for collaborative space missions design. So that's the place where you can actually make it decentralized for the purpose of accelerating the space industry. And when you invest in these highly risk endeavors, it's with time you can have this perspective on how it will transform the whole industry.
Okay, thank you very much. We're running out of time. We prepared 5 questions. We answered only 2. If I may proceed with one last question, we have a very short answer out of respect to our panel because they prepared for that. My last question is, asteroid mining, space-based solar power, and satellite infrastructure are not science fiction. They represent near-future industries with real return on investment potential. For the investors, I want your personal opinion. For the investors new to space, what are the most critical metrics or indicators to evaluate before committing capital? This is my last question, and I want a very short advice from you for the future investors. Yes, please.
Look at the financial model.
Okay.
I think that it's not where to invest. The market will arise and it will be really big. And the thing that you need to look is the ecosystems, the platform that are making space more accessible.
Thank you, Rina. And George?
Well, I would say if you're an investor who doesn't want risk, you will go for something which is proven, something that has got heritage. But if you want to risk and have a bigger return, then I will sing our own praises. You have to go to a body that has been curating entities and then gives you, yes, higher risk, but higher return and vouch for. That's what I have to say.
Thank you very much, guys. To summarize, it seems that it's a good opportunity for everyone to invest in space. If you need further, we can prove it privately, if you need further confirmation. So thank you for being with us. Thank you, panel. Thank you very much.
Ladies and gentlemen, as we bring ourselves to the end of the speeches and the discussions, we'd like to extend our sincere gratitude to everyone who contributed to this extraordinary day.
Thank you to our moderators, panelists, speakers, and of course, all of you, our attendees, for the incredible energy, thoughtful engagement, and a meaningful discussion that made WikiFinance Expo Cyprus 2025 a resounding success. And while the knowledge shared here has been invaluable, we're not done yet, because now it is time to recognize excellence.
We are proud to introduce the WikiFX Award Presentation Ceremony, a prestigious event dedicated to celebrating exceptional companies in the financial services, forex, fintech, and digital asset space. We celebrate companies that have stood out in a competitive, ever-evolving landscape. We celebrate leaders who have redefined what it means to lead with ethics, vision, and impact.
To present these awards, we are honored to welcome Mr. Chris, the Chief Growth Officer of WikiFX, on stage to be our award presenter. Welcome.
So let's get started. Our first award of the evening is for a company that has made a monumental impact with groundbreaking technology.
And the award for Best Technology Provider goes to X Valleys Technologies. Receiving the award is Mr. Andreas Livadiotis. Big congratulations to X Valley Technologies. Thank you very much.
Thank you. Now, let's keep the momentum going. The next award celebrates a company that's making waves in the international trading scene. The best international financial market trading platform, Cyprus.
And the winner is, just want to see it coming up, Goldfire Markets. A round of applause to help the representatives of Goldfire Markets to come up.
Mm-hmm. Congratulations, Goldfire Markets, and thank you to Mr. Chris.
Next up, we have an award for a company that's taking the world of digital currency by storm. It's time for the Best Cryptocurrency Exchange Award.
And the winner is the platform that has earned the trust of traders everywhere, Insta Exchange. Let's give Insta Exchange a big round of applause. Please come to the stage and accept your award.
Congratulations to Insta Exchange.
'Cause you're a sky, 'cause you're a sky. Congratulations. Let's move on to a company that's been absolutely killing it in the Forex world with next level tech and innovation. Best Forex Technology Innovation Broker, Cyprus.
And the award goes to Great Golden Brilliant Limited. A round of applause for Great Golden Brilliant Limited.
Congratulations.
Congratulations. Now, let's switch gears a bit and recognize a company that has provided the best Forex trading platform in Cyprus.
And the award goes to Power Trading. Let's bring Power Trading up to the stage to accept their award. We can't wait to see them shine tonight.
Congratulations, Power Trading.
Up next, we have an award for a company that has truly excelled in corporate and trust services. Best Corporate and Trust Service Provider.
And the winner is Archipel Corporate Services Limited. A huge congratulations. Please come forward and accept your award. Thank you very much. Next up, we have a truly exciting category. We're recognizing the most recommended broker in Europe, the one that stands out for its outstanding reputation.
And the winner is the company that has earned the highest level of trust and recommendation from their clients, IEXS. IEXS, come up to the stage and take a bow as you collect your award.
Big congratulations to IEXS. Right, we're just getting started. The Best Financial CRM Provider Award is next, recognizing the best in customer relationship management tools that make a real impact on the financial industry. And the winner is Dynamic Works Syntellicore.
Congratulations.
Let's welcome Dynamic Works Syntellicore to the stage. A huge round of applause. Congratulations again. And now it's time for the Best Forex Trading Experience Cyprus Award. This award goes to the company that has provided Forex traders in Cyprus with the most seamless and enjoyable trading experience.
The winner of this award is Rio Market. Let's bring up Rio Market to the stage and give them a big round of applause, please. Congratulations.
Congratulations. Now let's start with an award that celebrates the best Forex broker in Europe.
And the winner of this prestigious award is IC Markets. Please put your hands together for IC Markets. Congratulations.
Big congratulations to IC Markets. You've earned this one.
All right, the next award is for a company that has truly excelled in corporate services. It's time to recognize the best corporate service provider.
And the award goes to Premier Financial Services. Let's give a big round of applause to Premier Financial Services.
Congratulations.
Next up, we have an award that recognizes a company excelling in the rapidly evolving world of fintech and the best fintech broker Cyprus.
And the winner is Peliron. Let's make some noise for Peliron. Please come to the stage.
Congratulations.
Congratulations. The next award is for a company that has played a crucial role as a best Forex industry partner.
And the winner is ZoviPay. Is there a representative of ZoviPay here to receive the award?
Congratulations to ZoviPay.
The next award goes to the most trusted Forex broker in Cyprus. This is a huge one. So trust is everything, because trust is everything in this industry.
And the winner is LTG Gold Rock. Please join us on stage, LTG Gold Rock. Please claim your well-deserved recognition. Now, let's talk about a company that's making serious waves in the cross-border payment space. Get ready for the Global Cross-Border Payment Innovation Pioneer Award 2025.
And the winner is the Kingdom Bank Corporation.
Congratulations, Kingdom Bank Corporation.
Now, the next award is for the most innovative EU tech agency. We're talking about the Digital Excellent Catalyst Award 2025.
And the award goes to Mount Birch OU. Let's give a big hand to Mount Birch OU. Please come on stage and accept your well-deserved recognition.
Congratulations once again.
Next up, the most recommended broker in Cyprus. This award goes to the company that has earned the trust and recommendation of their clients like no other.
And the winner is Primetime Global Markets.
Massive congratulations to PGM.
We're nearing the end, but we still have some incredible awards ahead. Now let's move to the best Forex trading experience in Europe.
And the winner is Bate. Let's welcome Bate to the stage to accept their award.
Congratulations to Bate.
Congratulations. All right, we're almost there. Next up, the Best Forex Trade Execution Award in Cyprus. This one's all about precision and speed.
And the winner is Star Trader. Congratulations, Star Trader.
Congrats. All right, ladies and gentlemen, don't go anywhere just yet.
Because we've saved something special for the grand finale.
That's right. The final award of today's incredible celebration goes to a true innovator.
A company that's blending tech and finance with style, precision, and impact. The title?
Best